Good morning, everybody, and welcome to Traders Corner's January Special Investors Summit. With a presidential election, the escalating Israel-Hamas conflict, and high interest rates and inflation, 2024 promises to create some great trading opportunities. On our panel today, we've handpicked 7 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. Today's show is packed with great information and special discounted offers, so let's get started. Our first presenter is a professional futures and equities trader with 20 plus years of trading experience in stocks and futures. She spent over a decade working in investment banking prior to becoming a full-time trader. She's the founder and CEO of TradeOutLoud.com, an international trading education and service company. She's an expert day trader, swing trader, and active investor with a precise approach to daily income style trading and wealth generation trading, consistently delivering results in any market environment. Here to present, accelerate your cash flow, build wealth, and secure your future swing trading while working full time is Anka Metcalf of Trade Out Loud. Welcome back to Traders Corner, Anka.
Thank you so much for the introduction and ready to rock and roll here, guys. We're going to have a really dynamic year. We're going to have a lot of volatility, and that means a lot of opportunity for us traders. So today we're going to be talking about how we can accelerate our cash flow, build wealth, and secure our future swing trading while working full time. I do have a lot of members into my services, into the stock swing trader that are literally working full time, and they're delivering full time results. So part-time working, full-time results. So let's get started. All right, before we continue, I'm pretty sure everybody here knows that trading is very risky, and all of the information that is going to be provided by us by Trade Out Loud is going to be for educational purpose only. If you guys want to get a hold of us and you guys want to know what we offer and what we do and how long we have been in business, just visit tradeoutloud.com. You could also visit our social media channels. You could visit us on X. It is Trade Out Loud, so pretty much the handle is Trade Out Loud. On Facebook, we have 2. We have Trade Out Loud and myself, Anka Metcalf. That is my personal account. You're very welcome to hop on there as well. We have a YouTube channel and also LinkedIn. If you guys have any questions about today's presentation or any question in general about the stock market or the futures market, feel free to email us at info@tradeoutloud.com. My team and myself will be able to deliver the results that you're looking for. So here's today's agenda. We're going to be looking on how to start making your money work for you. How many times have you, pretty much wondered, can I make money while I'm sleeping, right? Can I make money while I'm doing something else? Can I make money while I'm full-time working? And the answer is yes, you can make your money work for you. We're also going to be discussing the best trades and setups for explosive gains. We're going to be looking at time frames that deliver the best results. We're going to be looking at trade selection criteria. So how do you select a winning trade? Now, keep in mind, not all trades are winning trades. You're still going to have losses along the way, but the most important thing is to minimize your losses and maximize your gains. So what I'm trying to say is that, yes, we're going to have those home run trades. You're going to have smaller gains. You're going to have break-even trades, and there's nothing wrong with that. And you're going to have stop losses, right? It's part of the plan, but the losses need to be super, super small. And then we're going to close here with how to spot mega opportunities, even in the worst market environment. Because if you're looking at the market today, you're going like, oh, that is like really crappy environment, especially for day trading, but for swing trading as well. It's never a good idea to initiate trades into an FOMC rate decision. All right, so if you're currently working in a cubicle, right, think about this. There's way more to life than that little cubicle right there, than that chair, that L-shaped desk, those monitors. There's life outside of that cubicle, and you want to make sure that you take advantage of your full potential while you can to get outside of this cubicle. Self-directed trading and investing is all about taking control of your financial future, managing your own money, because nobody's going to do it better than you do, and that is how you make your money work for you. look, you don't have to have a gigantic account to start trading. You could actually start investing with $50. You could start swing trading with $2,000. It is possible, and we're going to show you today how you can get started. So swing trading is basically generating cash flows, generating income. It's generating supplemental income. So more income, that means wealth, that growing your wealth. Why? Because you need the income, whether you have a full-time job and you want to keep your full-time job. There are a lot of professionals that are keeping their full-time jobs. We have a lot of doctors in our program, for example, for day trading and even for swing trading. They love what they're doing, but they want to increase their wealth. They want to increase their income through trading. And it is possible because at the end of the day, you need that income. You need to generate that income to pay your bills out, to buy some food, to pay your mortgage, to pay off your credit cards, or just to make a payment on your credit cards, whatever it is. But when you have that extra cash, and make sure that you get into the habit of creating that extra cash, that goes towards your wealth, that goes towards your swing trading account, that goes towards your investing account. And what I truly recommend is that when you decide to swing trade or to invest, do it in separate accounts. Don't do it all in the same account, because swing trading has a little bit shorter time frame, while investing, you're looking at much broader time frame, a wider time frame. And when you're swing trading, you're going to put on your more active trader hat, and you're going to be tempted to micromanage any kind of long-term position that you may have into that account. So number one, you don't need to be a math whiz in order to be a successful trader. Minimum math, probably a 4th grade math is required for you to actually start trading. That is like adding, subtracting, and that's pretty much it. Because you need to know the difference between the entry and the stops, and that difference is going to represent your risk, and through that risk, you need to position size. That's all the math that you need. You don't need to have a degree in finance. You don't need any sophisticated degrees. Think about this. There are a lot of hedge funds on Wall Street that fell below the benchmark, and we're going to talk about some of these hedge funds today. Why? Because don't think that they're smarter. Just because they work at a hedge fund, that doesn't mean that they're smarter than you are. Yes, this you right here that is listening to this. You probably at some point know more than what they do. And I'm not kidding you. The other thing is that you don't need to know fundamentals, right? Do I really care about news or interpreting news releases? So for example, today we had some ADP numbers coming out. Yesterday we had some other numbers coming out. Do you really think that I care what those numbers are as a trader? I don't. What I truly care about is the reaction that those numbers are producing into the market. I don't care about anything else. I don't care what the previous number is. I don't care what the forecast number is, and I don't care at the time of the release what numbers are coming out, because everything is going to be reflected on the technical chart. I don't need to clutter my brain, and I don't need to start micro analyzing things that I cannot control. For example, yesterday we had, and even today, there were some good news, but that good news was interpreted as literally bad news because the market started pulling back. But the reality is, why is the market pulling back? Is it because it's FOMC? Is it because it's overextended on the technical side and it hit some extension resistance? Or is it because of news, because the forecast number, the numbers that actually came out were below the forecast number, but yet better than the previous numbers? So like, this is all crazy. Just watch, try to eliminate all the noise and watch what is in front of you, and trade actually what is in front of you. So did you guys know that every year stocks will move about 20 to 30%, maybe more each year? Isn't it crazy? Now, do you guys know the average return of a hedge fund? I mean, that's crazy. The average return of a hedge fund is about 8 to 10%. This is really sad, right? 8 to 10%. And this happens at least a couple of times per year. It happens in cycles. Now we had a really dynamic, we had kind of like a shaky start to the year, but we had a very dynamic push to the upside. We're going to share some charts with you today. So we are on our way up. There are some stocks that actually generated 15%, 7%, 20%. Take a look at Netflix, by the way. Netflix is double-digit percentage up, right? All right, so let's take a look at this. This is a chart of Apple. This is from January to July in 2023, last year, right? So think about this. This is your new canvas. This is your new opportunity to dive into the market, right? Apple went up close to 60%, and this is a daily chart from January all the way to July. Look at this power trend that has developed. Here's the chart of the Qs, and this is the trade that I initiated on January 8th, 2024. Take a look at this percentage gain, 7.5%. Now it's in a pullback, we're out. But take a look at this percentage gain, 7.6% in 1 month. Literally in 1 month. This is the result of hedge funds. If you would have your money with hedge funds, basically you don't really know what positions you're in. Secondly, you don't even know how the market works, right? And third, you're going to be missing on opportunities like this. Nobody's going to manage your money better than you are. Remember, they're focused on the broader spectrum market. They're looking for different criteria in the market than, you know, an active trader would, right? So you can take advantage of these moves. And by the way, this is one of my favorite setups with the pullback and rotation that is happening right here. And this is actually into the second week in January. This is again Apple. This is the weekly chart. And look at this formation. The reason why I have this chart here is to show you what you need to be looking for. I use very simple metrics on my technical charts. I use the 50 simple moving average, which is the green line right here, and I use the 20 simple moving average. In an ongoing trend, and especially I like to read trends on monthly charts, weekly charts, I like to look for opportunities. That is where you're going to identify one of the best opportunities that you can literally have. It's going to let you stay in the trade longer. You're going to have solid stops. You're not going to have as many stop outs as you would usually have on a smaller time frame, such as the daily. So it offers you a wealth of opportunity. My favorite setup is a 3-bar down into the 20 SMA, preferably if I have a doji, and the rotation is going to have to take this bar high, right? Now let's take a look at Apple. By the way, this is a setup. Whoops, sorry about that. This is a setup that happened last year. You can see it right here. It's 2023, and it is literally into going into the fourth quarter, right? So it was trading at $178. Take a look at where the price action zipped up to. $188, and this is a chart that I took yesterday, snapshot that I took yesterday. It's trading at $178. So look at the expansion. So it went from this little setup right here, from 178 to oops, sorry about that, to 188. So $10 up. Okay. So money managers and hedge funds live mostly off commissions and fees. You're just an account number to them. Do you think they really care about your wealth? Do you really care when you want to retire? No, you're just an account number. They see you as an extra fee into their system. So whether the stock or fund performs or whether they don't perform, they get paid. So for example, there's a hedge fund. I forgot the name of it. I was reading this article, a few days ago, and this hedge fund just fired 2 or 3 of their portfolio managers because they were down 30% last year. Like, what? 30% last year. And last year we had a massive bullish market. They bet on the wrong stocks. So don't think that just because you're a beginner trader, you cannot outperform even these hedge funds. Just imagine if you had your money with them, okay? So Barclay had reported that over the past 5 years, the average hedge fund in its universe produced a net annualized return of 7.2% with a Sharpe ratio of 0.86 and market correlation of 0.90. That's really bad. That's really bad. That's really bad when retail traders can actually, if you put in the effort, learn how it's done, and actually do it and stick to it. Because in trading, you've got to practice all the time. It's just like, it's just like when you're playing sports. If just like Tiger Woods, like you need constant coaching, you need constant training. Like he's probably golfing every single day, right? Even on weekends. You need to do the same thing. Look at the charts every single day, even weekends. It becomes a lifestyle. And trust me, when you're starting pulling money out of the market, you're addicted. You become addicted to the market. Take a look at this. New reports find almost 80% of active fund managers are falling behind the major indices. This was an article on CNBC that came out in October. Guess what they did? Right after this, guess what they started doing? They started buying, right? So they started buying, and they started buying with both hands. That's why you saw the rally as we were going into the Santa rally and into the end of the year. And then, the pullback, they were taking some profit. Take a look at Costco. This is a stock. It's now it's trading like over $700. This is a stock that outperformed anything. Right? So take a look at it. This is a great stock to have in your portfolio. Try building a position into it, into your investment portfolio. This is a monthly chart. Now, from January of last year until November, just November of last year, so in this segment, went up 26%. Oops, 26%. Like literally, if you're looking at Costco right now, take a look where Costco is. All right, let's look at the monthly chart. $700, right? It had a high of $704. This is insane, right? This is insane. And this is just one stock alone. And I'm not saying that you should invest just in one stock. Have a pool of stocks. Be a little bit diversified, but trade something that the crowd loves, and trade something that is in sync with you, and trade something that you understand. So for example, Warren Buffett likes to invest in Coca-Cola. You're never going to see me invest in Coca-Cola because I don't drink Coca-Cola. I don't like Coca-Cola. I don't like the taste. But I like to shop at Costco. So therefore, I'm buying Costco shares, right? I'm using an Apple phone. I have all the Apple products possible. So I love Apple. I believe in Apple. I love their products. I love to use them. And therefore, I'm an Apple investor. I always take a look at trading opportunities in Apple, whether it's on the day trading side, on the swing trading side, or on the investing side. Okay. All right. And here, last year we had a pretty huge seminar of evaluation of where there was really some great potential lining up. And look at the price action condensation here. It was trading at $569, and there was this Christmas light effect, the green, the red, the green, the red, the green, the red, and it presented itself with huge opportunity for the upside. And this is where I alerted my traders, buy, just buy with both hands, because this is about to explode, right? And we had targets here into 700. You can see it right here, 738. It's trading over 700. It had a high of 704. Okay, here's Costco right now. Take a look at it, over 700. Now let's take a look at Amazon. And again, I like Amazon. I have an Amazon subscription. I always look at Prime movies. I look at, I buy from Amazon a lot. Okay, so I believe in Amazon stock. So from January to September of last year, Amazon went up 70%. That's right, double digits, 70%. So whether you're swing trading or whether you're investing or day trading, go with where the crowd is going and where you feel comfortable. You shop at Target, look at Target stock. You shop at, I don't know, TJ Maxx, look at TJ Maxx stock. So swing trading is basically not as complicated as day trading. In day trading, day trading is very tedious. I do a lot of day trading for my income, and I do have my income trades for that. But swing trading, I have to admit, is a lot easier than day trading. First of all, you're unchaining yourself from the computer. You don't have to be here. So the time I allocate for swing trading is basically about 5 to 10 minutes every single day, where I scan a little bit. And then if there is a new position, I watch for sector rotations. I look for opportunities. I look for volume increases in different names. So I have different criteria that I'm going to share with you today to make it super simple when you select your stocks. And it's literally the one style that is easier if you have a full-time job. It's easier if you have a part-time job. It's easier if you have a full-time job, or if you really don't have time and you don't really want to commit a lot of time sitting in front of the computer. But you need to know, and of course, respect the rules of the game. You need to be patient and wait for the setup. A lot of traders are saying, hey, you know what? I don't have patience. I just jumped in. You jump in when you're an investor. You can jump in at any price because you're going to average the price out. When you're on the investing side, you don't use stops. When I'm into the swing side, I use stops. So you got to be a little bit more careful. It's not about the trade as much, but it's about the risk and the management. This is what kills most of the traders. They allocate too much risk, or they don't know how to position size. They don't know how to use the risk into their advantage. The reality is that the norm says that you should not be risking more than 1 to 3% per trade. And they're right. Because if you allocate more than that, your risk exposure is going to be higher. And if you're going to encounter a down streak, so a series of stop losses, that can literally blow up your account. And that is the only thing that blows up your account. So basically, what I'm trying to say is that if you're a beginner trader and allocate 1% per trade, you're going to have a really long life into the market, and you're going to be able to come out of that losing streak with flying colors. It's all about management. It's all about risk. So why is it important to get started? Because the money literally that is sitting in our bank accounts, the money that we have basically is losing its value due to inflation, right? It's like burning. It's burning every single day. So what you want to do is actually create more money, make more money, so you could actually, build your wealth, create your own ecosystem. I have my own ecosystem created. Nobody taught me how to do this. I figured it out myself. So I had my long-term money working for me like many years ago. And when I decided to go into day trading, then I took part of that money out. Of course, you have to have an emergency fund. So I had an emergency fund, right, for at least 6 months. So what you need to do is, and what I did is I got started day trading, right? Because I wanted to literally, and what I did is I gave up my job. So I gave up my job to get into day trading. So I had my emergency fund. So I needed to make day trading work for me. So I wasn't able to do that unless I respected my risk size. And that is how I created my first wealth ecosystem, my income ecosystem. So first I started day trading. I produced more than I needed for my income. So therefore I literally put more money into my swing trading. I put more money into my investing accounts. And I started becoming more aggressive into swing trading. I started allocating more and more into my investing account. And this is my wealth system. So swing trading and investing is for traders that have very busy lifestyles and want to manage their own long-term money or trading accounts, retail accounts on their own. It is for part-time traders that literally do not want to sit in front of the computer all day. It's literally great for building wealth and having your long-term money increase and increase, right? All you need is less than about 10 minutes a day. Because what you need to do is look at the positions that you have and have them on charts, on market minders. And what I do is, because I don't even want to do that work, I have alerts on every single level. So I just look once and I put alerts on different levels, different target levels, different support levels, one of the level where I'm break even at, right? So I know when I'm getting the alert, I know where that chart is. So basically, this is a style where you can literally work from home. And what I do is I always tell my traders, this is the style of trading. You could actually trade from the beach, trade while you're shopping at Costco. When you're getting an alert, you can get out of position, or you can add more to your position, depending on the environment, right? And this is how you make your money work for you. So how do you get started? Step number one is to open an account. You could choose the platform of your liking. You can either use Robinhood or Webull or Schwab or Interactive Brokers or TradeStation or Fidelity. It's your choice. Step number two is to determine your risk size. What is the risk size that you're going to be allocating per trade, so you know how to position size. So when you are in a losing streak, that's not going to literally destroy your account. Step number three is establish your game plan. So establish, for example, not only your trading plan, but the pool of stocks that you're going to be trading based on what you like. And of course, we're going to get more into detail here, because I'm going to be sharing with you some very small details that are going to have a really big impact on what you need to be trading every single day. So the trading plan should include the technicals for that specific trade. So now that you have the stock, for example, that you like, that you believe in, now it's time to start analyzing it. And you analyze, you do a macro analysis, you do a top-down analysis from higher time frame to the smaller time frame, identify the pattern, whether it is on the daily chart or the weekly chart, or on the monthly chart, determine in which account you want to take it, whether it's going to be a swing trade, whether it's going to be an investing trade, and determine the parameters. What is my entry? What is my stop? What is my target or targets, right? You always have to establish certain targets, and you have to establish more than 2 to 3 targets. Why? Well, because if you establish only one target and you go like, oh yeah, that's my target, boom, hit, I'm out. And then you see it fly for another, I don't know, 7% up. Doesn't that make you feel bad? Of course it does. So learn a trailing system. That's why management and risk management are the most important, crucial elements. And this is how we start our courses into investing and into swing trading, is we teach traders how to manage the money first. And then we're getting into technicals. And step number 4 is create your trading universe. You can create a trading universe just by looking at 10 stocks or 50 stocks, depending on your liking. If you're just getting started, don't overwhelm yourself. And just create a trading universe, let's say of 10 stocks, right? 10 stocks that resonate with you. But careful, because these stocks need to be really high volume stocks. You want to have a lot of participation in these stocks. Step number 5 is create the strategy. Don't trade against the trend, okay? Trading against the trend, it's possible at times, but for very short duration. And when you're trading against the trend, you don't have guarantee. You don't have any guarantees in terms of follow through, and you could have a lot of surprises. Take a look at Tesla, for example. It did a little short squeeze, and then today it turned around, and then it's kind of like meandering back and forth. It's not really letting go, right? So that would be a counter trend trade. Trade something that is with the trend. Find power players and scan through them, right? Scan for these power players. Now, well, first of all, when I first started trading, there were no scanners, so I had to do it manually. I still do it manually to this day. But I do have scanners that I use. I use actually 2 scanners right now to identify for my trades. And these are, I call them my assistants, right? And they pop trading ideas for me. But that doesn't mean that if the scanner pops up a trading idea that I'm going to take it right away. I'm still analyzing it, because we have the advantage of being actually better than algorithms. Why are algorithms winning all the time? They're not winning all the time. When algorithms are set, they're set for certain criteria. To buy, here's the stop, because they use stops, and here are the targets. So they go like boom, 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 action. But when the market environment changes, you're going to see a lot of fluctuation even in these algos. They still have a lot of losses. In fact, the win ratio for algos is only a 40 to 45%. That's right, and they still make money. They make a lot of money. Why? Because they respect the trade plan, they respect the size, and they respect the management. That's the only thing. And retail traders, some of them don't have actually, let's say, a 50% or a 60% win ratio, and they still lose money or they break even. Okay? It's all about in the risk, and it's all about in the management. So trade counter trends for bounces, like I gave you the example of Tesla, right? We did it in the trading room as well, in my futures trading room. It was like watching paint trade this week. So we looked at stocks as well. but it requires a more active management. So you got to be very careful with that. These are kind of like one-day wonders. Like you take them more of a day trade, kind of like, and see if how it closes. If it closes strong, yeah, keep it into the second day. But the second day, trail it a little tighter. Okay. So first of all, let's talk about the sweet spot in swing trading or even investing. So swing trading is the sweet spot between day trading and position trading. So this is something that is in the middle, right? It's not as aggressive as day trading, so you don't have to put, you don't have to deal with algorithms, and you really don't have to wait decades to, get your money out of your account. It generates high probability trades and it offers the best chances for success. Then that's why traders like to adopt this style. Swing trading positions will be held for 2 days, will be held from 2 days to a couple of weeks, depending on the market. If you're having a sideways market, for example, out of a sideways market, 2015 to 2016, there was like almost a year and a half of a sideways market. So you were literally stuck. The release, the continuation of the pattern came in 2016, came in March and then in November. That's it. So you have to have a lot of patience. Sometimes the market goes through this, and you need to understand. It focuses on wider time frames, such as the daily charts and the weekly charts, and everything is based on technicals, just like it is into day trading. Swing trading it's not about capturing the entire trend, not capturing the very bottom or the very high. It's basically the core. It's pretty much like this. You're never gonna nail like the very bottom, and you're never gonna nail the very top. You gotta trade the rhythm. So swing trading is a simple strategy where you enter the trade when the price breaks above a pullback reversal pattern or breaks above a range, also known as a buy setup, right? Or a rotation. If you know what a rotation is, it's, for example, you're having 1, 2, 3, 4 bars down, and all of a sudden you're having a green bar that takes out the prior red bar high. That is a rotation, that is a buy setup. And it's key to know when you have these kind of confirmations, because these are the type of confirmations that you need to have when you're swing trading. Take a look at Marathon Oil. This is a trade that we're in currently. Look at this massive breakout that we have right now. This is another example. So it's not only a buy setup, this is a breakout. Here is another breakout. Netflix, these are 2 trades that we're in. So this is a breakout. You can see here that the price action 1, 2, 3, 4, and the 5th day exploded higher. It was on earnings. This is Alphabet right here. This is Google. This is also a trade that we got in. You can see the entry area. We got it at 138 and currently over 11% into these highs. So how to select these winning trades? How do you get those trades that we're in, like Netflix and Google, that we made massive profits in? So it takes a proven strategy to select high odds trades, because there's one thing to select a trade and another thing to select a high odds trade. The stock needs to be fundamentally sound, fundamentally in line with the technical. So what I mean by fundamentals, you don't need to research any kind of fundamental analysis, just something that makes sense to you. Take a look at Apple. And by the way, Apple is going to have a huge day tomorrow. It reports after the close. And the thing is that Apple always underestimates and over delivers. This is typically what it's done. Earnings season after earnings season after earnings season. So pick stocks like Microsoft, Apple, even if they gap down. For example, if they miss some earnings, when they gap down, they're so strong, and especially everything is so strong right now, that they're just going to present some new buying opportunities. All right, so just wait a couple of days, wait until that buy setup or breakout. These are the most common strategies that are used, are coming into play, and just buy more. Okay, buy stocks that are on sale. Every single time you get the market pull back, it's a reason to celebrate. It's a reason to create your shopping list. Think about this. Once you want to, capture the gains that we've had in the Qs, the gains that we have in Netflix, the gains that we got in Google, but you weren't able to get into these trades, now's your time. The market is on a pullback. Any kind of divergence that is coming from FOMC may actually present a buyer opportunity. So even if there's going to be a negative reaction off FOMC today, or in earnings season, any kind of surprises, they actually produce a lot of buying opportunities. So other than that, there are certain events throughout the span of the market, throughout the span of the year or years, that present these kind of opportunities, especially for investing. So for investing, you're taking into consideration events like the dot-com bubble, the 2008 financial crisis, the 2016 election, the 2020 pandemic, the wars, and etc. Any kind of abrupt pullback on a technical level. That's why you need to be masters of technical analysis, masters of strategies, masters of risk, because only if you are masters, you're going to be able to deliver above average returns in the market. Take a look at Google. Another idea. This is, again, I just want you to have this photograph in memory, and remember, this is the 20 SMA. This is a 4-buy pullback, and this is a rotation. This is a classic buy setup when this bar takes out the prior high. Okay, so think about this. Google, right? Google is dropping right here. This is the high, and bam, it was falling apart. And by the way, this is a higher time frame. Okay, this is a higher time frame chart. And think about this. If you loved it before the split on July 2022, when it was trading at over $2,000, if you wished you owned it back then, how about you own it now? This is mega trading opportunities right now. Google is Google. Apple is Apple. They're not going anywhere. Okay, Apple's going to come with a vehicle, right? What do you think? It's not going to go anywhere. This is where it is. So this is where it was, right? Take a look at this. This is first and second quarter, right? First and second quarter of 2022. This is where it is right now. This is 2023 rotation. This is 2024, January 2024. I took this chart yesterday, last night. Look at it where it is, okay? All right, so be in sync with the institution's footprint, follow the cycles. Institutional buying and selling creates the follow through. So you want to make sure that you're getting into something that institutions love, right? Institutions love. If you have, if you're looking at a stock and it's only trading, for example, 300,000 shares on a day-to-day basis, do you think that institutions really love that? They're not going to accumulate more. You need to look for something that has about 1 or 1.5 million at least minimum shares traded on a day-to-day. Okay, this is Meta. This is another buying opportunity that we took, and this was last year in September. Look at the gains that we had right here. Beautiful. Look, the bottoming tail into support right here. So analyze it, have the courage, allocate the risk. I mean, you're risking 1R. It's not a big deal. You could go as low as 0.5% risk. You could go at 1% risk. It's up to you. I typically use in swing trading, I use 3%, 3 or 4. And when I'm day trading, I use only 1% because it's a lot more riskier. So when it comes to trading, no one has a crystal ball. It's just work, 99% technical. And like I said, 1% fundamental. Why is it that 1% fundamental? Because I just said at the beginning that you don't need to know fundamentals. You need just to pay attention to when the stock reports earnings. That's it. So here's the trade out loud criteria. You have to have a good history of earnings, 3 years or minimum, right? And you have to have the stock that beat the quarterly, that has a good performance in beating the quarterly earnings, right? At least 3 prior, right? Then you have to look for companies that make a splash, have new products, new services, that are launching new stuff. People love this kind of stuff. So when they're launching a service, what does that mean? Cash. And another thing that you're going to find odd is when the company is producing layoffs, that's perfect for the company. That means more money for the company, so the company is going higher. Then you look at the technical chart. You evaluate everything, the trend, the volume, etc. You look for volatility contractions, means smaller bars. Remember, the biggest action into the market is coming from the smallest bars. Take a look at this. This is Microsoft right here. That's our entry, 375.90 cents. Look at this breakout. We had so much patience waiting here for this breakout. This is where we initiated the trade, and it's looking really great. This is where Microsoft is right now. Number one mistake in trading, don't just look for stock picks on CNBC or Bloomberg or on social media. Try to understand the psychology behind it. Here are 10 ways to generate income in swing trading. Let the chart do all the talking. Focus more on the chart than the P&L. Pay attention to the technicals and also risk and risk management. patience to wait for the trade. Don't overthink it, because if you start overthinking, the trade is not there. It has to be very obvious. And what I was telling you guys earlier about photographic memory, I am not kidding you. Photographic memory, you remember winning trades. Look for relative strength and relative weakness and compare to the major market indices. So for example, the Qs, the SPYs, diamonds, and choose the strongest sectors within those categories. And also, trade with the trend is the easiest way to have follow through. The art of making things happen in 6 steps from a self-made millionaire. Do it now. The biggest enemy is delay. So start now. You can start at $50, do a Webull, start investing, buy your first share. Learn to create wealth via swing trading and investing. Learn the art of charting. It is what's going to make you go into stratosphere. Learn investing to multiply your money over and over again by compounding. That's the 8th wonder of the world, by the way. Einstein said it. Understanding the bow and arrow law. First, what is the bow and arrow law? Do you guys know? First, you're going to have a setback, right? You're going to have that pullback, right? You're going to spend some money. You're going to learn through trial and error, or you're going to spend on trading, right? On learning how to trade. So that's the pullback, and then you're going to launch higher. It's the law of the bow and arrow. All right. And that is to avoid the biggest expenses. All right. So people often ask me, how did I get here? Well, first of all, I found a mentor. I took probably 5 or 6 courses. It was very expensive. I probably spent more than $200,000 on my education, on my trading education. So after taking like numerous courses, I found a mentor, someone that has already achieved the results that I wanted, and that was willing to show me how to get there fast. Collapsing time. I literally had 6 months to make it work. So I needed to make it work, and I made it work. You need to have a really good mindset and eliminate all the limiting beliefs that you're not good enough, that you shouldn't be loving money, that you like hate all those rich people and all that stuff. Stop doing that, okay? And just execute, just do it. So if you guys are ready, we do have a program. It is the Stock Swing Trader. It is $299 a month. And this is where you're basically going to receive the Stock Swing Trader. It is a newsletter that you're going to receive every Monday night. And with this newsletter, you're going to have access to trades that are called every single week in the program. So these trades are going to be called, we're going to send you guys and set you up with an Excel sheet. I don't know if you guys can see it here. Not sure if you can see it or not, but this is, these are all the trades that are going to be called with the entries, the stop, the targets. And plus, we also have a private Twitter feed. On the private Twitter feed, should I say X feed? On the private X feed, you're going to have access to real time, and that is where I provide real time trailing. So, and I provide guidance. And I also send out a video on Monday instructing you on how the week is going to play out and what our game plan is and how we're going to be tackling the week. So there's a lot of information in there. If you guys are ready to jump in, you could actually go into tradeoutloud.com/swing trader, and you're actually gonna take advantage of this. And it's also on our website. You could go on tradeoutloud.com and go under services, and you could go under the Stock Swing Trader. So this is a service that is designed for self-directed traders. So this is a wrap. Thanks so much, guys, for having me here today. It was a blast. So I really hope to hear from you guys soon. I wish you guys a fantastic February moving forward and another beautiful end of the quarter. Thanks so much for having me today.
Hey, Anka, you reminded me of a joke. Do you know what the everyday person's best revenge against rich people is?
No.
Becoming one.
Awesome. I love that.
But thank you so much for.
I truly love that. Thanks so much for sharing it. I
thought you would appreciate it. I'm a beacon for jokes and good stuff.
Go here under services at Trade Out. Thanks so much for having me.
You're very welcome. Thank you for being here. Trading just 10 minutes a day and generating a 6 or 7 figure income sounds very attractive. Ladies and gentlemen, Miss Anka Metcalf of Trade Out Loud. If you're interested in trading less than 10 minutes a day, set it and forget it. swing trades, and take home 6 to 7 figures trading the market, then look no further. She over at Trade Out Loud has a solution for you. I put her link in the chat box if anybody would like to click it. Great presentation. We hope you come back and see us again.
Absolutely. Thank you so much. Good luck today.
Have a great everything. Thank you so much. And I did get out of my trade with a profit. So thank you for giving me the confidence.
Awesome.
Have a great
Love
weekend.
it. I just love it. We multitask.
Oh, we wrote it up good. Trust me on that.
It was awesome.
Oh, ladies and gentlemen, we have a great lineup today of seasoned professionals. And if you want to trade options or learn more about options, then you'll want to listen very carefully to our next presenter, because he was inducted into the Traders Hall of Fame way back in 2007. You've probably seen him appear on CNBC, Fox News, Bloomberg Television. He's the founder of BigTrends.com, which provides investors with specific real-time stock and option strategies and investment education to profit from significant market trends. Here to present how to trade weekly options on stocks like Tesla and NVIDIA is Mr. Price Headley of BigTrends.com. Welcome back to Traders Corner, Price. Check your mute button, Price.
There we go. Hey, Rob, how are you? Great to be here.
I'm doing good. If you are keen to the knowledge, I accidentally wrote AMD all the way down and then doubled down and wrote it back up. So you have my attention, because the Magnificent Seven and the tight spreads are exactly where my interests are.
Well, thank you, Rob. It's great to be with you and everybody here. And, you know, as you said, these stocks have become such a huge part of the overall market. You know, you hear about the Magnificent Seven, or what we like to talk about, the Great Eight, and there's some 40% of the S&P 500 out of just 7 or 8 stocks, right? So you say that's what's driving the market. You want to be a part of that, folks, on the way up and on the way down. They can move obviously very sharply in either direction. So my goal here today is to share with you what I've learned trading names like Tesla and NVIDIA and more, and how easy they are to get in, and more importantly, how easy they are to get out. So I'm going to walk you through that today. Let me just remind you as we get things rolling. The information I'm providing in today's presentation is based on our proprietary research, and it's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our BigTrends.com homepage for more information here. If you don't know me, I founded BigTrends.com back in November of '99, and actually been blessed to have been trading options since the start of the '90s. Caught the trading bug while I was a student at Duke University, and then went on to work for the nation's largest options newsletter through much of the '90s, and then started BigTrends.com at the end of the '90s. So we've been guiding folks through these ups and downs in the markets over the last 24 plus years at Big Trends. Blessed, as Rob said, to be inducted in the Traders Hall of Fame back in 2007. My whole thing is that there's got to be a data-driven edge. You know, you shouldn't be trading or investing if you don't know what your numbers are. What is my edge? How much can I expect to win? What would I expect to lose? Does this play out for me over a large sample of trades? If it doesn't, let's not trade it, okay? This is not gambling. This is not just sitting down and hoping to beat the house. That's how Vegas has those billion-dollar casinos, because they take money from people that don't know that they're playing a game that the edge is stacked in the casino's favor. Here we can set up the game to stack it in your favor. And that's what I want to share with you today as one of my favorite techniques to do that. So you hear the Magnificent Seven. We call it the Great Eight. We like 8 key mega cap stocks. These are some of the biggest stocks in the market. We alluded to Tesla, we alluded to NVIDIA, but there's more. In a second, we'll get into the rest of those names. But the idea is that we use weekly options on them. And the key here is that we don't trade them too close to the razor's edge of expiration. A lot of people are trading 0 days to expiration options. Some of them, you know, need to make sure they've got enough of an edge to do so. Bottom line is for us, we want to give ourselves more time than that. We'll give ourselves typically to the next Friday's expiration. So we give ourselves a week to 10 days before the expiration and hold these for no more than a few days. Okay, that's key. So we're going to key in on why these tech stocks have been our favorite names to trade, not just because they're leading in a huge part of the market, but because they trend so well. Even big names like Apple. We're going to go through a bunch of the charts and walk you through. So Apple, as I said, one of the Great Eight. Obviously, we've said all along that Apple should be part of the kind of original FANG complex, which you remember FANG was the old Facebook, now called Meta, right? So we've got Meta, we've got Amazon, we've got Google, and of course Netflix, where they were the original 4 FANG names. We've always said Microsoft should be a part of that mix. Of course, NVIDIA and Tesla now kind of the 2 new age leaders. Of course, Tesla's having its own issues lately with the bad earnings report and whatnot, but it's going to swing in both directions, right? So you need to be flexible enough to trade it both ways too. Same thing, NVIDIA is getting all the love right now because of AI. Artificial intelligence is all the rage. But remember, the tech bubble, the internet was all the rage at the end of the 90s, right? So the key is that you need to know when to trade it on the way up and when to trade it on the way down. You cannot get locked down into a view like, I got to own this stock for the next 5 or 10 years. My view is that, even though Apple's been a great one to have owned over the past 10 years, we've seen great bear trades on Apple, just like we've seen great bull trades. So we may get more bull than bear trades on that, but the bottom line is that stay flexible. So that's what we're going to walk you through, is how we stay flexible and do that. So an example of how we did this on Tesla was we bought, this is going back into last month or so, you can see we bought a 265 call. We paid $9. That means to control 100 shares of stock, the option's quoted at $9. That means you're going to have to pay, to multiply times that 100 shares, $900 to control 100 shares of stock that might cost you 26 grand or more, okay? So then when we catch that move, we're going to show you the charts here in a minute, that move went to a $17 option. So our $900 invested per contract turned into $1,700. So that's an $800 profit on just one contract, just controlling 100 shares, 88.89% the next day. So while past performance never guarantees future results, there's going to be winners, there's going to be losers. We're going to talk about both today. The idea here is that, okay, if we can set this up to say, how do we position ourselves to ride when it's working and also have a plan to get the heck out when it's not, then we can structure that effectively. Now, what I would caution you against, I'm not just talking about what's worked for me in 34 years of options trading, but also what's worked not as well, is just reacting to price action alone. I know some traders tell me they like to trade pure price action because it sounds so simple to not have to focus on any indicators, any methodologies. But my experience more recently than ever before is that the noise that's in the markets, especially intraday, if you look at an intraday chart, there's all kinds of whipsaws. As you know, coming up later this afternoon is Jay Powell's commentary after 2 o'clock, when the Fed news comes out that they haven't changed interest rates, which is the 97+% chance that they won't touch interest rates right now. Why would they right now? It's been kind of in a sweet spot, right? Rates have come down a little bit from where they were, but also the economy hasn't slowed too much yet. But the market's projecting the Fed's going to cut some more, and so they're going to be watching everything that Jay Powell says. And you're going to see a lot of noise and volatility as Jay Powell speaks after 2 o'clock and after. Do you want to trade that? Me, not so much. I'm looking for the cleaner, more consistent trends, not the noise and the chop. I'm not a noise trader by nature. I'm more of a trend trader. Find the meaningful moves and leave those small moves and small noise to everybody else. Trade the bigger trends. So what we're talking about today is ADX and DMI. The ADX is the average directional movement. DMI, the net new highs, DMI plus, net new lows, DMI minus. We're going to walk you through some chart examples, show you just what that looks like. We talked about that Tesla example here. So you can see this one triggered for us. This is pulled off of the old Thinkorswim window, now part of Schwab Trading Network. You see the big gap here, right? Big G for gap coming up here, and say, okay, we've got the stock breaking out. We're looking at 30-minute candles here, but we're looking at the bottom panel here. This blue line is the ADX, the average directional movement, okay? Wells Wilder developed it. Same guy developed the RSI indicator, relative strength index, as a popular oscillator. I like the trend-based tools even better than the oscillators here. The positive directional movement shown in green. What does that mean? It means net new highs. So when you look back, you can see Tesla is breaking out above a bunch of old highs. So this new high here is coming in a lot higher. But then the net new lows, the red line, is dropping, right? So this relative low point is a lot lower than the lows that we saw looking back in prior sessions. So the point here is that, okay, you're getting an expansion of the net new highs. If you think of it this way, you make higher and higher highs. What do we call that? We have higher and higher highs, higher and higher lows. That's an uptrend, right? So how do we know it's going to be an uptrend? Well, because our ADX line, it would never know with exact certainty, right? But we're playing the edges here. The ADX line in blue is starting to trend up here off of a low level, and it's starting to turn up above that declining net new lows red line there, that negative directional movement's going down, and as the positive goes up. So the higher highs, higher lows, suggestive of an uptrend. Back before, when you saw the ADX was staying low and we were actually trying to get a, looks like a bearish signal here, but we're above a longer term trend filter. So we actually put a longer term trend filter on that upper chart there, where we can only take bullish trade setups against a longer term bull trend. If the trend was bearish, if we were below that line, it would be graded negatively and we can only take bearish DMI ADX setups. Okay, so that is a first good rule of thumb, like line up the longer term trend in your favor and only trade your short-term trends in the direction of that longer term trend. It's like two rivers flowing into one even more powerful river, right? If those rivers are flowing in the same direction, you're going to be able to really see that speed of movement accelerate. If the rivers are flowing into each other, what are you going to get? You're going to get a lot of chop, a lot of churn, a lot of turbulence, a lot of lack of direction. So essentially what we want to look at here is how we can participate. Typically for a 2 to 3 day type of an expected hold, we can have some day trades in this portfolio, but the bottom line is that, you know, what we're watching is when does that blue ADX line roll over? And you can see, where does it roll over? Here it rolls over the next morning on the first half hour's close. So we got in at 10 a.m. on a Monday. We got out at 10 a.m. on the Tuesday. Why? Because our ADX line had rolled over. Ironically, by the close of that ending point of that trade, we were right near the highs. So most price action based, like moving average breakdowns and trailing averages like that, will end up getting you out kind of into the sell-off, into the, you've left a lot on the table. Sometimes we leave some on the table, but the idea is that in this case, we got the gap down and then got the reversal back up. A lot of people would consider that, oh, that's a bullish outside day. That's a bullish engulfing pattern if you're a candle follower. You can see that one candle, that one bar does not make a trend. I've always said that one price action point is not enough data, not enough of a meaningful point to define a trend. I heard somebody on TV the other night talking about island reversal patterns and talking that as a strategy. And I'm like, you know, that's a possible strategy, but I would want to see some follow through off of any kind of reversal based technique to tell me that it's not just a fake out, right? We're trying to minimize our fake outs and trade the true breakouts. So the breakout for me is in this phase where ADX is rising, right? So when you can circle that ADX rising phase and say, that's when I want to be trend following. That's when you should be riding. That's when you want to get leverage. And you can see, so what do? We bought the 265 strike calls. This is back actually in September, where you see that we buy the 265 calls. Look where the stock was trading at that half hour close, right near 265. So we're buying about an at the money call going out to the next Friday's expiration. So we had a lot of time in this one. Of course, we didn't need that much time, but this is the beauty of it. When you have enough time to trade something for 1, 2, 3 days and not really sweating time erosion too much, that you say, look, the stock has a steady move up. Look where it goes. It goes to a high of 278. We're out at about 277.5, just less than a point off of that high. And we're taking this down at $17 a contract, right? So the stock has moved from 265 to 277.5, up about what, 12 and a half points. And we're seeing that's roughly what, about a 5% move, 4.5%, 5% move in the stock. Good for 88.89% move in the underlying option. So you're going to get leverage here, but the key is you don't want to be stuck holding and hoping, right? If you get stuck holding and this thing reverses back down and you say, Tesla's a good company as of this data back here, look like all the news was good. Well, guess what? You could really get left holding the bag. You can't use fundamental justifications to justify what a short-term chart says you should have already been out of, right? This is a big difference between fundamental and technical analysis. The fundamental buyer will say, well, if I liked it at 265, I've got to love it at 250 and slam dunk at 225, and now Tesla's what, below 200, right? So you keep buying on the way down, thinking you're averaging in, thinking it's a good company, you want to buy more of it, and yet the technical tea leaves are going to the downside. You don't want to be fighting that, right? So that's the beauty of technical analysis. It gives us windows of opportunity, and for us, the windows of opportunity are when this thing starts to trend on the ADX off a relatively low level. What that tells me is that a lot of people use ADX as a way to say that we want to be finding a high ADX and trading a really strongly trending market. Our data says that if you get ADX too high, certainly 40 plus and maybe even mid 30s plus, you're basically too late into the trend game, right? If you buy it later in that ADX move, you've left a chunk of your profit off the table and you're not taking full advantage of that trend. We're going to show you calls and puts. That was a call option, both trade. Here's a put option strategy on Google, right? Google's a great company. There's no question about it. But when Google gets into a bearish mode, we can profit on the downside. So here we go. We've got, remember, this is a half-hour chart, but then we're using a longer-term trend filter that tells us that, yes, we would only take bearish trade setups. Look, the ADX is starting to trend, again, off that low level here, right into that first half hour's reversal back up. So we're getting in near the high of that 30-minute candle at the end of it, right? That looks like a positive reversal candle. As you can see, not one you'd want to buy, right? We were actually buying the puts, playing that we'd want to sell the stock, buy the puts to trade the downside. So the difference on the ADX and DMI lines is that when it's a negative trend now, look what's happened. The negative directional movement is going up. Why? Because we're making lower and lower lows. The positive directional movement is dropping because you're also making lower highs. Lower lows and lower highs, what's that the definition of? A downtrend, right? So the ADX rising is what we want to see. There will be times where you will get, a pause, like we got a pause into the end of the first day holding this, kind of a flag pattern, right? Choppy back and forth. Some people get worried because they'd say, oh, well, look, the DMI action is starting to converge back towards each other. I don't have a problem with that as long as the ADX, the blue line, keeps going up. That's where we say hold. It gaps down the next morning. Our data says we should keep holding this until ADX rolls over, which you can see in this case, we did get back a little bit off of that gap down, kind of fell back to just under where it had closed the prior day, and now we're exiting these Google puts around 118. Notice we put them on up here around 122. 121 and a half, 122. So we got about 3.5 to 4 points of that downside. So about a 3% move is what we captured on the downside in Google from the entry to the exit. It was a little bit more obviously during the window of the trade. We don't expect to be perfect. What we expect as trend followers is to catch the sweet spot in the middle of the move when the ADX says the wind is at our back. You should be holding this put option, not panicking by little adverse little blips in the market, right? Look what we paid. We paid $555, 5.55 times 100. $555 controlled about $12,000 worth of Google stock, right? So the leverage obviously is tremendous there. And then the key is that, okay, we catch, as we said, about a 3-point move down. We got about $2.30 of that move in the money option, right? There is going to be some time premium. When we bought the 126s, the stock's trading 121 and a half, 122. It's got about $4 to $4.50, call it $4.25 of intrinsic value. So there is a buck and a quarter of time premium or so in that option when we buy it. So that's okay because that means that there's about $4 and a quarter of intrinsic value, right? So the 80% of our option is intrinsic value. That gives you a lot of stability. I call it a stock substitute mentality. Say, why would I buy the stock when I can buy an in-the-money option that controls 80% or more of the movement in the underlying shares at a fraction? In this case, obviously, what you can see somewhere in the neighborhood of about 0.5% of the cost of the stock, right? So you start looking at that and you say, okay, that's something that in this case, what we said, $12,000. Let me take that back, about 5% of the cost of the stock. Okay, that's still that 20-to-1 leverage ratio, which is a healthy type of a leverage ratio. So point is that, yeah, we want to participate when the going is good. When it's not clear anymore, when we get an ADX exit signal, that does not mean you should bet that the trend's going to go back the other direction, back up in this case. because the directional movement lines are still saying that the bears in red are still winning the war over the bulls in green here, right? So there's just basic DMI crosses and things that you could use to say, yeah, you can see that in general, the bears have been winning the war, and thus the stock has been overall working lower through that look back period. But the idea is that the ADX is going to give you the best of the best type of an opportunity. Now, both those Tesla and Google examples were showing you profits that were under 100% gains, but this strategy has been able to catch some even bigger winners beyond that double as well. Here's an example of a really big score on NVDA. So this is going back looking at NVIDIA this past year, and you can see the start of that trend is on the big gap up. So now, how many of you, when you think about it, have looked at situations like that where you're like, yeah, by the time we were getting our signal at the end of the half hour, the 10 o'clock Eastern time, Wall Street time close, stock's trading just under 440, right? It's about 437 and a half, 438. And you see that move and you're like, hold on, it was just at 525 at the prior day's close. And now you're telling me to buy it up, 14 points higher? And I'm saying yes, because that is the launch that our indicator says that ADX is just getting going. And you can see that if you don't have the conviction, if you just trade pure price action, these red candles down are probably going to stop you out, right? You're going to say, uh-oh, it's not falling through, I better get out. How many times have you done that and then look back and say, oh, that was a premature exit, right? That was not well timed. I panicked. I just didn't like what I saw and I got out too quickly, and then it rips to the upside with you on the sidelines, right? We've all been there. I have too. This is why I use ADX as really my predominant favorite indicator to say, show me the trend. And when we're in the trend, show me only when it rolls over is when I should get out. So while it slows down through that little dip in the stock that same day we got in, we're down a little bit, obviously, in the option when we buy it. We bought it at 965. I think it might have gone down to around maybe $7.50 to $8, right? So we might have been down 20% or so in that option intraday. Okay, you have to have that ability to stomach that move and say, I'm only going to get out if the ADX rolls down on a half-hour close. Didn't happen here, so we stick with it, and then it gaps up the next day. Again, has a little pause, a little flag pattern, catching its breath there, and then starts to rocket into the end of day 2 and beginning of day 3. Okay, so you can see here what's happening is that ADX keeps rising. And only when it rolls over here, the rollover point's happening in this zone, do we get our exit. See the stock finishing that bar just under 475, call it 474. The high was 480, almost 481, right? So again, we didn't catch the exact interbar high, although on a closing level, you can see the closes look like the best closing high was about 475 or so. So we really didn't leave that much on the table in my view. And you can see our 965, we had to pay $965, which controlled 100 shares of NVIDIA that would have cost you just under 44 grand, right? You're controlling $44,000 of the stock or so for under $1,000, like 44 to 1 type of leverage theoretically, right? Well, you look at this and see the stock made that move to 480. We stopped out, an exit, trailing stopped out, I should say, just under 475. So essentially the stock went up, you can see about 37 points. Okay, so on a 438 entry, you can see that we're up in the neighborhood of about 9%, maybe 8.5%, 9%. And yet look what we're making. We're closing this thing out for $33.20, so $3,320. We paid less than $1,000. So you can see your profit here is like $2,350, give or take. So you say, okay, look, that's just on one contract. That's a 244% gain, more than a tripler for basically buying on a Wednesday morning out midday Friday, like 2.5 sessions, right? So the beauty of this is that, of course, getting out there in retrospect looked really smart because the stock pops back down to the low 450s. We're out of 474. And that's not guaranteed that would have happened, right? But it's saying once we get the ADX rolling over, what it tells me is that healthy trend is no longer confirmed. We don't know which way the stock wants to go. We're back into a noise or questioning phase. I don't want to question anytime I'm in a trade. I want to have clarity. I want to have conviction. I want you to have that same conviction and say, look, I can take advantage of this and let it keep running if ADX is working in my favor. If it's not, I should not be participating anymore. That yes, go moment, or that no, get back to the sidelines moment of clarity is so valuable, especially as I said before, when the noise has picked up so much in today's markets. Winning trades are great and you say, sure, you're picking out some individual winners. How's the strategy perform when you add up all of your call outs, the wins and the losses over a longer time period? Fair question. Well, you say, okay, this is going back just to try to keep it on a 12-month look back to the end of January last year to today. So look, if you were allocating up to $2,000 a trade, say in a $10,000 account, okay, so because obviously we want you participating on, we don't like to pay more than $1,000 a contract. So if you're putting in $2,000, you know you can get at least 2 contracts, maybe a bit more. But the idea is that, you know, we want to try to get a little bit more exposure if we can, but we don't want to be too overcommitted, right? You never want to load up all of your portfolio or the vast majority of it into any one trade. You want to be sensible. This uses no compounding and said, look, if you're just putting in every time we say buy this option, invest $2,000. Even as the portfolio grows, we're saying keep it at $2,000 just to be consistent and to be stable and not get too high or too low. $10,000 account would have grown to $17,625 gross profit. This is before commissions, before subscription investment on this mega cap trader program, we call it. So we call out real-time trade alerts, when to get in and when to get out. You're never left hanging. Sure, past performance never guarantees what the future will hold. Future results will vary. But the idea here is that this is scalable. Whether you're a larger or a smaller trader, you could do it with $1,000 a trade. I wouldn't go under that, because if we call out something for about $10 or about $1,000 per contract to control 100 shares, that would at least get you one contract on a $1,000 minimum commitment per trade, right? And you would just scale it back on what your expectations are in terms of the typical annualized profit. But you know what? Whether it's a bull market or bear market, these stocks are going to be leaders to the upside and to the downside. Okay, so you need to position accordingly. So we're going to walk you through some more examples first. And remember, I talked about Apple at the beginning. I said Apple, phenomenal stock, phenomenal company. But I think these examples show you that when it's got the wind at its back for a bear trade, yes, we're not afraid to take a bear trade on Apple. But the key is that our longer term trend filter in this one, longer term meaning more like about the last month's read, is negative. And now the short term read, you can see there's our ADX pattern starting to confirm here, saying you should be betting on the downside here on Apple when the stock is finishing that half hour just under 139. Look what we bought. We bought a pretty nicely in the money 146 strike put. If you're new to options, that means you've got a right to sell Apple at $146. It's already down at 139 or so. So that's about $7 in the money, $700 a contract in the money. We're only paying $825. So only about $1.25 of that 825, but 125 of it is time value. Maybe 15% of the options. So 85% of it is intrinsic value. That means it's a great stock substitute. So if it just flattens out on us, we're going to limit our risk. We're not going to get creamed by time erosion. That's what hits a lot of amateur newbie option traders who get enticed by the low dollar options that are all out of the money, and then they get stuck holding and hoping and look at wipeout situations. We want to take that off the table as much as possible. So if ADX rolls over, remember, we're getting out. So we write it down from 136 down to a low here. You can see about 133.73. And in fact, just coming off that low, that same half hour's close, it's back to about 134.5. And we're saying our ADX just rolled over. Now, why does it roll over on a relatively small move like that? Because it's adapting to more recent action. When you become a subscriber, we give you all the settings, all the parameters, everything you need to do to follow along as a home gamer to what we're seeing on our monitors here in our Big Trends headquarters. So the bottom line here is that trade, not a home run. We made from 825, we exited 1085. So that's about $260 per contract. That was a 31.5% gain on the initial capital invested, right? You can see we're not taking partial profits. We're not trying to scale. We're not trying to use trailing stops per se. The ADX functions as our trailing stop. When it rolls over, we'll say, okay, it's rolled over, time to get out, send you an alert real time to exit. So you get an email alert, and you can also get it as a WhatsApp update on your smartphone if you wish, once you become a subscriber. Of course, we got to talk about losses. Not all trades are going to win. Here's an example of a loser. We showed you the Tesla one that was a near doubler. We showed you NVIDIA beyond a tripler. But guess what? About a 50% loss is about the worst that we would accept in this portfolio. This one did hit into that area on Meta. This is a prior, what looked like a nice looking breakout, right? Whether you use price action, in this case, the ADX said, yeah, this should be an uptrend here. Stock finished around 304. We're buying the 300 strike calls, paid $9 or $900 a contract. It runs up to about 307. We're feeling pretty good at first, but guess what? It gets absolutely thumped there on some adverse intraday news and pops down to our $4.50 stop. Stops us officially at 4.45. We lost 50.56%. That's about as bad as it tends to get in this portfolio. Theoretically, of course, you could walk in the next morning, the stock gap's huge against you, and you could always have your dollars at risk, could lose those dollars at risk as an option buyer, right? There's always that chance. It's a very low probability, but that's why we always remind subscribers that, hey, there is that very low probability that you could get a big risk event happen. So don't overcommit your capital no matter how well the service is doing. Stay consistent with your capital allocation. It'll serve you well. But yeah, we want to show you an example of one where, gee, kind of just out of the blue did a quick hard flip against, right? So this can happen. We wait to the half-hour close. You'd say, well, didn't that hurt you here? Sure, maybe it did. Maybe instead of losing 25 or 30%, we lost 50. But there's enough other fake outs, or like the one we showed you before where Tesla opened lower. If you're using a trailing stop, you get whipped on the open, then it flips back up, and you can make way over that 25% differential back on a big flip back in your favor. How about another example that shows your dynamic exit criteria here when you look at another meta example to the upside? Here's just a slow but steady wins the race type of a trend. These are the kind of trends that I prefer, frankly, that they're not going to light your world on fire on any one bar or candle, but you see the march higher happening here. So look where we got in. Remember, our longer term trend filter says only take bullish trade setups when they confirm. So you see there it is coming in there. There's the ADX cross. There's the entry point here with the stock about 276. By the 270 calls, about $6 in the money. We paid $9. About 2/3 of our options intrinsic value, about 1/3 of its time value. $900 to control 100 shares of stock that would have cost you about $27.5 grand, right? So you look at this and say, okay, so what are we doing? We're waiting until we're riding this to the upside until ADX rolls over. So you can see the march higher happens, runs up first target up, or first kind of stopping point up here about 284 intraday, and then it comes down towards 280, right? A lot of people would panic on that bearish engulfing candle right there and say, oh no, I got to get out. But what's our ADX doing? The blue line continues to rise. So as that ADX keeps rising, we say, okay, that's a pause. Why is it that ADX keep rising even as the price action reverses? Because we're losing older price action that's much lower levels, right? So as you lose the older action at lower levels, you pick up the newer action, it adjusts. But yes, as we start to come down now, you see that we're getting our ADX rollover here, getting our exit point happening into the close of that bar, about 284.5. We're getting out. Of course, the you can see the 270 strike calls are now trading at about 13.25. We paid $9 for them. They're up almost 50%. 47.11% is our official exit. You see we're out there, and then the stock does start reversing even lower over the rest of that trading day. But the idea is that, okay, it's no longer checking the boxes for us to say we should hold this, because when ADX rolls over, it says that now it's anybody's guess what could happen next. We're not playing a guessing game here. We're playing for an edge, how to manage that. So when you think about how we're handling trade management for our mega cap trader subscribers, just even one trade like the Tesla 265 call option I started you out with, that would have put $800 a contract into your pocket. That happened within 24 hours. We got out the next trading morning. But the key here is that, of course, this is trading the biggest, the largest, the most popular stocks in the market. And the reason that that's so attractive from an options trading perspective is the most popular stocks are going to tend to have the most options activity, right? Apple typically right at the top, Tesla pretty much right behind it, Amazon and Google pretty much right behind that in terms of the typical most active options out there. Microsoft's plenty active. NVIDIA, we talked about, and of course, then you've got like Netflix and the like. So the principle here is that, look, we're going to trade the most active names. This will make it a really easy entry and, more importantly, an easy exit. When it's time to get out, you don't have to worry about, am I going to get filled? We'll follow up quickly with what's the right price to put in there to go ahead and get this trade cleaned up, win, lose, or draw. So how do you get access to these trades? We're setting up for you here as part of Traders Corner today what we're calling our Tech Titans package, right? These are the titans of tech, the biggest technology names out there, the true leaders, and we want you to get a taste of it. So I'm not going to talk about signing up longer term. I'm going to say, do give it 3 months, give it 90 days to give yourself a chance to say, okay, what happens in 1 week or even 1 month, I'd like you to give it time to say, let's prove it to you here over these next 3 months. So by the end of April, you should be feeling pretty good about what you've learned as well as what you've been able to earn with this type of a strategy. Now, the typical monthly list price on my website would be $197 per 30 days. So three months of that would cost you $591, but we're going to mark it down for you significantly here. So when we say, look, I'm going to give you some extra bonuses too. I'll give you all the rules and the settings so that I can't give it away for free. When you get signed up for this awesome special I've got for you, you're going to say that's awesome to learn the system alone for such a low price point to get started. And I'll give you weekly video training as well as a dedicated email to me and my analyst team if you've ever got a question on your subscription. But instead of paying $591 for the next 90 days, next 3 months access, I'm slashing that down by 2/3. Scratch out $591. When you act today, it's like buying a month and getting 2 more months for free, if you think of it that way, right? $197 lets you get access for the next 90 days. Think about it, that's pushing just over a couple bucks a day on average, right? But the bottom line is that, look, what you do is you go to this link here, and I'll pop it in the chat box here. It's not a www. It's members, because once you're thinking like a Big Trends Mega Cap Trader member, members.bigtrends.com/mega, right? MEGA for Mega Cap. And so you look at that and say, okay, how do we do this? And say we want to focus all of you on, how can you really zero in on the best of the best trades. I just posted it in there. Rob, maybe you can copy that over for me. It's not letting me send it to all for whatever reason. But basically, the principle here is, okay, $197. One of these trades, as I've showed you, could pay for that many times over, right? So the beauty of this is that you're not worried so much about, okay, what's the potential? The potential here, if you're investing $1,000 a trade, could easily be a double, $1,000 gained or more in some cases off of just a single trade. Thank you, Rob. Appreciate you sharing that. So bottom line here is that, look, you've got to focus yourself on just saying, let me take this as a process. Let me take it as, how do I implement this? Slow and steady winning the race. So just a reminder too, on the trailing 12-month performance, we went ahead and updated that through today, which I love how my team is so good at making this totally relevant to what's happened lately. In addition to looking back, of course, over the past full 12 months, you see that taking $2,000 into each trade on a $10,000 account would have grown $10,000 to $17,625 gross. That's before commissions, before subscription investment. But think about it. If you're just trading a 1 lot, or even in this case, say a 2 lot, that's round trip, 2 lot, 2 in and 2 out. It's going to be 4 contracts total traded on a trade. That's $4 maximum, the way the option commissions have come down with no ticket charges. Even if you're just trading 1 contract at a time, that's a $2 round trip at most. So there's never been a better time in my 34 years of options trading than now to really take advantage of that. You keep the vast majority of what you earn on your options trades with a strategy like this, where it's really about finding the right type of option. We don't want to buy maximum contracts for maximum leverage. We want to get the right kind of leverage with that stock substitute mentality. So that way, if it does get stuck in some chop, you're not sweating that so much because you've got a vast majority of the trade that's already got intrinsic value with a nice in the money option on these as a general rule. And if they're not in the money, it's like, okay, we know we're not going to hold them that long, like on an NVIDIA or a Tesla that's higher dollar, higher volatility. ADX rolls over, we exit then. Ask questions later, follow the indicator first. So that would be a 76% return in the past 12 months on a 10K account, trading these relatively conservative, not the zero DTE types here, but basically saying the next Friday's expiration, knowing we'll be out well before then. So like I said, in addition to the trade alerts, which how many trade alerts will you get in a month? We expect an average of about 8. In the course of 3 months, we'd expect almost 25 trades, maybe 24 trades is what we would typically promise, right? So we would expect that you're going to see plenty of those trades. And of course, at $197 a month, that's less than $10 a trade if you think about that in a 3-month trading window. That's why I want you to look at it like not what I'm going to do for just your very next trade, but look at it as a process. Look at it as like, let your wealth build over time, follow the instructions, follow the rules, let the system prove it to you. Don't just take my word for it. I think you'll be pleased with the result that you get. So the bottom line here is that what we're after is finding those great trends, finding that consistency of trend. Let me ask you a quick question, get some feedback from attendees here. How long have you traded options? Because I'm curious how many of you are trading options. If you've never traded an option, type the number 0 in your chat box. If you trade them for 10 years, type the number 10. We won't name names. I'll just name numbers here. Because we do get people who are brand new to options who get kind of worried about, oh, am I going to be able to take advantage of this? And by the way, when you go to that link, members.bigtrends.com, Rob's the most experienced trader of all here, apparently. But bottom line is that smiley face. That when you go to that page, by the way, members.bigtrends.com/mega, MEGA, you'll see how simple it is. That basically, so yeah, we got some new traders with us as well. And this is really easy to implement. So even as a new options trader, it's just buying an option to get in and then closing that same option down. There are no spreads, there are no complexities to it. It's really, really simple and effective. So bottom line here is that, look, for when you go to that page, you've already taken all your discounts down. So instead of paying $591, it's like take it down to the equivalent of a typical 1 month price of $197, but you're not getting a month. You're getting 3 months for the price of 1 month, right? This is like already giving you triple the bang for your buck. Oh, by the way, too, if I've gone too fast here in this 45-minute presentation, because that's all the time I have before we get to our next speaker in a couple minutes, you can add to order a multi-hour lifetime access weekly options bootcamp training I did for folks who are new to weekly options and the power of them across actually multiple strategies are in that training session, but one of them is this mega cap trader system and how you can take advantage of the ADX, put it to work for you. You can add that to your order too if you want today. Just click that add to order button and it will throw the $77 lifetime access. You're getting 3 months of alerts on the mega cap trader, but this will give you lifetime access to this multi-hour, at least 3 hours worth of boot camp training on weekly options from me that we've made on demand for you to watch as many times as you want. So if you want to get that lifetime access, we'll honor that for $77 today. If you don't, just want the trade alerts, then remove that. You can see that you get that all the trade alerts for the next 90 days for just $197. So it's all right there. Whatever credit card you want to use, put your credit card in with your billing information on the left, or scroll down the page. Once you agree to the terms and conditions, you can see you can hit PayPal as well, and that'll take you to the PayPal ordering mechanism there off of that secure page. If you've got any questions whatsoever, you can always call us toll free. 1-800-BIG-TRENDS is the number to remember. It's 1-800-244-8736. Tell us you saw us on Traders Corner, and we'll make sure we get you set up for this very limited time by the equivalent of 1 month, getting 3 months for the equivalent of 1 month with a special $197 offer that'll go away very soon. Also, you can email us clientcare@bigtrends.com if you want to study past history of the trades. We'll send you all the trades. We'll send you whatever else you need to make an informed decision, to feel comfortable with what you're doing. I just encourage you to start small and build, right? That's really the goal to keep you in as a long-term subscriber. I'm out of time. I want to thank you for being with us. Stick with us because we got many more great traders and presenters coming in to tell you how they're doing things. Lots of ways to take advantage of these markets. So thanks so much for having me, Rob. Always a pleasure.
Price, thanks so much for being here. And I wasn't trying to steal your thunder, but options are what I trade, and I'm sure I've not traded anywhere close to the amount you have. But I love trading the same week strategies on, Tesla, NVIDIA, the Magnificent Seven. What did you call it? The Elite Eight?
The Great Eight.
The Great Eight. What's the eighth one? Is it NVIDIA?
Basically, yeah, because you've got NVIDIA and Tesla and Microsoft go with the original FANG names, which were, of course, Meta, Apple, Amazon, Netflix, and Google. So you got those first five, and then we added in Tesla, NVIDIA, and Microsoft.
Oh, wonderful. I know Microsoft's setting new highs. Man, are they a leader in AI? But you
Absolutely
hit me right in the heart with your presentation, man. This market,
Thank you.
holding for 48 hours or less seems like a great plan. It's long enough to ride a trend, but not long enough to have it go too far against you and crush an account. Your
Yeah, it's
technical
working
analysis is always spot on. We love having you on the show. If you don't know, you are one of my favorites too. Ladies and gentlemen,
thanks, Rob.
you're very welcome, Price. If you want to learn more about trading same week options on tickers like Tesla and NVIDIA and be in and out of your position in 48 hours or less with amazing precision, then you can find Price's special offer in the link chat box. You can always find Price at www.bigtrends.com. I'll put that in there too. Thanks again, Price, for being here. We hope to see you back soon.
Thanks, Rob.
Ladies and gentlemen, Mr. Price Headley of bigtrends.com. I mentioned at the top of the show that we had an amazing lineup, and we sift through hundreds of pro traders to bring you the most credible and qualified to participate on our shows, and our next presenter exceeds all of our standards. You may have seen her on Fox News, Business Network, RT America, Cheddar TV, or CBS News. She's an expert stock market analyst and founder and owner of an international education company where she teaches people how to successfully trade the stock market. Her trading methodology is based on one strategy called Golden Gaps, which pinpoints institutional money in the stock market. Here to present Trade on the Side of Institutional Money and Gaps is Melissa Armo of the Stock Swoosh. Welcome back to Traders Corner, Melissa.
Hey, hello there. How are you doing, Rob?
I am doing awesome because I got stuck in AMD on the way down, and oh man, did it come back up.
I didn't look at that today. I was focused on some other things.
From 170 to 163, back up to 168.9-ish.
Woo! Well, that's a volatile stock to trade, but you can make a lot of money.
I was down a lot, and I got it all back.
Well, good for you for having the conviction and holding it.
Oh, I even doubled down at the bottom and scaled out as it came back. So.
Oh my Atlanta. Well, thanks so much for having me today. It's great to be here. We're going to talk about shorting. We're going to talk about trading. We're going to talk about the market. I will be done today before the Fed talks at 2 o'clock, but the market will definitely have a reaction today between 2 and 4 because Chairman Powell is speaking, and then the market will have a reaction tomorrow, what I call a follow-through reaction to whatever they say today. So if you're in positions, if you're up money, you might want to be flat going into 2 o'clock, especially if you're up. And it's one of these interesting times to trade where here we are, the last day of the month for the first calendar month of 2024. For those who have been following me for a while, you know I appear on TV, I talk about the stock market, I talk about all the things that have to do with the economy. And again, the economy and the stock market do not always go hand in hand. But for those of you that don't know me, I day trade the market. I trade options, I trade stocks, and I trade stocks on margin. So we shorted Google today on margin. It was a day trade. That was the play of the day today. And I called puts in Google today as well. The stock is falling. And if anyone has any questions as we go along here, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype, where I try to put TV hits, market updates, and anything else that might be of interest if you're thinking about following me. So here we are, like I said, January 31st is today. Hard to believe tomorrow is February 1st. I feel like this year is already flying. And if you've been trading this year so far, it's a good time to take a step back, particularly because not only is it the end of the month, it's also, and we're in the middle here of earnings season. How are you doing so far this year? If you're not having a good year so far, again, first month into it, you may want to rethink what you're doing. If you're doing well, you want to stay on track, you want to stay focused, you want to keep the momentum up, because again, you want to have a good year. And it's good sometimes to double, triple check yourself. Where are you at with things? Could you be doing better? Is your sizing right? Are you taking profits? Okay, all of these things are important. I have in here the stats for last year's results for the live room. Again, I run a live trading room. I didn't upload yet the room for today, but I will. Like I said, we did the Google. These were the stats for the day trades. Most of them were shorts, and I'm mostly short, which we're going to talk about today. Again, Google today, the play of the day was a short, and the option we did was a put. Okay, so we bought the Google put, and then you would sell it to exit the trade. Okay, I trade momentum, and again, Google gapped down. So these were the results from last year. All of these trades, if you had done them in the room, I called them live in the room, were done on margin. So you would have needed a margin account in order to take these trades. If you go to a retail broker, you need a minimum of 25,000 cash to get 4-to-1 margin to day trade. If you go to a prop broker, you can get 10-to-1 margin, and you can open up an account with $5,000, in some cases less than $5,000. So it's a different type of account. I urge you to do your due diligence when you decide to trade, but you can trade with less than 25,000. Some people don't realize that you can, but you can. So these were our results with an average risk of about $2,800 per trade, $569,970 for the end of last year. And I'm putting these results in because we just ended the calendar year 2023, and these were the options newsletter results for last year, 2023. My risk is greater for my options. These were all the trades, winners and losers. And I risk an average of 8,000, although I increased my risk slightly for this year. We were over 2 million last year. The options newsletter is a newsletter service that gets emailed to you in live time. So the trading room is not an options room. I'm not calling the trades in the room to get emailed to you for the options. And then I have here year to date, but actually I didn't update this. This is through the 16th. Like I said, we did Google today. Yesterday we did UPS was the play, but this year so far, we're having a good year. Considering the fact that we were mostly shorting, the market's been bullish to start off the year. We're having a great start to 2024. So again, these are the options trades and the day trades only through the 16th. Year to date, 285, 652, but that's really only through January 16th. So I will update this and put it on YouTube over the weekend when I have time. It's been a really busy time to trade. Like I said, yesterday we did UPS. UPS was an earnings gap. Okay, UPS gapped down yesterday. We shorted it, and you could have bought a put as well. So today we're going to talk about trading. We're going to talk about trading for a living. We're going to talk about institutional money, and we're going to go till as long as Rob tells me I have to stop talking here today. I'm just looking at the clock. Now, if you're trading and you love it, great. Okay. If you're trading and you're losing though, that's the problem. If you have another job, which I did for about 17 years, I did mortgages. I got to hate it by the end. I was looking for a different career, completely different career. And it's really, really tough to do something every single day when you get out of bed to know you have to go to a job if you hate it. And that's where I was at towards the end of my mortgage career. I was looking for a new job, and I found it in day trading, but it wasn't like that. It's day trading is not where you can sign up and start making money right away. So you have to learn what to do. And for me, I developed and created my own system. So no one taught me my system, the system I do now. I developed it and created it by trading in the market, my own live money, winning and losing over a course of 3 years. And if anyone has any questions, you can put them in the room here. I'll see them on the side. But it's really important to love what you do, because you're going to do it for a long time, hours and hours every day for years and years and years. So if you do not love your career, it's a tough life. Again, many people are working and just can't wait till the weekend. And that's not a good mindset to be in. Your life will improve if you enjoy what you do. It's not just about the money, although it is about the money. You have to make money to pay your bills, but you also need to love what you do. Your relationships will improve and your mindset will improve. And again, it's about the confidence, the conviction. So again, what do? I trade gaps, but I'm rating gaps with a 26-point checklist. I go through the checklist and I rate the gaps every single morning. When I get a total rating that tells me the gap is going to continue in the direction of the gap. For example, Google gapped down and fell, so we shorted it, okay? We would never have gone long that in a million years. Now, what if it had lifted? What if it had flipped? We would have stopped in it, okay? We didn't, the trade worked out, but I wouldn't have gone long that no matter what. So again, we talked about UPS. UPS was a gap. Now, what is a gap? A gap is the difference between the close and the open. So UPS closed the night before. Again, this was, what was yesterday? Tuesday. So this was Monday night. Monday night, UPS closed up here, snug as a bug, right around 158 and change, gap down here around 147, rallied, dropped. So we shorted this. This actually fell some today in the morning. I didn't see where this was right before I popped on here, but this did continue down a little bit more today, fell through the 144 number. So again, this was a short. So again, if you want a day trade, you're in and out and done in a couple of minutes. If you want to buy a put, okay, I did call puts in this too. You can take the trade, get out of it the same day. You could have taken the trade, got out of it this morning, okay? We're doing the weeklies, Now here's Google. Again, I took this right before I came on. Dream target in Google is 140. If it can make it down there, if the market starts to have a negative reaction at 2, from 2 to 4, this will go like gangbusters to the downside. Again, I don't know what the Fed's going to say at 2 o'clock, but there's nothing stopping Google at this point right now. And this was the short that we did today. And again, later I'll upload this room video on YouTube. But the night before last night, Google closed here, gap down, open, dropped. It was an interesting day for earnings in the last 24 hours, because we had Microsoft last night. And again, that was up, then it was down, then it opened lower, then it rallied. So that was a little wild. We didn't do anything at all with Microsoft. So again, I like to focus on shorts. And why? Because short moves happen fast, they happen quick, they happen big. Here was another one that we did. This was January 18th. We entered this 115. This is the 1 minute. Again, this is a day trade. This is a trade that you would take on margin. You must have a margin account to take this. 2,500 shares, and we did the ad here again, so I had more risk in this trade. I doubled up. It was a phenomenal trade. One, I plopped on the size. You got to have the account size to take it. And two, we had a big move in this. It's dropped in here $3 plus. So to be able to make $19,000 plus in a day trade is huge. So what happened with this? Stock closed here, up here around 108 and change, open in the morning. Again, this is a 1 minute. This was back on the 18th. This was out the 17th, gap down, rallied, dropped. And again, we shorted this, did the ad, got the drop, out. Oh, actually, no, this is a 15 minute. I'm sorry. I thought that was a 1 minute. Yeah, this is a 15 minute chart in here of the DFS. But again, you still see the gap. And again, this was a short. This is what I call the money move. Again, this is what you want to be in. So what do? I'm looking for momentum. This, the Google, okay, this had momentum. What? To the downside. So institutional money is doing what with Google today? We're talking about that at the beginning. Institutional money is selling Google, shorting it. Institutional money is not buying Google today. How do I know? The stock price is tanking, okay? It wouldn't look like this otherwise. Institutional money is in control of stocks and the market at all times. And again, that's why it's going to be really interesting today to see what happens at 2 o'clock, because the QQQs and the SPY have been rolling over today. They gapped down today. They fell today, despite what happened with Microsoft and the earnings. Those two market indices, the ETFs and the market, which you could trade, which you could do daily options in actually, and you could have shorted the market today. I didn't want to do that going into the Fed meeting. But those things, again, are having traction and getting dumped today, getting sold off. The market, though, has been on a tear. You can't deny it. The market's been rallying. In November, the market rallied. December, the market rallied. In January, the market rallied. And again, what I do every single day is looking for, and this is my niche, the best stock to short, because you only need one good play a day in order to make money. And again, the fact that the market has been so bullish and we've had these plays has been amazing, because there's been a lot of opportunity to short. You may not realize that. You might not have capitalized on it, but it has been there. Now, as far as the daily here is the gap. The stock closed up here, was above 108. This is before the earnings. Gap down here, rallied, got the drop. So again, this was DFS. This was discovered January 18th. So that's a gap. And then here's the trade we did. Now, what if you can't take this size? You don't have a margin account. Again, you could have bought a put. I didn't call put in this, but you could have. You can trade options with a cash account. You can open up an options account with $2,000. You can even trade options in your IRA. You can buy puts because you can't short in your IRA. You could have done half size in this. You could have done a third, all right? And again, I'm calling these trades in the live trading room. Any questions here by anyone? I was having a conversation with someone the other day, and I realized this, again, teaching people for as long as I have been teaching people. So I teach the class once a month, and I trade every day. But I've been teaching people now for more than 10 years, and it's amazing to me how people trade the market on a regular basis and don't understand gaps, have no idea about gaps, or they're thinking of gaps, or what they do understand about gaps is incorrect, okay? I'm not predicting the gap itself. I didn't short Google here going back. I didn't short this last night. I didn't short this yesterday. I didn't buy a put in this yesterday before the close, okay? I had no idea what Google was going to say in the earnings. For all I know, it could have gapped up to 200 last night, all right? So I'm not predicting the gap itself. If I happen to be in an option overnight, I'm already in it because I'm already in the trade and I'm waiting for it to go, and then something happens and it goes in my favor. And that did happen earlier this year with VA. We're going to talk about that because of but that wasn't earnings, it was because of the accidents that have been happening, the mechanical failures. But I'm not predicting the gap. I am predicting what the gap will do today. And when do I do that? Well, I could have rated the gap last night, or I could have rated this morning in the pre-market. I got up and I rated it this morning in the pre-market. So I'm just predicting what it's going to do today, because that's all I'm worried about. I want to trade it today. I want to get in, get out. It's called chunking it out. Again, we're not investing long-term here. We're actively trading. Even the options that I'm doing, these aren't long-term. A short trade, a week trade in options is a short-term trade for me. And you can trade options and day trade gaps. You can do both, okay? It's just that, again, a lot of people are trading options and they're so worried about time and delta and these kinds of things. I'm trading the momentum. The momentum comes in. It doesn't matter if I have 1 week left, 1 day left, 3 days left, 2 weeks left in the trade. If the momentum comes in big, like it is today in Google, and we just did the trade, you're going to make money. And it's not about trading for pennies, okay? We're not scalping these options. We're trading them. We want momentum. We want $1, $2, $3, $4. And that's where the money is with options, because one, you got to get the direction right. And two, you got to get a big move, because if you don't get a big move, you're basically not going to make any money doing it, or you'll run out of time, even if you get the direction right. Now, this was VA. I didn't update this here since the last week, but this has been a really nice chart, to short pretty much since the beginning of the year. Now, BA had earnings this morning. We didn't do anything with it, but it was a nothing burger as far as I was concerned. We did not go long BA today. We did not short BA today. There are people that are going long BA today because the stocks rallied. And if you went long BA today and you get out before the close, or somewhere now here, 1 o'clock, if you went long this morning, yes, you would have made money going long. It wasn't a trade I did. To me, it wasn't a good trade. To me, I definitely wouldn't have done it. And so we didn't do it. But we were doing BA a lot, pretty much since the beginning of the year. And again, let's look at what is a gap. So this is BA, stock close here, gap down, open, dropped, okay? So you could have bought a put in this, and I did call puts in this. And again, this is well before the mechanical failure started to show up. So the mechanical failures in BA started to show up here. And it's interesting, if anybody read about the BA earnings, again, they came out this morning, they pretty much didn't give any guidance. I don't know how they were able to get away with that. It seems pretty crazy. So again, another reason why no one should be going long that today, because they pretty much didn't give any information about guidance on the earnings, which is crazy town as far as I'm concerned. Anyways, here was the BA that we did. Oh, this was the third. This was the third. Here it was. So I called this 10:43 in the morning on that day, on the Wednesday. I'll go back. It was the 245 strikes. You buy the put when you get the newsletter if you want to do the options with me. The cost here was $3. 30 contracts is a higher risk because advanced trader risk sold at 19. This wasn't even the best exit you could have gotten because I didn't hold it all the way down, which I'll show you in a minute. It was $48,000 profit or 533% return on investment getting out when that overnight move happened, which was because of the mechanical failure. So I called the trade here. This exit is here. Now I want to show you this expiration, though, was the 12th. So here I called the 245s. On the day this gap down here, this was the Friday to the Monday, it was at 230. This is an awesome trade. You can't look a gift horse in the mouth, but I just want to show you here where this was on the 12th. On the 12th, this was under 220. You could have made 10 plus extra in that, holding that all the way down. I did not do that. I don't even know what this was. This could have been 1,000% return on investment if you held it the last day. I just don't think that that was a good conservative decision to do. We got the move. It was a huge, huge trade. Everybody made a lot of money in this. And again, this is, I didn't know that there was going to be any mechanical failures in BA. I rated the gap. I read the gap. I saw that BA was lower on the third. On the third. Again, this was the beginning of the year. Now, what if you took 4 contracts, risked $1,200? I consider that a beginner starter risk. You could have done 1. You could have risked $300. It was a huge trade. Huge trade no matter what. Again, this is getting out on that Monday gap down. So again, this is momentum that we're trading. When we're doing this, we're trading momentum in the gap, okay, which was here, all right? And you also could have done that as a day trade as well. And we did a bunch of day trades in BA, but I'm looking for institutional money. So what has institutional money been doing in BA? They've been selling it. They've been shorting it. And guess what? Institutional money is not going long BA today, which is exactly why, despite the fact the stock is rallying, is exactly why I'm not long it. I'm not long it, okay? Robin mentioned AMD. I did one trade in that. We could have done 2 trades in that, but I did one. And again, another thing we've been doing, not a lot, but a few, we've done NVIDIA's. Again, you've got to capture these things at the right timing, and you got to get in and you got to get out, because you need to book money. It's called chunking it out, and you don't want to hold things too long. Again, today's going to be a great example, because I have no idea what Jerome Powell is going to say today. The market wants to hear him say that they're going to lower rates between now and the summer, June 1st, by the beginning part of the year. I don't think he's going to say that. I think he's going to be wishy-washy, not really give an answer, not say he's going to raise rates, not say when he's going to lower rates, and really it's going to be a nothing burger speech today. Now, I could be wrong. He could actually say something meaningful to give the market a clue what he's going to do this year. But I think he's going to be wishy-washy. And then we'll see how the market reacts, if they believe him or not, whatever he happens to say. He doesn't want to say that they're not going to lower rates, but I don't think they do at the first 6 months of this year. Why? Because unemployment's still too low, and there's no reason for them really to, when the economy has been strong. Okay, so I don't, and the inflation is still too high, which everybody knows, so I don't think they're going to lower rates in the first 6 months of this year. So we'll see what he says today, but this is another reason why you can't risk the farm. I've betted on everything and hold everything forever, because the market can screw up your trades. Most of the stocks that trade on any given particular day go with the market on any day. And if you're not going to read the market correctly every day in the gap, then if you're not picking something specific, you can't just trend trade everything every day. Okay? Any questions here? Let me look before I keep going. Okay. Well, getting back to what I was saying, if this is something that you want to do, you got to know why you want to do it. For me, it was about changing careers, but for a lot of people, they just want to make extra money. And it's the American dream to become rich, successful, and financially independent. And that's great, even if you're not an American. But the fact is, do you have a plan to make that happen? You know, what exactly are you going to do? What steps are you going to take to make it happen? No one's going to ring your bell, you know, ring your doorbell with a lottery check. And if you want to trade the market, you need a strategy that you can use and utilize every single solitary day when you're trading. Because otherwise, what are you going to do? Again, it's a 50-50 crapshoot otherwise when you're going into stuff. There was a webinar, a lecture I was at, this was a couple weeks ago, where someone was asking me where to short NVIDIA. At that time, NVIDIA was a brand new all-time highs. It was a crazy thought to even consider shorting NVIDIA. NVIDIA is not a short. And I said to that person, NVIDIA is not a short. You shouldn't have been considering when to short NVIDIA. Like never is basically where you're at with it. And that's where I'm at with BA. BA isn't a long, not now, not never. And that's kind of how the mindset that you have to be, because you need to look for the setups that are going to make sense. They're going to make money for you right now. Again, you're not a long-term investor if you're doing this. And if you want to do long-term investing, fine. You got to be with the market. You need to be trend trading whatever the stock is. And if an earnings happens that crushes the trend or whatever's happening in the stock that you happen to be invested in long-term, you're going to have a problem. You could be upside down, and nobody wants to be upside down. Nobody wants to be upside down even in the retirement account, even though that's not a margin account, it's on cash. But getting back to what I was saying, you need a focus, and my focus is gaps. So what is a gap? It's very basic. It's very simple. It's not complicated. It's finding the right stocks to trade in the right direction that's more complicated. A stock gaps when the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Everything gaps almost every single day. It's very rare that something would close at 32.02 and open the next day at 32.02. But because something closes at 32.02 and happens to gap down to 32 does not necessarily mean you'd short it. Consequently, if it closes at 32.02 and gaps up to 32.05, that doesn't necessarily mean you want to go long it. So you can't go long every gap up. You can't short every gap down. You can't go long every gap down, and you can't short every gap up. Okay. So I find what a lot of traders want to do is, and they get, you know, really confused with gaps because they try to do it for a gap fill, which doesn't work consistently. So yes, sometimes it does. That's what's happening in BA today. It's not a good trade to go long that stock today. And you could say, well, it's filling the gap. No, that's nothing. It's like if you were running a hedge fund and you got on TV on CNBC or Fox Business with me, you said, well, explain to me what's happening at BA today. You say, what's filling the gap? People are like, what are you talking about? That makes absolutely no sense. Again, institutional money isn't buying BA today. Therefore, there's no play. You may not want to short it today, but you're not going long it. And you don't have to trade the same stock every day. We often don't. Like tomorrow, I'm going to do something different. Today, we did something different than we did yesterday. Okay. So it's not always as simple as taking it in the direction of the gap or doing the opposite. And that's what confuses people about gaps. Now, Tesla was one. This was last week. Tesla really, along with BA, has been one of the best shorts this year. So again, there was negative news actually out with a lawsuit with Musk last night. Actually, last night, again, in the post market, Tesla was at 180. I don't know where it is right now, but Tesla was at 180 last night. It was tanking when the news came out. And we'll see what happens with that if it gets appealed. But we did a short in this last week. Tesla closed here, gap down, open, rallied, dropped. So this was the 25th. We shorted Tesla. We did a put in Tesla. This was the day of their earnings. Similar to Google in the sense that it was the earnings, and we did the day trade and the put. But I watched it today. Tesla unfortunately did not open at 180. I would have loved it to open where it was last night. It didn't. And again, I haven't looked at where that's at right now, but that is still a watch for me. So what happened in Tesla last week? What happened in Tesla last night? There's only one thing and one thing only that can move the direction of a stock. It's money. Not a little bit of money, but a lot of money, or what I call power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and move with the power money people, of which there's a lot of in the market. And again, you can say, well, it's the rich people, it's the hedge funds, it's the big banks, the big traders, whatever. It's because of people like that that you're able to get filled in and out of trades. That's because that's one of the reasons we have so much volume in the market. So when you're seeing what institutional money is doing, if you can read it and get in aggressively and trade with it, whether you're doing options or whether you're doing day trades, and capture the momentum, whether long or short. Again, I prefer to short, but whether long or short, that is your best way to capitalize on making a lot of money. One of my clients told me last week, she did a video, it's going to be on YouTube. She started out the year in her options account with $1,500, and as of Friday, she had $7,600 in her account. She has more this week because we made money. Obviously, we made money today in the Google. That's a phenomenal way to grow your account. Again, it was the overnight moves. It was the gap moves. It was the big moves. It was the Tesla moves. It was the BA moves. As someone, people always say, well, I need a lot of money to do this. No, you don't. You can open up an account with a small account, and if you are careful taking one contract or setting your risk, even if it's $500, $300, whatever you want to set, you can definitely make money doing this. And she didn't do the NVDAs because the NVDAs were expensive that I called, and they were calls. Anyways, she made money in the BA that did this, okay? So that was a really, really big move, and everybody did that did it. Now, we already went over this trade. This was the put. Then I called another BA on the 11th. Let's see where that was, 225. Oh, here. So I called the 225 BA puts here, then a gap down, then a gap down, then it fell off a cliff. That's where it broke 200. It was another great trade. So this was actually 658%, but it was the extension that happened. Again, I say 24 to 48 hours, but sometimes things can take a week. So I'm usually doing the weeklies or trying to give a cushion for that. I didn't think this was expensive. I don't think any of these things have been expensive. NVIDIA was expensive. Some of the market puts have been expensive, if not the dailies, but the weeklies. Again, the SPY is expensive if you're doing it now as a trade on margin. It's actually cheaper to do options right now in the QQQs and the SPY because the price has gone up so much in the last 6 to 12 months. But anyways, we did another BA here. Then we did a Friday BA. I did the 215s. We were early in this. This was crazy. It was $1.50 here. It was Friday. Gosh, this feels like forever ago, but it was only 2 weeks ago. So on this day here, no, it was here. I called it the day before this. That was another Friday, Monday gap down. So this was the BA here, and I called the 215s, and then it gapped down under 215. It opened at 210, and we did this here, and that's why that was so cheap. It was $1.50 for one. This was the biggest trade we've had so far this year. And this is accounted why some of the people have done so well and grown their account so much in just 1 month. So again, when people say to me, you need a lot of money, your experience should have to do with how much you risk and also your cash, okay? And it's an active letter. I'm calling a lot of trades. You say, well, I want to risk $1,000. You have 10 grand in an options account. What if I call 10 trades? You shouldn't have your whole account at risk. So I'd say keep it around 500-600. Don't be in any more than 5 things at once. But again, if you want to do the day trades, we day traded the BA. We day traded this. I think this room video actually is already on YouTube. So I called the trade in this. We got in, got out. Again, I trade this quick in the morning. I rarely hold my day trades all day. But BA was a gap. BA was a put. BA was a short, okay? And again, we didn't do anything with this today. It was like a nothing burger for the earnings, but I thought Microsoft was a nothing burger on the earnings. The only good earnings today really was Google. Any questions here? Let me look. How are we doing? Quiet group here, or everyone's on their tippy toes until 2 o'clock watching their positions. Anyways, making money trading is fun, but you need to use your brain. I've been doing this for a long time, so it's second nature to me. But until you get used to doing it, you need to use your brain. So I'm very focused in the morning. Again, I get up early, I rate my gaps, I have everything figured out what I want to do, and then I take the trade into the open. Why do I wait? Because I don't know if it's going to set up. I got to get the setup. I don't want to trade in the pre or the post market. And it's a wild time to trade and you can't use stops. But I think things through. I don't trade on the fly. There's so many people that trade and they trade on the fly, but trading isn't gambling. You really are not putting the odds in your favor if you're just a 50-50 on the trade. And I say, if that's how you think, you have zero conviction and you probably shouldn't even take the trade. So for me, it's all about the rating system. I want to stay consistent. I want to get consistent results, okay? Some trades will be big, some will be huge, some will be medium, some will be small. The whole idea is to get a string of winners. Some trades I take lose. I have the stats again at the beginning of the lecture here. I have the losers in here. We do lose in some trades. So far this year, though, we are really having a great start to the year. We've had very few losers, but I still put my stop in when I take a trade. I had a stop in Google. And if I had got stopped, I would have lost in that. I don't know if I would have retaken it or if I would have looked for something else to do. But it's the rating system. That's the meat and potatoes that tells me, that's the strategy that tells me that it's going to work or not. And again, my goal is to find momentum. My goal is to find and follow and trade with the institutional money. I prefer to short, but we do go long. And again, the longs I did this year was NVDA, and we did do AMD, but I only did one trade of the AMD. Somebody's asking something here. Hold on. Is the amount of risk your max loss for the trade? Well, if I'm doing the day trade, then I put the stop, it's a liminar stop, I call it a hard stop. Well, it'll stop me out if the trade loses. I don't know what you mean by max loss. That's not my max loss on the day for the day trade. I'll allow myself 4 or 5 day trades, but I'm not taking 4 or 5 day trades. But if I take a trade in the morning and I get stopped in a day trade, I will look for a second trade, yes. For my options, I'm not killing them, if that's what you mean for my options. Now, that's not a stock swoosh rule, or it's not a Melissa rule. That's, I don't kill my trades. So if you take an option and the trade is down at 50% and you want to kill it, that you can kill it, and that's on you. And some people are doing that. I don't do that. So like say I take a trade and it goes bust, then I run it into the end of the last day and it's all down. And you'll see that if you scroll back at the beginning of the stats for last year. So I have full losses and options that I lost in. Like if I do a trade on Monday that expires on Friday and it never goes right for me, or maybe it's up 10% or 15%, I'm not getting out of it then. Like it just doesn't go my way. Then I'll let the whole trade go into the last day and I may lose in it. Okay, actually I lost in JPM. We did a day trade in JPM. We went long on that in earnings. The day trade worked. We had a high of the day exit in that actually for the day trade, but I had done calls on that day. I forget the day. It was the earnings. It was like the beginning of earnings season. It was the first day of earnings, and then it never went right. It was up a little bit. It was never up enough to get out. It was never up 50%. I let the trade right out. I lost completely in it on the Friday, and that should have worked actually, but that didn't. But the day trade did. But that's your personal choice, Hollis. Anyways, the benefits of trading gaps is you can trade fast and be done. Now I had stats in here from this 1 week. This was an average rate. This wasn't a week where we had 1 million fabulous, huge trades. This was the first week of the year, first full week of the year where we had one day where we didn't have any trades. And again, this was an earnings season. It's earnings season now, so we typically have trades every day. I did one trade in a retake in BA on the Monday. Tuesday, I did another BA. No trades on Wednesday. Thursday, we did 2. And this was the, oh, here it is. It was the 12th. You can look at the, oh, I might have it in here actually. This is long. So this was an average week where even we had one day we didn't trade and we had one stop. So I'm just going to quickly go through these. This was a BA short and I got stopped. So I got stopped in this BA, it lifted, and then I retook it later in the day. This was the 8th. The later trade ended up going really, really good, but I got stopped in the first one. The 9th I did BA, I got in, got out here, got the drop. This is a 1 minute. 10th, we did nothing. 11th was Tesla. Again, this has just been amazing, actually. But I did a quick trade in this, got out on this on the 11th. And then I also did BA on the 11th, which was a better trade, got in, got out of that. And then the 12th was JPM. So here was the day. So this close here gapped out. We went long, rallied, got out. But I did the calls, and it pittered out, and it broke the low, and it based out, and then it dropped, and then it tried to rally, and this was going on, and then it never did it. It just never went right, and it should have gone right, and there were other bank earnings too. This was carryover into the next week. It wasn't this Friday expiration. It was the 19th, I think it was. It just didn't work, so I lost in this, and I lost completely, and I could have gotten out of it and saved something. Actually, if I'd killed it on the day I did it, I could have saved. So that was a good week, but again, how do you make money in the market? Take the trade, make the money, get out. Take the trade, make the money, get out. Take it, book it, take it, book it. Because again, sometimes you're looking for things that really aren't even there. I mean, a lot of times, like somebody said to me, like they had 600 indicators on their charts. I thought, oh my God, this man can't see anything. He can't see a candlestick. He's got to be blind with that many indicators. Like he's looking for something that doesn't exist. There is no 100%. There isn't, okay? You're trading momentum. If you're gonna make money, that's what you need. You gotta get the direction right, you gotta get the timing right, and that's it. Less is more, okay? My charts are very clean, and I'm using the rating system and doing the prep work in the morning. How did I know that BA would fall? How did I know that Tesla would fall? I didn't know what the earnings would say. I didn't know about the mechanical issues. I was reading the price in the chart. And again, my charts are very, very clean. Less is more. If you have too many indicators, chances are you don't know what you're doing. Take them off. Take them all off. See if you can survive. Okay, that's called zero conviction. You need clean charts, simple in the charts with the price, because what you really want to do is focus on the price. But the key to getting big trades is momentum. It's the key, whether you're doing options, whether you're doing day trades, but they really can pay if you're in an overnight trade in an option. They can really, really pay. And when I trade, I'm looking for momentum. This is what gives me an edge, and it will give you an edge, because that's how you can take $1,000 and turn it into $5,000 and turn it into 20, and not in that short of a time. It's not about risking your whole account every day or looking for piggy targets in every trade. Not every gap is equal, okay? Yes, I like Google. Is Google better than Tesla? No, okay? We're playing it, it's good, it's fine. We're making money, it's a trade, it's a positive trade. It's not the best thing in the world. We did it, it worked, it's fine. You shouldn't be holding everything to a piggy target, okay? Not every gap is created equal. Momentum trading is one of the most profitable and fastest ways to make money trading. Learn how to take a position in stock in anticipation that the stock will have an explosive move. Again, it could be up, it could be down. I prefer the shorts. These enormous moves happen in one direction and happen fast. Momentum trading can be very profitable. And again, it's the institutional money that's creating the gap in the first place. And they happen every day or most days, okay? But we're looking for the good ones. And understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that's how you know when the power money will flow to pay you, because obviously that's what you want. So how do I figure it out? I use the rating system. If you came and took my classes, is what you're going to learn from me. You're going to learn the 26 points. Then you're going to learn the entries and the exits and the targets, but it's really the rating system. Now, if I'm running the room and you're there and I'm calling the trade, I rated the gap when I got up. I call it, I like it, I say it rates good, I call the trade, we do it. You should be rating them in the morning too before you enter the trading room. And then that's the point of learning. And again, if anyone is serious about the class and would like a trial for the next 2 days, you can email me at melissa@thestockswoosh.com for a trial for the room. But for me, I do the rating. Then I call the trade. If I'm sending the newsletter, I did the rating for the newsletter too, okay? But you gotta know how to do this so you know what you're doing, because you're risking your own money and you're pressing the button, not me, for your own account, okay? Even if you think that stock is not going a certain direction or going this way or that way, whatever, it's, even if you think it's not there, it is. And this is what I always say, and this is why people say they get tripped up and they say, oh, it's rigged, the system's rigged. No, it's not. You just didn't look at what was going on right. A big flow of money going a certain direction is what moves the market stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of the power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. And this is what trips people up, because they could see a stock rally and they could say, oh, this is a long, but it's not. You understand? Again, just because something rallies and it's green on the day doesn't mean you should have gone long it. And just because something falls on the day doesn't mean you should have shorted it. I haven't looked at NVIDIA yet since this morning. I don't know if it's red, if the market's red, if NVIDIA falls today, doesn't mean you should short it, okay? So it's about finding what's really going on there and then playing with it. Now, can you do this if you're a beginner? Yes. I teach people nuts and bolts from the beginning. There are people that have a learning curve that have been doing this for years because they don't understand gaps. So whether you're brand new to trading is really neither here nor there to learn it. You can still learn it. You can go through the process. You can take small size at the beginning. You could start in a demo if you want to. You can trade small size. I say start trading. We've been doing so well, it would be a shame if you were on a demo the last month, actually. You would have missed opportunity to make money. So, I mean, people that did the class in December have already, surpassed what it cost to even do the class in a month. This was Tesla we did on the 11th, 230 puts that expired on the 19th. It was a good trade. Tesla's a little pricey, but you could have done one, 575 for one. Again, we got the move. Let's look at the chart. Tesla 111. Tesla, oh, this was way before any of this. Oh, here. Oh, here. 9, 10, 11. So we did it here. What did we do? The 230s. So stock close here, gap down. We did the 230 puts. Boom. There it was. Again, you see here how people went long here. It was a crazy, crazy thing to do. This was the trade. This was the trade, the short. This is a nothing burger. So yeah. Anyways, for me, my edge really is not just the fast trades, but shorting. And then of course, getting the momentum, which I'm always trying to do. And I won't go long. We've had some nice moves to the upside, like I said in the video, but there haven't been a lot of things I've been in love with to go long. They said, well, how can that be? I don't know. I could change my mind. There's a lot of earnings that didn't report yet. The next 2 weeks are really big. Apple, Facebook, lots of things are going on. We did go on Netflix. We went on that. Now that I'm thinking about it, that was one of the first earnings. But there's lots of things that are going to be reporting it, and I don't know what I'm going to do because I'm not predicting the gap. I'm not predicting the earnings. I wait for the gap. I see the gap. Then after I see the gap, I rate it. So again, shorting is profitable because of the fear, the panic that comes in. And when I rate the gap, I can determine if it's going to work in my favor or not. So I'm looking for big moves of the day, early confirmation, and a high probability of directional bias. If you come and learn from me, you will learn the 26-point checklist. You will learn the rating system, and then you can do it for yourself. But again, the benefit is in being in the live room. The benefit is getting my options trades, but you have to take the class in order to sign up and join the live room. But it's an investment. It's an investment in yourself. It's an investment in your future. And you definitely want value in the education. A lot of people pay for a low-cost, cheap education. They get no value out of it. And then they take bad trades along with that. So they lose money in the trades, they lose money in the education, even if it didn't cost a lot. It's a waste. Think about what you're doing and spend your money wisely. Even if it's something that's expensive, it may be well worth it for you to invest in yourself in the future. So it's a class where I teach the whole system. It's a full 2-day class. It's all weekend. And the next class isn't until the end of the month. So it's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class is February 24th and 25th. Again, I can't even believe tomorrow is February, but the class is $69.99. It's 9 to 5. Class is online. I'm doing a combo special This includes the trends, so it's $500 more. You get a discount if you sign up for this together, $74.99. And again, I'm doing an earnings season special. This is going on for a week. If you sign up by February 9th, it's the Friday before the Super Bowl, for the combo, you get the trading room free to the end of the year, the newsletter free to the end of the year, and the market report subscription free to the end of the year. If you want to join and you want to sign up for this, you can start trading. You can sign up and start trading right away before the class. I urge you to be, go slow till you understand what we're doing for the class, but I do have people that have already signed up and are doing that. Any questions from anyone about anything at all? I think I did good here with time.
I have a question.
Go ahead.
Did you short Tesla on earnings?
Yeah, Tesla, that was the one that I had in here. We did this.
I apologize.
No, that's okay. That's okay. I'll go back to this because I had this in here. Now, Tesla, again, let me go back to the first chart. Tesla was at 180 last night. We didn't short Tesla today because it didn't open where I wanted it to open. Crap, where did I have that? It didn't open where I wanted it to open, but I thought I had it in here.
That's all right. No, I was just curious because I would remember them announcing, with all the competition, they had to cut prices and lower the margins and stuff like that.
Yeah,
and I knew they were still going to sell every vehicle, but with lower margins, their earnings were going to have to suffer.
Yeah, it was the 25th. But the lawsuit happened last night, and it was down this morning. It did gap down this morning, but it wasn't down as much today. But that's a watch. That's a watch. I don't know where it's at right now, but we did it on earnings. It was the 25th. There.
Last I looked, it made a beautiful recovery. It's back up above 190.
Well, I wouldn't say that's a beautiful recovery, but it's
it was from 183.
Oh, well, that's true. That's true. From last night. Yeah, if you got it last night for sure.
No, but
well, thanks so much for having me.
I did send you an email. I can't wait to be in your room and see what you do live.
Have a wonderful, successful day, and hopefully we'll see what the Fed does in a half an hour. Good luck, everybody.
Hey, thank you so much for being here. Great presentation, and I have to give you credit above and beyond with the shape the market's in, finding shorts and profiting from them. You have an amazing talent. Thank you for being here today and making such a generous offer to our audience. It's always a pleasure to have you on Traders Corner. Ladies and gentlemen, Mrs. Melissa Armo of the Stock Swoosh, an expert at trading gaps. If you're interested in learning a rules-based strategy that has the potential to garner fast, big profits, trading just 30 minutes a day, you can find Melissa's special offer in the chat box, and she can always be found at thestockswoosh.com. Thank you again for being here today, Melissa, and I look forward to seeing you in your room. That will bring us to our next presenter. Let me go ahead and make him the presenter. Who has been a trader and trading educator for over 40 years. He has over 1 million views on his 4-minute drills for traders found on YouTube, and he's a former commodity specialist for Payne Weber and has managed extremely large trading accounts as a commodity trading advisor. Here to present the one thing that turbo boosted my prop trading qualifying is Mr. Norman Hallett of the Disciplined Trader. Welcome back to Traders Corner, Norm.
Thank you, sir. Thank you for having me again. I haven't heard Melissa before, but she's an action woman and she likes to go short, which is really the right way to do it.
Hey, stairs up, elevator down, and the moves down happen fast, panic, anxiety, everything. She's got a knack for it.
Yes, keeping up with her. She's a firecracker. I like her.
I love her to death. I love you too, man. I still got my hat.
Oh, excellent. Excellent. All right, well, today we're going to discuss what I call the one thing. I'm going to focus today on what I believe is a concept that you may not have really ever considered, and one that you may have been led astray from because of your conditioning to follow rules, which you should. But the rule that I'm going to talk about needs to be adjusted in most respects, and it's all about the money management part of it. But we'll get into that in a second. This concept it limits losses, and really in trading, if you can limit your losses, you can keep that positive expectation, which is something that is sorely needed when you when you trade, especially those who are not haven't been consistently successful up to now, who have been trading for years and maybe struggling. Those who are new, you take a look at losses that you have, and you experience them really in the wrong way. You tend to think that they will continue. Don't want to take the next trade because you may lose. You lighten up instead of keeping the same potential for every trade. You do things from fear and anxiety that you wouldn't normally do. And I want to give you this one thing today, this one concept that I believe will help you to allay those fears and operate your trading plan in an even more effective way than you may be doing right now. Look, there's a lot of trading plans out there. I've written several books on constructing and running trading plans. And when I'm given trading plans by professionals, I'm always surprised on how they could make money if they just followed them. And so sometimes it's easier to create within a trading plan potential to follow it rather than trying to change yourself. Sometimes it's better to try to change your plan to fit yourself rather than copying somebody else. I know I've just said a lot, so let's get going with this 45-minute presentation. Let's call it 40 minutes. I'm the founder of the Disciplined Trader. We've been around since 2000, the year 2000. And about 7 or 8 years ago, I shifted a little bit from the potential for the mental and emotional part of trading, which was my focus, to simple trading plans, which encompass some of the things that I've been saying. And I'm working right now on a new site called Prop Trading University, where I believe that day traders will all end up in the end prop trading once they realize the potential of it. So let's get going. Appreciate you being here. Today's presentation is dedicated to Riley, my 16-year-old boy who just passed over the Rainbow Bridge a week ago today. Actually, a week ago tomorrow, and we're just kind of getting over it here. And I think by dedicating this to him, I'm going to give him a lot of the respect that he deserves. Anyway, a terrific member of the family has escaped into heaven right now. All right. Thanks for being you, Riley. All right. What I'll be covering today. Who am I? Why should you even think about listening to what I may have to say? I want to talk about the one thing. I'm just going to focus on one idea, give you a couple of examples, and we'll wrap it up. I also want to talk about the current prop trading landscape. I call it their money, your profit, and why I believe that this is something you may want to be focusing on if you're a day trader. All right, little about me. I graduated from the University of Cincinnati in mathematics. I was struggling to get through engineering. I went as an engineer. My brother was an engineer, and I went to the university. He went to the same university. So work study. So we were able to work a quarter and go to school a quarter. It was a 5-year degree rather than 4 because of the work study, and got a scholarship, wrestling and scholastic scholarship. But neither one of them lasted very long, as I wasn't as good a wrestler as I thought I was, and I wasn't as good a student as I thought I was. In some of it was mechanics that got me. I don't know why that particular topic. Anyway, I added up all of my credits and graduated in mathematics with my bachelor's degree and decided that I'm going to go out now and start to make money. But while I was going to school, I was working during school, as I mentioned, working at the Prime and Wine restaurant in Cincinnati. If you're out in the Kenwood area, you know what that is. If you own one of these cars, you can probably just sell it and forget about listening to my presentation. You'll be fine. Prime and Wine restaurant was a salad bar type of a restaurant, and it was, with the sneeze shield and so on. We had slabs of prime rib, and you got your own salad. But I soon realized, as I realized in trading, that there are certain right ways to do things and places to concentrate. I realized that in the restaurant business at that time, that the money was not in food, it was in liquor. So I was offered a job with a place called American Events Corporation that was opening a new club that was a competition for Studio 54. I had actually been a dance instructor also and so on. and I had some experience in the restaurant business. So I seemed to be a pretty good fit for what was called the Park Avenue nightclub. And the first one we opened was on 500 North Water Street in Milwaukee. It had it all. It had the dancing women, it had the dancing men, it had the lit up dance floor. We charged, and this was in the late 70s, we charged $1,000 a year membership, which was huge at the time. We never really made the Studio 54 status, but we did get some respect in what we were doing with our nightclub. And I was a manager for them. I didn't get paid a lot. I just got a lot of glory, and realized I was working hard. And in this business, in the nightclub business, you can't do it for very long or you'll lose your mind. And rather than losing my mind, I decided I'm going to head over to California. I'm going to head to San Francisco. And my brother who was a fan of a guy named Harry Brown. Harry Brown was one of the original gold bugs. And I decided I looked in the newspaper, and I took a job selling gold on the telephone, gold options. It was my first experience in the realm of investing. I sold a few people I actually had one sale, and I walked in this third week I was there, and this is what I saw: an empty place with the desks gone, nothing there except for this plant, of which I abruptly lifted it up and put it in my car because they owed me a commission, and I was angry. I was actually chased by the, not chased, but I was followed by the landlord, who said, "Hey, that plant is mine." And I discussed my situation. He says, "All right, go ahead and take the plant. I got more worries to think about." But that experience really showed me people's, it ginned up my excitement for the potential of gold and silver at the time, as well as show me that there were some people out there that I could help with the math part of it and the mathematics involving when to buy options, when to buy. I really transitioned into futures pretty quickly. But before I did, I wound up running one of the largest option firms in the country back in the early 80s through 1988. This is not a picture of that, but it was a very similar. I don't have a snapshot of that at the time, but this looked very much like the room. I had 62 brokers under me. This looks like it because it's all men at the time. There were two women in the room that were either at the top of the performance or the bottom. Seems that there's a lot of potential for women in this business. I'm thankful that they have seen the light, because a lot of women can make some really great traders. In fact, I believe they can make the best traders in any event. But this was the similar room that I ran. And what I learned here more than anything else was that I was responsible for making sure that they did the job, that they were doing the best for their clients, recommending. We had newsletters and so on. They recommend, but placing them in trades and so on was a matter of them analyzing charts and so on. I noticed that the simple trading plans, those trading plans that were easy to understand and had less lines on them and didn't have contradictory or repetitive, no RSI and MACD on the same chart. I mean, why do you need two momentum indicators? I realized, and I would call somebody in that wasn't doing well at the bottom of the tote board, and I would look at and I would have that red pen just saying, get rid of this, get rid of this, get rid of this. Very few adding I did. I realized that traders like to add stuff to their charts rather than just be satisfied with what the simple approaches are giving them. So I'm a guy that writes simple trading plans, and I've done it for professional traders for the last really almost 30 years. I've written several books on how to design and construct effective trading plans. This is one that still is available if you ever need it on Amazon. And there have been books written about me and some of the inspirational things that I've done on stage and so on to help traders to be motivated to do the right thing in trading rather than fear that they won't be doing the right thing. You've got to have some guts when you trade. I've got 4 decades of experience, and it's now time to move through to the base of the presentation, and that is the importance of placing stops. This is the background to what I call the one thing, okay? You need to place stops. Now, I'm not going to sit here and argue about whether a mental stop is good enough or a physical stop. To this day, I put in the physical stop. Now, sometimes if I'm not sure where to put the stop in from the standpoint of how much risk I want to take at the moment, as I'm planning, if I see a trigger, I may go for that trigger. And when I will put the stop at a further distance than it may eventually wind up. But I always put the stop in because I want to make sure that I'm protected against the loss that's beyond what I'm willing to sacrifice on any individual trade. And you should be too. In these markets, it's usually something like 0.5%, 1% of equity, sometimes 2%, depending on how you trade and how effective your trading plan is. But the point is that whether it's a mental stop or a physical stop, traders need to have a point at which they have defined and therefore will exit the trade. Now, I'm not telling you anything new here. What I am saying to you is that it is not an all or nothing event. In other words, when you put in a stop in a trade, most trading plans are written where you put in a stop and the market either matures in your direction and you manage that the profit that's being built, or you wait till the market recedes and hits your stop. In other words, you're either going to make money or your stop is going to be hit. Now, it's true of the vast majority of cases. It's a mental thing that happens when you start losing in a trade without hitting a stop, not at the point of the stop, but when you start losing in a trade, you start rooting for the trade. You start thinking, well, this could come back. It's really not. It's going sideways. It's deciding. But hey, the trigger that I had is a good trigger. Should really evolve. You start wishing and dreaming, because the truth is, the further that you get, the further the more candles that are formed, no matter what time frame that you're trading. I trade futures for the most part in my day trading accounts, and the further that you are from your entry trigger, the less that trigger has an effect on the current price. So the longer you wait, the more that the more you are likely to be in a 50-50 situation, which is not the advantage that you want to be in. You don't know, you're away from your trigger, which gave you the advantage because you tested that trigger. And therefore, the further you move from it, the less that trigger has an effect on the current price. And therefore, you're moving into a 50-50 situation. You really should be getting out. And I'm going to show you what I mean by that. So the background to the one thing is that when you put in a stop, it doesn't mean all or nothing. It means that it means you've got to continue to monitor and manage so that you can lift that stop to decrease the potential loss. And I'm going to show you a couple of examples of how you may want to consider doing that. So the one thing solves the difficulty of taking a partial loss. In other words, it's difficult to take a partial loss, so you need to have some, because really you've started in the beginning by saying this is the point at which I will take my loss. It's defined by the recent low in the market, and if it breaks that low on a long trade, I'm going to get out. And so it's defined by something that's obvious, and but to change that, it can be difficult because you're in that mindset that I'm either going to take it all, I'm either going to take my loss, or I'm going to get my profit. So let's get into some of the notion of it. Just because you set a stop loss, it doesn't mean you have to stay in the trade if it's not developing, because psychologically you wrongly accept a full loss. Okay, that really is the bottom line of what we're doing here. Okay, now the further you move away from your entry trigger, the less influence it has on price, and the more you should be looking to exit and preserve equity. And there is a special number, it's 6. It used to be 5 in my mind, and in my testing, but it's for some reason it's become 6 in the recent tests that I did last year. But 5 or 6, 6 is a number, and I'm going to show you what that means. Here is a chart, a typical chart. Market is flowing down. I like to use this 8-bar exponential moving average. I used to call it the golden mean, but it's in many, if not all of the trading plans that I've written for myself or anybody or any professional, anybody that's hired me to do it for the last probably 7 or 8 years. The 8-bar exponential moving average, really like it. I trade off the 5-minute chart in when I'm day trading, and I'm out at the end of the day. Okay, and you don't have to, what I'm telling you here is it can be used in daily charts, can be used in any kind of charts. But let me give you an example of what I mean by the one thing and what the number 6 is. This right here is one of our signals in our loaded gun simple trading plan, which I'm going to offer you at the end at a special price. This loaded gun simple trading plan this is one of the triggers. When this extension bar crosses the 8-bar exponential moving average, this is a buy point. Okay, now I'm showing you a trade that did not develop, and that's the example here that I'm trying to explain to you that these are not every trade is going to work out. This particular trigger, when done right and in the right place, just don't do it, because when you see it, it's got to be set up a bit. But it's almost it's a little over a 2/3 success trigger, meaning that it'll give you within the first couple of bars, you're going to get a pop enough to take a scalp, which is part of what I like to do in a total trading approach. So what you have here is a trigger that I really like, that once, let's say whatever it is, the one you like, and it doesn't work out. The market starts to go sideways. Okay, now and what I do is, as soon as I take this trade, I put in a stop of ticker 2 below the low of the formation is actually these 2 candles right here. Whichever is lower, I put in a stop. So got my stop in here. That's the prescribed stop that I was talking about that everybody really should have. Okay, then after 6 bars, I'm noticing 1, 2, 3, it's not happening. I'm starting to say to myself, I need to now start to look. This is less likely to happen in the 3rd bar, 4th bar, 5th candle. And I'm saying to myself, I need now to start to defend a bit, because if it gets to that 6th candle, I want to be out. I am out at the 6th candle. Why? Because that's enough distance for this trigger to have a small enough effect that I really shouldn't be in it anymore. I'm now floating on my own, and that's not the way to trade. Because one other thing that I want to mention here is time. A successful long-term trader, day traders especially, need to honor their time. When you're stuck in a trade like this, waiting for something to happen, you would have been out of it here in your stop. But if it just keeps going, you just wasted a lot of time. You're better off exiting the trade at the 6th candle and then looking for the next trigger where you have your advantage. Okay, can't be any more simply said. So what happens at the 6th candle? What I usually do is, if I'm excited about something, if this particular formation came from a very big long uptrend and I believe it's going to continue and I want to stay in till the 6th candle, I'll put my stop underneath what's accumulated. In other words, if I want, I'm out at the 6th candle. I'm out at the 6th candle, and we have what we call nuances. If I decide to stay in, I don't want to stay in just randomly. I want to stay in at a point where I'm losing less than I would have before because it's not working out. So now I'm looking at a new formation. I'm looking at a sideways formation. I'm looking at a couple of lows on these candles, and I'm counting the wicks in this particular case that have given me an idea of if the market breaks, I want to be out of it. So actually this line would really be snug to a tick below this particular candle. And what am I doing here? What I'm doing is I'm saving the money between here and here, because this trade is much less likely to happen now that I've spent 6 candles. So generally, I will say that 80% of the time, I just get out, because I've learned that my triggers are good enough. This is one, we've got several of them. I've got the trigger that, why should I spend time, playing around and waiting for this to extend and never break this and just go sideways? Let's get out, take my small loss from here to here, nice small loss, okay, and not risk that mindset that 90% of traders have, that I'm either going to make money or I'm going to lose. I'm going to lose right here. Well, you would have lost it. I would have been out here. Okay. The market continues higher. I mean, the market continues on. And here's another similar, not quite as strong a symbol, but it's a similar take for this position that I like to be in. And so I would buy a couple here, right? And I would put my stop at the same place underneath the formation as usual. And when I got to this, in this particular case, 1, 2, 3, 4, 5, 6, in my system, I would have taken a scalp right in here. What I do is I actually measure the size of the body here, and I extend that. And because the power of crossing this, the 8-bar exponential moving average, it can be very powerful, and I expect at least to move the size of this this body. And so I would have projected it up here. I would have been out with my scalp. I always take a couple of positions, treat one as scalp and treat one as a runner, because I want to be in that big trade. But I like to take, especially when you're trading, prop trading, it's important to pad yourself in any event. But here's 1, 2, 3, 4, 5, 6. The market is not working out again. Okay, we're already past that. We're already at the 6th candle. I put my, there it is right there. Again, I'll put my, if you want, for those that want to die to stay in, go ahead. I'm out here at the 6th. You would have been out here, right here, with a little more of a loss, but it wouldn't be this loss. Okay, so the idea here with the one thing is that you need to start to consider your time. You need to start to consider your professional attitude toward this, and know that just because you put a stop in on the original trigger, you don't have to be taking the loss there. It's not an all or nothing thing. Okay, let me show you one other thing that I like to do as far as measuring these. As far as figuring that it may be time for me to get out, rather than taking a bigger loss. Here's another. Here's a chart. When the market moves too far from the moving average, that's another thing. You tend to right here. You see what's happening here. The market moves higher. You're doing very well. You may be trailing your stop if you're smart. But look what's happening here. I'm sorry. The market. That's interesting. All right. So we've moved. When you move away, don't worry about this line. When you move away from the moving average, whatever moving average you may be using, the further you are from, you see how this hugs the moving average nicely. This is a market that should continue higher without much discretion, and you had the big bar which pulled it away from the moving average. When this happens, you often get a snapback. In fact, I would have to say more than not, you get a snapback to the moving average. So I'm always looking for that distance between the price and the moving average to be extended, where I'm saying, hey, that's a little extra gravy they're giving me. Maybe I should be taking it. And when you see this is a reversal pattern. This is an engulfing pattern where the trades here have engulfed all of on the downside have engulfed all the upside trades here in the previous candle. When you see this, this is where I would be taking my profit on this trade. Especially if I had multiple positions, like 3 positions, I take a scalp here, I ride the rest up, or I put my stop in right underneath here where I would have taken my profit here. But the idea is that when you move too far from a moving average, expect the snapback. Okay, you can re-enter at the snapback, or sometimes it becomes a new trend down. But it's usually the end of. Oh, it just took a profit apparently. That's right. I had the idea here is that when it moves too far from the moving average, and you see a reversal pattern, consider taking the profit, as opposed to continuing with 2 candles back or the previous candle low, and then just taking a profit, taking a higher loss. So always look to take less of a loss, and don't worry about short-circuiting yourself. You've got a reason, you've got some good reason to believe you'll have a snapback, or a good reason when you've spent 6 bars to think that it's not going to happen. Okay, I've just given you a couple of examples. There are more, but I just wanted to give you the one thing, and that is put in your head that it's not because you put in a stop originally, or because you're trailing a stop, doesn't mean that's where you have to be stopped at. You can save a little bit more money along the way, and that's very important to prop traders. Okay, here is just another simple movement. Here you see how far we get from the moving average here. Now it doesn't look like much here because you're seeing what happened afterwards, but you know, you're thinking here that this market could go much higher. Well, look what happened. We have another engulfing pattern here that makes sense to consider maybe getting out. Okay, and look what happened. The market gets, this is a lot of time. I mean, sure, you by getting out here, you know, maybe you left this amount behind. If you had stayed in all of this time, generally is not worth it. You're better off looking for another trigger, because here's another trigger right here that would have gotten you a nice movement right here. So the idea is to get yourself a frequent, reliable trigger like we have in loaded guns, several of them, and use those, as opposed to continuing to dream that a trade will continue in your favor. Here's another, you can see another movement pass. This is a different chart, but it looks kind of the same, where the market tends to fade out or string out until it reaches the moving average, and then in this particular case, reversed. All right, look, in today's trading environment, the best approach to risk management is trading someone else's money. I mean, you talk about risk money. I have adopted almost 90% of what I do right now is help traders to get paid trading somebody else's money. It's called prop trading. If you're into it, I want to show you something about it right here. A couple of points. If you're not into it, I want you to consider it, because in today's trading environment, you can be trading somebody else's money and be paid 90% of the profit. Now, I was a commodity trading advisor for Payne Weber. They paid me 20% of what I generated for several $1 million that I was trading for clients' money. That's a very stressful thing. Believe it or not, trading somebody else's money is it can be a stressful thing, especially when you're trading individuals that you're communicating with. And I was paid 20%. Here, I could be trading somebody else's money. In this case, a prop firm's money, which is usually, could be, you know, individuals that contribute money to a pool, could be a pool itself, whatever it is. It could be a hedge fund, but there are many more and more firms are opening branches that are called prop trading branches, so that they're allowing you to trade their money, and they're giving you 90% of the profit. And I'll tell you why in a second. But as a CTA, I wasn't making nearly that kind of money. And or you can be a prop trader. You can, by trading, you don't need a license. You just have to prove that you're a decent trader, and then you will be assigned money to trade on behalf of the company, and you will earn 90% of the profit. In fact, the firm that I've been using, Apex, paid me 100% of the first 25,000 that I earned. And you can trade several accounts. You can trade many accounts. I won't get into that. We can talk about that at some other point. If you're familiar with prop trading, you know what I'm talking about. But the prop trading firm, they're going to fund you for 50, 100, 300. Right now, I just got 2 more. I just qualified for 2 more $50,000 accounts yesterday. Each time you qualify, and this is with Apex, which is, I did a study, I'll show you that study in a second, but I've chosen Apex as the firm that I want to do business through. And I suggest that you consider them, along with Top Step, which is another firm that I've passed their qualification. But these are the first 8. I got 2 more yesterday, and of these, 3 of them are $150,000 funded accounts, and 7 of them are $50,000 accounts that I can now earn 90% of what I generate in profit. Now, why would I have many accounts? There's many reasons for that. One is that if you're building a business and you happen to bust out an account, in these accounts, in the $50,000 account, at least when you start trading it, and in the evaluation process, you can only lose $2,500. If you lose $2,500, if that 50,000 say becomes 47.5, then you've busted out the account and you've got to re-up the account. You got to reset the account, and they charge you $80 to reset the account. To test, originally they may charge you, right now they're charging $60 for the $50,000 account. They were always giving discounts. Right now it's $60 instead of the normal $167. It's $60 a month to test for the account. And what does test mean? It means that you have to make $3,000 before you lose $2,500. Okay, but it's not just that. They count open trade equity, meaning that if you're at 51,000, then you can't go below 48.5, if you understand what I'm saying. So you need to continue to progress. They'll allow drawdowns, but they don't want any deep drawdowns. You have to think like a professional trader, and you can do this once you have the kind of quality trading plan that was really meant to approach this kind of prop trading. Okay, it's doable. People are doing it. I'm doing it. Those that are following me and allowing me to coach them are doing it. And I just want you to do it also if it sounds good to you. And why risk your own money when you can risk money? Yes, you're paying $60, and maybe if you're a new trader, maybe it'll take you 2 or 3 months to pass, but it's like losing $160 to be granted $50,000 now to trade yourself. You can't trip over the small numbers. You may have to reset your account 3 or 4 times, and maybe you'll have $300 or $400 into it, but it's not the kind of $5,000 losses and $1,000 losses that those are taking with your own money. So you really want to consider this. Okay, I just wanted to show you, I have this hanging on my wall. This is the first $1,000 that I took out of prop trading. I hung it up. I was in, like I said, I was in the restaurant nightclub business when the first dollar we took in, we hung up on the wall behind the cash register, and that was my version of it. I have it on my wall right here. This is back in May when I took my first $1,000 out of the first account that I qualified for, the first $50,000 account. But I want to. There's a study that I did for prop trading. If you're not new to prop trading, or if you're not satisfied with the firm that you're dealing with, I did a study. 7 of the 7 top firms, and if you write to me at admin@thedisciplinedtrader.com, admin@thedisciplinedtrader.com, I will send you that study, and you can see why. I'm going to just leave it there just for you to write that down. Admin@thedisciplinedtrader.com. Just say, hey, send me this study on prop firm. I'll send you this so that you can read it. But the winner was Apex, and the 2 criteria that I had weighted criteria. The first is who's been around the longest and who's paid out the most. Apex has now paid out over $100 million. Right now, they've been paying out. I was keeping up with them for a month. They had a monthly average of 6.5 million actually, and it got higher and higher as the month went on. It's 10 million in December, 9 million in November, and so what I want to see is growing number of payouts that they have, of which Apex is qualified, and they've been around the longest of those that I compared. So they have traders from 150 different countries. They got a good rating with Trustpilot, which is neither here or there for the most part. But I want to show you just one thing. This is part of the charting that if you write admin at the Disciplined Trader, I'll show you. But here's where one should start. I used to say start at the 150, but I've learned that the most important thing for a trader is to start to get paid. Once you get that $1,000 to $2,000 or $3,000 in your account that's wired to you twice a month, it's all real. And all of a sudden, that reality starts to accelerate your success. So I'd rather you start at 50,000, where you've got to make $3,000 before you lose 2,500. And I won't explain exactly. There's a little bit of a nuance in how they judge the drawdown. But if you have a trading system that is quality, you won't be worried as much about the drawdowns. It's just as simple as that. And I can show you some techniques in padding away from what I call the red line, which is that point at which you've lost 2,500 from your all-time high in the account. So I want to, and the truth is that when you get qualified and when you start trading money, that red line doesn't follow you. You can make as much as you want over time. So it's a very, but you know what it is they know that 90% of traders are not going to be successful. 90% of traders are still going to get in their own way when they trade. And all they're going to do is continue to pay fees. Sometimes it's as low as $16 when they give 90%. Right now, it's 3 times this because it's 70% off. So you're talking about $50. I wasn't even 60. It's $50 right now for the less than $50 a month to be testing for a to be qualified for a $50,000 account. Okay, I just wanted to show you this one line and so on. I kind of like this right here, the 150. Even though you got to make 9,000 before you lose 5,000, that distance from 5,000 can make things comfortable. But I'd rather you have multiple 50s than 3 150s, and there's reasons that I say to do that from a multiple stream of income standpoint. Okay, again, here's a link that I also want you to write down. It's thedisciplinedtrader.com/apex. And the reason I'm giving you this link is I've made a condition when I told them Apex, I'll be talking about them. But I want a link that I can give people to give their best deal, whether it's an advertised deal or an unadvertised deal. Right now, the best advertised deal is 70% off and half price resets. I think they're only charging $40 for a reset. But whatever it is, you'll get it by using this. You may not see the actual discount till the actual final page before you say, hey, let me pay and get this and test for this. But I wanted you to have this because this will always point toward their best deal, okay? Others will give you other links and so on, but this will always give you their best deal, okay? So for passing the evaluation, get funded, I want to offer you the Loaded Gun Simple Trading Plan, okay? And here it is real simply, the core Loaded Gun Simple Trading Plan, which has all the videos that you can learn about the plan. It has all the nuances. Remember I said there are certain things that I like to do to match a trader with rules in the trading plan. So I want to, you've got those nuances. There are 7 of them, and we'll go over that when we meet one-on-one. And we have monthly get-togethers. Actually, our get-together is the last Wednesday of the month. We're having one today at 4 o'clock where we all get together, all the owners, and we talk about how our successes. Some people, new people may be struggling. We talk about, we get advice from not only me, but others that have been winning. And if you can't make the monthlies, you get the recording, okay? But I want to give you the unlimited one-on-one coaching session for 90 days. As soon as you invest in the Loaded Gun Simple Trading Plan, you're going to get an email with a calendar link where you'll be able to schedule a personalized one-on-one walkthrough with me. And I'll proceed to learn about your trading background and advise you how you can get a quick start on your new purchase so that you can get funded. As you perfect your running of the plan, I'm going to be there with you as many times as you need me over 90 days. And you can start this 90 days anytime you want. In other words, you can buy this right now at the special pricing. You can look at the videos for a couple of days, a week, maybe you got relatives coming in, and you can start in the 90 days on March 1st if you want. But you can start it anytime you want. But I'm going to be there to hold your hand through this to get you funded, okay? And there's a lot of advantages to coaching. I won't go through it, but the main one is accountability. You're going to be accountable to me, meaning that when we make an agreement for you to to learn a certain aspect, and I want you to be able to repeat it back to me. I want you to get this. These are simple trading plans, but you want accountability, and I'm going to give it to you. Okay. These just came in this last week. Hi, Norman. I passed Apex 100 about $100,000 valuation in 4 days trading the loaded gun. Mostly scalping, but a few runners brought it home. I still have a few trading days to finish, but I've made $6,000 in 4 days this week. Great trading plan, thank you. That's from Mike. He's a part-time trader. And Sandra, even a newer trader, said, Norman and Tisha, who my wife helps with the mental part, I'm making some progress now. I really credit your guidance and your voice in my head. I now have 3 funded accounts with Apex and requested my first small payout. She requested 2 $500 payouts. That's the minimum for two accounts yesterday. And here's the last one, the most recent one that came in on Friday. Please share with your wife that since funding my first 5 Apex $50,000 accounts last Thursday and 5 more 2 days later this Tuesday, on those 10 funded accounts, he is profitable $21,000 in real money, all on the NASDAQ. This is doable. And this was a struggling trader who crossed the line to success, and he's working 5 more to get funded. He wants 20 accounts. That's the limit that you can have. God so richly blessed me. So Ken, who knows what he's doing? I'll skip this particular one because we're running out of time, but I wanted to give you a second bonus, and that's, I want to set it up all for you. Apex and Top Step have a more advanced setup that can be confusing to some tech challenge traders like me. It took me 10 days to set the Ninja Trader and set up the Apex data feed. So I'm going to connect you with my young genius, Brady, who will jump into your computer and set everything up for you. So I'm going to just commit to this. I'll have him set it all up for you, and all you got to do is start trading, okay? Well, and Roger actually paid $150 when this was not part of this package for this setup. He said all in all went well. Brady is obviously skilled. His cursor started back and forth, darted back and forth. I ended up feeling like I had a bargain. So let me take care of the headache of setting it all up. You just have to start trading the simple trading plan, okay, system. So here it is, the loaded gun trading plan, the core trading plan, which is just less than 2 hours of videos. The nuances, there are 7 of them. They're only 10 or 15 minutes each. The monthly get-togethers. You got the unlimited coaching from me for 90 days to make sure that happens for you, and the hands-on setup of the trading. But I also want to give you my guarantee. I'm so confident that you're following the simple trading plan loaded gun will result in you getting funded by your prop firm so that you'll risk their money and not yours, and still receive 90% of the profits you generate. Just share your trading experience with me, that you followed the simple rules and that it didn't work for you, and I will refund your purchase price plus $500 for your trouble. That is an ironclad guarantee. So if you were to purchase today, you could actually commit to setting up your prop trading with Brady by this weekend. You could pass the evaluation in a minimum of 7 days. That would be the quickest you can do it. And in 5 days, you could trade for 2 weeks and request your first paycheck and get payday. It would be as soon as March 10th. Now, it won't be this for everybody. If you're an experienced trader, this is probably the plan that you'd be following. So it can happen very quickly for you. So again, the simple trading plan loaded gun, the 2 bonuses of the unlimited coaching, I'm going to set it up all for you. Brady will. It's normally $24.97. It's a 50% off offer here today for you, $1,247. You just have to go to theirmoneyyourprofit.com and use the passcode pass now. Use the coupon code pass now. If you have questions, I'll be in the chat on that page after we're done here. Let's do this together. That's why I have the 90 days of coaching for you. As many meetings as you need to get this down and get it done, I'll be there for you. I've got to limit the number of traders. There's room for 6 traders because of the one-on-one. There's a limited, my calendar is limited. There's room for 6 traders so I can get at least the next couple of weeks to get the first meeting in with you, and then it loosens up from there for you. So this is my offer to you. If you are at all interested, take a shot here and let's get going on risking their money and not yours, and getting 90% of the profit. So their money, yourprofit.com. Use the coupon code PASSNOW. And I'm 4 minutes OT, but I am sorry for that. But I did start a couple of minutes late.
Norman, you're always forgiven, and I have to give credit where credit's due. Congratulations on your success, passing another prop trader, challenge. My
Thank you.
heart goes out to you. I know what the Rainbow Bridge is. If you would like another poem to look up, Meet Me in the Light will probably hit you in the heart and make you feel better.
Appreciate that. Appreciate that.
That's quite all right, my brother. But I see you've done your due diligence as usual. It is always great to have you here. Over 1 million views on YouTube. Ladies and gentlemen, a true professional and expert, Mr. Norman Hallett. You can find him at thedisciplinedtrader.com. If you're interested in being mentored by a professional trader with 40 plus years experience who can pass prop trading evaluations with ease, look no further. I put his links in the chat box. Norman, I hope you have a great rest of your week. Thank you for making such a generous offer to our audience, and I will probably see you soon.
Thank you for having me, and thank you, everybody, for the time you spent with me.
Be well, Norm. Today's Investors Summit on Traders Corner has had over 1,000 traders participating from all over the world, and we want to thank everyone that joined us today and have you stick around because we have great presentations to come. I told you at the top of the show we had a great lineup, and our next presenter is no exception. He's an extremely gifted trader and software developer who became interested in day trading as a college student. He started using NinjaTrader out of curiosity to test his ideas and now has over 14 years experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the NQ, and he was able to get $30,000 in payouts during December alone with Apex. He's most passionate about futures trading, but remains committed to building the best day trading tools. He enjoys connecting with his clients and bringing their ideas to life. Here to present position sizing and risk reward planning is Mr. Joel Wyse of Affordable Indicators. Welcome back, Joel. Always a pleasure to have you here.
What's up, everybody? Can you guys hear me okay? Rob?
Loud and clear, my friend.
Excellent. Thank you so much for having me back. I hope everyone's enjoying the presentation so far. Thank you, Norman, for encouraging us around that loaded gun trade setup, which I'm certainly curious to experiment with and even test out my programming skills on that thing. And yeah, well, let's get into it. Thanks for the introduction, Rob.
You're very welcome.
All right, so I am also a futures trader. I know we started out the day with stocks, mainly, with also some great concepts on risk management, and I'm gonna cover more risk management in my presentation. I think is the most important part of trading. As Norm said, the stop loss, right? Making sure that we have our risk in check. So let's hop into it here. We're gonna look at the charts. So it just happened with the FOMC announcement. In the meantime, I'm gonna pull up the questions. I want you guys to be able to participate. So I'm watching the questions right now. I see Hector commenting on Norman's program. Great program and patient coach. I don't know if I'm so patient, but apparently Norman is, which is amazing. So thanks for saying that, Hector. So I'll be watching the chat to see what you guys have to say and would love to hear your questions and feedback. Title of my presentation, Position Sizing and Risk Reward Planning. I'm presenting today from my office. Here's a picture of that right at this desk. I always like to say that. I'm going to say again, just a quick update on my own trading. Like Rob said, I've received $30,000 in payouts. Now, I always want to tell the whole story. So to kind of piggyback on what Norman said, you have to buy accounts through Apex. So I have bought a lot of accounts and also a lot of performance accounts. I've spent actually around $22,000 in accounts. And so when you subtract the payouts versus the accounts, obviously, or I wouldn't say obviously, yes, I'm still ahead, but I want to continue doing better. and I will not receive any payouts in this first February window, just so you guys know that. But I'm focused on, again, updating my software, continuing to serve all of my customers that have purchased software products with new features, updates, performance updates, enhancements, different things. So you guys will see some of that today, but I'm in it with you. And yeah, the middle to end of January wasn't so great for my trading performance, but I feel positive about where I'm headed and will continue to report back on my payouts. So a couple ideas I want to give you guys here and to get started in my trading plan. Now, again, I'm kind of on pause on this because I really want to focus on the software company and what it looks like to continue kind of building out my chart trader to where I see it as being feature complete. A lot of you guys in here, I see you guys in this presentation, looking at the attendees list, have bought different parts of my chart trader. So thank you for doing that. And I really believe, you know, that it can integrate with any trading plan, any trading setup. So that's what's so exciting about it. So I would suggest having a window of hours, right? For me personally, it's 2 hours. That's it, and I'm done. I'm only allowed to take 5 trades. What does that do? It prevents me from over trading, right? Now this is I'm gonna continually adjust all these numbers, but that's where it's at right now. I focus on the NASDAQ and the ES. So like we said in futures, it's like probably 5 to 6 different prominent markets. I'm only trading those 2. Stay focused, become an expert at 1 or 2 markets would be my advice. Again, contracts allowed. You guys know how this works, right? If we don't define this, we're gonna end up breaking the rules, right? We're gonna end up trading more contracts than we should. And when that happens, it usually does not end up with a good result. So language, again, guys, and mindset kind of along the same lines. I wanna have a positive mindset. I wanna keep my language positive. I said no cursing specifically. So again, these are just things that I've defined for myself that I print, I put on my desk when I'm trading, and so I follow the rules. I want to ask you one question to get this started today, and the question is, would your day trading results improve if you had strict risk management rules for each trade? And it's funny, I was just talking to my dad about this because he says he has lots of small up days and then he'll have one day where he just blows up the last 5 to 10 days of profits, right? So we have to have good risk management rules to be successful, or we're kind of fooling ourselves when we have days, positive days. We're fooling ourselves thinking we're having success when we all know one day is coming that can wipe out all of our success for the last week, 2 weeks, or even a whole month or longer. So risk management, I'm proposing, is the most important part. Thank you, AP. I see you in the room. Again, guys, any questions, feedback for me? I'm watching the chat, watching for those. So with risk management, I'm gonna make 3 points. And again, quickly, we're gonna get into the charts. I'm gonna show you some of my tools, and you guys are gonna be the first to see my new risk reward update in the chart trader, which I'm so excited about. This is gonna be a game changer, I believe, across hundreds, if not thousands of traders being able to see risk reward in a chart window. A lot of my customers have been getting this update for free when I launch it and post the YouTube video as well. So risk management, 3 points around risk management: trade setups, fear, and decision making. Why is risk management the most important part of day trading? Well, first of all, when it comes to trade setups, again, compared to risk management, I would say they're not as important. We have thousands of possibilities for trade setups. Nobody in this room needs another trade setup, right? Except for the loaded gun. We love the loaded gun by Norm Hallett. Other than that, we don't need another trade setup, right? It's just the reality of it. And in the latest book, The Biggest Loser Wins, he talks about this. Look up the book. The technical analysis is often conflicting, right? We can have a 1 minute with a bullish trend, a 5 minute with a bearish trend, a 15 minute with a bullish trend. And it's like, what do we do with this? You know, market is random and always changing. And if it comes to fully automated systems, probabilities are hard to define perfectly. But when we do develop a fully automated system, we test it, guess what? On the 5th point, past performance does not predict the future, right? So this is why I say, again, it comes down to risk management. We don't care as much about the trade setup. It's more so how I say myself, I'm talking to myself. I think these are beneficial for you guys to think about as well. So about how we manage the risk. Second, fear. Look, guys, if we enter a trade and we predefine our risk and reward, there's 2 possible outcomes, a win or a loss. Now there's nothing to be afraid of. I'm still working with my dad on this, and I like to say, man, if I don't trade the whole month of February, my dad is still trading, and vicariously through him being in the same room, I can still get to trade. I still get to be a part of his journey to success. And so he has so much fear around clicking the button, and I'm like, man, just get in the trade. You see all these good trades, just do it. Don't be afraid, right? If you define your risk and your reward in advance, there's nothing to be afraid of anymore, right? So with risk management, what are the 3 main points around trade setups? Again, trade setups fade in their importance compared to managing our risk. We're managing our fear through great risk management. And lastly, through great risk management, we are minimizing our decision making. There's a concept, I've talked about this probably in the last 3 presentations. Again, I try and get new content for you guys. That's what I'm gonna be working on going forward, that you'd want to come back to every presentation, because I'm gonna have new features, new content to share with you guys. I've done this a few times, but I think it's so good. Decision fatigue is where the more decisions a person makes, the more physically, mentally, emotionally depleted they become. So what does this mean? If I'm having to decide when to get in a trade, what price to place my order, what target to use, what stop to use, okay, there's a ton of decisions. This is why I'm proposing that you always predetermine your target and your stop. And that doesn't mean they always have to be the same amount, right? I have ways to vary them based on the ATR using my chart trader tools. It just means that it's one less decision I have to make. Like when I get in the trade, my target and my stop are set and I'm done. I'm in the trade, I'm waiting for the results. I see you in here, Yolanda. I hope your year is off to a good start in your trading. And Lawrence, Mark Dahlman, thanks for being here, you guys. Richard. So this is what I'm telling you guys today, okay? Everyone in this chat, lots of my customers are already here. You guys can upgrade with additional features on the chart trader. It is time to start using risk management tools. Today's the day, you guys. It is time to start using risk management tools. And with trading, I see it as ready, aim, fire. I see it as like shooting an arrow at a target or playing darts. Man, recently I played at this dart place in Atlanta. It was so cool. It was almost like a Top Golf for darts, where you throw the dart and it's all electronic. Dart hits the dartboard, cameras are watching, and it scores your performance automatically on the screen. It's so cool. Anyways, when we're trading, ready, we're gonna identify the trade. Aim, we're gonna find the entry type and price, stop loss, and profit target. This is where our risk management comes in. We're able to pre-plan. You'll see with my tools, Enhanced Chart Trader, you're able to pre-plan the trades. And lastly, you're gonna fire the trade when you're gonna actually execute on the plan that you came up with. Cool? So today I'm offering you my Enhanced Chart Trader as the upgraded solution on the NinjaTrader platform. What is the Enhanced Chart Trader? The Enhanced Chart Trader is a suite of execution tools for both entries and exits. So, right, the 2 main phases of a trade are entry and then our exit. And you can build the perfect chart trader configuration based on your trading plan and your needs. Rob, we need to get you using this stuff, man. We keep talking about this, and even before the event started today, so you better reach out to me, man, And I'm
I
gonna
know
get
my
you
schedule's
hooked up.
terrible though. We talked about it.
You have so much going on. It makes me feel so free as a single man. I'm like, I can just continue to build my business. I'm responsible for me, myself, my software company, and of course
Hey,
my
lucky
friendships.
you.
But yeah, so let's get into some charts, guys. I'm gonna start with the basic chart trader tools, and we're gonna look at charts together, and I'm gonna go through as much as I can, and we'll wrap up around 3 o'clock. But the basic chart trader tools includes a bunch of different things that I'm going to show you guys right now. This is the entry level to get started with my chart trader. So I have right here some charts. On the left side is NinjaTrader. On the right side is my enhanced chart trader tools. So I'm mainly a NASDAQ trader, so I just want to show you guys this. The click entry is going to be the buy and sell click buttons. So we click, okay, and we're placing an order. Compared to Ninja, you're right clicking, placing an order, and then you're moving the order around to where you might want it to be. Here you just click and you click exactly where you want to place the order. You've got customizable limit entry buttons, bid ask. Compared to Ninja, it's locked in at buy ask, sell ask. You can fully customize these to look exactly like Ninja's standard, or customize them with an offset and ticks. Exit order display features. You can see the one example, I took a little small trade here where I got 5 points on the NASDAQ. You can see my display shows that trade as a $105 winner, whereas Ninja's has all this extra text that clutters up the chart window. You've got a break even button I want to point out here that's included. You've got the ability to attach to indicators. So if I hit the buy click button, I can now click on, say, any of these plots. Now, this is on. I can click on any of these plots right here, like order flow VWAP. You see how it's highlighting the plot? Click, and now my order will trail on the order flow VWAP until it's filled. It will trail down. Compared to Ninja, you have to go through a long right-click menu to attach an order to a plot. And then guys, if I were to say get into a short trade right now, we can compare the two. I can see here with my chart trader, I can see right away how many dollars I'm gonna win or lose on this trade. And I can see this is a profit target. So the exit display features are spot on as far as being able to see the size of my profit target. My stop loss, you can change this to points or ticks as well. It's set to dollars here in this particular chart. All right, and then lastly, the bar counter display. It's a simple thing I included, but I think everyone needs if you're trading on the charts is a countdown timer right here. And this timer is going to change no matter what chart type you're on. It'll count down ticks, volume, range, Renko, etc. So right now we're counting down. This is a 1 minute chart. Like you guys saw, Norman said he trades a 5 minute chart. So I still think minute charts, 1, 2, 3, 5, 15 are really the standard. You're kind of picking between 1, 2, or 3 minute on the fast end of things. This is the basic chart trader tools right here. And some of you guys want to consider for your tool set 100%. The account's right at the top. You can select your ATM strategy. If you're familiar with Ninja, I've got tons of these in here created for different clients of mine, where you pre-plan your target and your stop. Okay, now that's the basic chart trader tools, and we continue throughout this presentation. We progress from basic to what I call essential, and then the last thing is going to be professional chart trader tools, which includes everything. So as you go from basic to enhanced to professional, it gets a little bit more and more advanced as you keep moving. So what are the essential chart trader tools? It's going to build on what I just showed you with ATM strategy planning. So I kind of quickly explain what an ATM strategy is. It's where you predefine your targets and your stops. Like I talked about with risk management, you should never trade without an ATM strategy, because that's how you're going to get into a trade and right away you're gonna have your risk and your target set up. Okay, guys, so you're able to pre-plan those using my tools before you get into the trade. You're able to use quick select buttons to quickly change between one ATM strategy to another, so without having to use the drop down. One-click order placement, position sizing, and risk reward. I'm gonna go ahead and go through this with you guys right now in the charts. So let's take a look. All right, so the market has shot up, and I also want to point out here the VWAP. The VWAP is so powerful, okay? You guys see when the FOMC came out, first thing we did, little spike up, everyone traded the first minute, but we moved down, right? It was a bearish move. What happened on the pullback? Where did we pull back to? Into the 20, into the 20 and the 50 EMA with the VWAP, and then we sold off. Back to the VWAP, sold off again, okay? So the VWAP, if you guys want to learn one piece of technical analysis in this presentation, get the VWAP. I don't even sell a VWAP. You can use it for free. But the VWAP is powerful. And then a little plug while we're talking trade setups is my key levels indicator, which is going to put, you can see out here we bottomed out at S2, which is a pivot, S2 pivot, and we S1 we've kind of been bouncing around, didn't really seem to matter a whole lot, but that's the S1. So check out my key levels confluence indicator also on the website. James, thanks for asking. Yeah, my chart trader works with the Apex trade copier and other trade copiers. It should, right? But I'm going to tell you, James, I have my own trade copier, which I'll briefly show you guys today, that I would highly recommend. I coded this in detail to handle any situation, really is kind of the goal. And having gotten a ton of complaints from my customers about the Apex trade copier and Replicanto, I developed my own copier and have sold over 500, I believe, so far and counting. So definitely want to look at my trade copier and pass that along. Anyone who's in here and knows the need for a trade copier with Apex or other prop firms. So what are the essential chart trader tools? We just covered this, but I want to show you guys some brand new features that I'm so excited about. So let's say I'm buying down here, okay, and I'm going to, I need to jump to here, NASDAQ. All right, so, whoops, I'm going to spread these bars out a little bit, and as an example, let's say I want to buy here when the market pulls back to where it previously had made a high right when the news event came out right here. So I'm looking at this and I'm thinking, it's probably going up. I'm going to buy a pullback. So I can plan my trade in advance. This is what's cool about this. And even if I want to buy this low right here, I'd move my entry up to here. Now what I'm getting is, I'm going to turn off the one-click entry. It just gets in the way sometimes. I'm able to see my risk reward. So this is now filling this box, okay, with a very slick looking display. And let's say I want to risk 20 points. Well, in this way, the way this trade's currently set up, I can see my risk reward. So I can see that if I'm going to buy the pullback and I'm going to go for a retest of the high, then I could risk 20 points and I'm going for 42 points. And right here, it shows me my risk reward now. So I can see it says 2.1 R. What that means is my reward is 2.1 times my risk on this particular trade setup. Is that cool with you guys? Do you see that? This is a live resting order. These are actual connections to an ATM strategy. So when this order is filled, this plan, and I'm working on this, but the plan disappears after a minute, and then you need to hover your mouse over here to bring it back. So this plan is going to be in effect as soon as I'm filled in this buy limit order. All right, so you can see it's kind of cool as I move this risk. Do you see how the R number is changing? 2.7, 2.8, 3.0, 3.3. So I'm always able to see my risk reward on every target. Let's take a look at this. What if I have 3 targets, kind of like what Norman was saying, right? Let's say that I want to, and if I hover over market, it's showing me the plan in case I were to click buy market. But let's say again, I want to buy a pullback. Now I've got my 3 targets. I can see one target is at 1/2 reward compared to the stop. The second target is at a 1-to-1, so we're risking 10 points to make 10 points. And then lastly, target 3 is 2 times the stop. Again, as I move these around, the R value is updating. As I move this, the R value is updating. Now what I'm going to do next actually is, let's say you trade and you always want to have a 2-to-1. Ideally, when you move this stop, all the targets would move, right? Because what happens when we move the stop, we want to keep the targets in line with the risk reward. So if we're always wanting to target 2 times what our stop is, then we can connect those. So as we move the stop, we change the stop value, then we're changing our target values. As an example trade, like Norman was talking about, and we can click here to plan out a trade, right? So I can click here, now I can move this around. So let's say that we were trying to go long. Norman said that this is kind of one of his trade steps, like go long above this little bar here. So we have a bullish doji, we want to go long, and we're going to put our stop below the bar, okay? And our targets are up here. But do you see how we're able to plan this trade? We're able to plan out this trade and see, okay, if we target, we're going to have a stop below this reversal bar and a target at this high, another target up here. So we're able to pre-plan out these trades, even with a buy stop right here. We can click this button and place the trade. Now this is going to place a buy limit because in real time the market has already moved above here. But you can see how this planning feature allows you to plan the trade right in your chart window and manage your risk. All right, so I can click this to turn off the plan, turn it back on. Daniel, that's a good question. This VWAP, I believe, is 24 hours, meaning it starts at 6 p.m. and it's building all throughout the day. I would love to look into that. If you want to email me, I would love to know what you're using to see both and compare them. He's asking if you're calculating VWAP on 24 hours or just the 9:30 to 4 o'clock session. All right, and then with position sizing, let's take a look at position sizing in this. So you can manage your risk, you can plan your trade. Let's turn on position sizing. So if I'm risking $200 per trade, now all of a sudden, as I'm planning my trades, a 10-point risk is going to be 10 micros, right? 15-point risk is going to be 6 micros. 20-point risk will be 5 micros. And then a 25-point risk would be 4 micros. So you can see how this, and excuse me while I move this plan around, you can see how changing these ATM strategies, these quick select buttons, allows you to quickly change your target and stop. So whether you're risking 10 points, 15 points, 20 points, 25 points, you can quickly change that. You can also size your trade. So as I'm planning this trade, let's say I'm moving this around, the number of contracts are changing. So if I want to risk more points, okay, then I can trade less contracts. But if I tighten this risk, I'm able to trade more contracts, but while still only risking less than $200. So this is a position sizing tool. If you guys want to use something like this on your prop accounts to risk a certain number of dollars per trade, you can do that. All right. I also wanted to point this out. This is something that we didn't look at earlier, but my chart trader has the ability to separate your P&L. So you can see here on Sim 101, we have $315 profit on the NQ, but on the ES, we haven't made a trade. So you can see all your profit across all instruments, or just the profit and loss on the instrument that you're trading in this particular chart. It's pretty cool. Yeah, there's so many features in here, and I know I have to wrap up in 10 minutes. So we'll just quickly jump through some more tabs to show you guys a few more things I really want you to see. Renko and range. So let's say I want to take the next green range bar. I can click and the order is placed. Now, when a range bar closes up, we're going to get into the trade. If it goes down, this order is going to trail down. You see it trailing down. This order is going to trail down until we get a green range bar to trigger us into the trade. So it's pretty cool and useful. I think, see how the order's trailing down? We're waiting to get a green bar. I don't think I'm gonna wait because, I mean, I'm showing you the point of this, but if you're trading a directional range bar, this is awesome because you no longer have to sit there and wait until the bar closes to get to click, market, or place your order. Your order's already working. If I know that I think this is oversold and I wanna get long, I can have the order working and now I'm long. And I didn't select an ATM, I had none selected up here. So there's no target and stop. Great risk management, right? But we'll just hit the close button because I'm just showing you guys some example trades. But that's how you can work an order to get in on a directional range bar. Same thing applies for Renko. I'm not even going to cover it because it's the same, pretty similar concept. Enter on the bar close, right? So I can now set this up that if I get a green up bar, when the bar closes, I'm going to get long. So similar to range, but now we're waiting until a bar actually closes to place the order. Or I can sell on a down bar. I can sell on any bar, doesn't matter. When the bar closes, I want to get short. Okay, set it to any bar. All right, so there's a lot of features. Here, you can also link this to signals. So if you have a signal that you trade, you can set it up so that when a bar closes with the signal, like I have a stochastic signal here, when a bar closes with the signal, it will get you into the trades. This is all semi-automated trading tools to, again, minimize your stress, your decision-making, and get you into trades. Manage your risk. Lastly, I'll show you this bracket tool, which we can place trades now. If I click, you see how it's placing a buy and a sell, so that when you get a news event, no matter which way it goes, you're triggered into the trade and the order is canceled. So if you guys have ever used bracket entry, meaning I want to buy above, sell below, when the news event comes out, I've got the tool for you right here. You can also configure this to enter 2 seconds before the bar closes. So we'll just let this go. We've got 12, 10, 9, 8 seconds left. We'll see that these orders are going to go in 2 seconds before this bar closes. Why is that important? Because if you have news, you definitely want to get your orders in before the bar closes. You want to wait till the bar closes when probably the event has already started moving the market. So that's bracket entry orders. We've got advanced exit orders where we can do trailing stop stuff. You can actually configure a trailing stop to work with any indicator, so like parabolic SAR. You can have up to 10 different trailing stops in this list, all configured on any indicator that you choose. So that's kind of a rundown. There's a ton in here, couldn't possibly cover it all, and working on thinking about how I could better highlight some things. But what I really wanted to highlight today is just this risk reward, which I think is going to be a game changer. Again, once I post it on YouTube and get it out from more people, being able to see your risk reward, 1.7. Right here, my target is 1.7 times my stop. And again, the perfect thing would be is if I move the stop, the target moves to keep that risk reward in check. So if I always want to risk 1, for instance, to make twice as much as I'm risking, it would make managing those profit, managing my risk so easy at that point. And that's what I think it is, guys. I think you should always have a reward or a target at least 1 times your stop loss, right? So you should never, you see a lot of guys taking these really small targets. I don't want to go off on a rant, but then get you started. I think you're just fooling yourself. You know, you can win 7, 8, 9 times in a row, but then what happens the 1 time you get stopped out? It's all gone, right? Same concept as a daily risk, right? When I'm making these small profits daily, and then in one day I blow 2, 3, 4 weeks of my profits, right? Same thing on a trade by trade basis. I don't want to be risking more than I'm targeting, right? So I think keeping an eye on this risk reward is going to be helpful for some of you. I bet lots of you are going to want to get this today, and start using this to plan your trades. Is that cool with everybody? You guys got any questions? Put them in the chat. I'm going to wrap up here and show you guys my offer today, give you the coupon codes and stuff. I'll also show you my Apex accounts, which aren't looking so hot. I've got a bunch of funded accounts that are down, but that's okay. You know, trading's a process. Like, I'm very proud of the payouts I've had. This is my trade copier. And so my master account, the way this is configured, is account 91. And then I've got all these follower accounts, some trading 1 micro, some trading 2 micros, some trading 5x micros. We got the master. I'll trade a mini on here. So you can configure this thing to trade different sizes across all your accounts. I'm telling you guys right now, this is the best trade copier on the market, 100%. I programmed it. Like, I'm your programmer, your trader, your CEO, your support guy. I'm doing it all, trying to build a team, but for now, it's me, okay? So I hope that builds some trust with you guys. Giving it everything I got here, trying to put out some of the best tools on the NinjaTrader platform. As Rob likes to say, I think he says, supercharge your NinjaTrader platform, which I love that. So yeah, if you need a trade copier, look at my trade copier. We'll cover that. I'll cover, that's called the accounts dashboard right here. You'll see I'll cover that at the very end of my presentation. So what do I have to offer you guys today? Let's summarize the enhanced, and again, the enhanced chart traders, where you configure a chart trader with your personal needs, right? So you're getting different pieces of it. It all goes into one big panel with all the buttons that you purchased based on your specific trading plan and needs. Okay, so let's take a look at the prices. The basic chart trader tools is $195. This week through Traders Corner, it's 50% off, 95 bucks. Okay, that was the basic way to get started. We also talked about the essential chart trader tools at $995, also 50% off. That's where you get your ATM strategy planning, where you're able to pre-plan your trade, manage your risk, quickly change between ATM strategies. You're able to use position sizing, and then the brand new risk reward display features that I've developed and am continuing to develop. Okay, and that's what I want to say too. Everyone in this, we've got over 100 people in here. When you buy my tools, you're getting customization, right? Especially if you purchase, you know, the essential tools or the professional tools, you're getting access to me. I want to hear what you think. I want to continue to develop this. Some of my customers, I'm developing features based on TradingView and Tradeovate, so they can be more comfortable with NinjaTrader, having made the transition. So I want you to see that, man, I really care about developing these tools out based on what my customers need. All right, we talked about the professional chart trader tools. I think there's 1 or 2 or 3 or 5 of you that just want to go all in. You want to say, I want every feature that you've built into that chart trader at 50% off, which is a total of $19.95. And then some of the other features we looked at, like the trailing stops, we looked at range and Renko entry, we looked at close bar entry and bracket entry orders for news. All those are going to be 20% off. So I'm doing a 20% off everything across my entire website today for Traders Corner, but also specifically if you purchase the enhanced chart trader bundles, you get 50% off. Again, I call it the accounts dashboard. I've got duplicate account actions, which is my trade copier, and the account risk manager, which is for daily going lost and risk management of your accounts, tracking your trailing drawdown that Norman talked about. Each one of those is $235 at 20% off. Go see the testimonials at the top of my website. Then lastly, here's the link. I'm gonna put this in the chat right now for you guys. Give me a second to do that, Rob. I'm gonna wrap up here in 2 minutes.
I got it.
Thank you so much, man. So there's the clickable link there that you guys can visit my website right now. That's gonna make sure that Traders Corner gets credit for this as well. So go through that link right now. And at that link, I'm just gonna show you what I put up. So I tried to make this so easy for you guys to understand and see. Yeah, so let's take a look at this page real quick. So the coupon code at the very top is corner. That's gonna give you 20% off any website purchase. After that, there's a coupon code risk reward that you're gonna save 50% on enhanced chart trader products. This is from the basic at $95, the essential chart trader tools $495, again 50% off. The professional chart trader tools $19.95, also at 50% off. So you can see right here with these more information links, you can click on these to see more about the products. There's some videos, although the videos are outdated. There's a ton of features I put in here. But again, I'm the YouTube guy, right? I'm supposed to publish videos too. So trying to build a team, but there's just a lot to do. But man, I'm just fortunate to get to do this and work with so many of you on these great NinjaTrader products. So again, your coupon codes are right here. Use that risk reward to save 50% off. You can save 20% off on anything else down here. I've summarized more enhanced chart trader features. I've given you links right here. Duplicate account actions is my trade copier. I would love for some of you guys to pick that up today. You say, man, I've had issues with the other trade copiers. I'm going to trust that Joel's put more work into this than they have, really cares about making the best trade copier, and I do, trust me. The key levels confluence indicator is my support resistance indicator. Here's my Apex link at the bottom. That wraps it up. You guys, you should be on this page right now, looking at the offers. I hope I've made it very clear. And I just want to say thank you again, guys, as we wrap up January together. Yeah, I'm just rooting for all you guys to have success. I know this is a hard journey. It's hard for me as well. I'm also a software developer as well as a trader, but I'm in it with you guys. Just want to say thanks to Rob, Norman. Hopefully we can also get on a call and partner on some stuff as well. Norm Hallett, great presenter. And I'll tell you what, I look forward to staying around, Rob, to hear Jeremy Tang and Shark. And then I believe the guys at Right Line wrapping it up. But this has been a fun day so far, and thanks for letting me be a part of it. Thanks, everybody.
Not a problem. Thank you, Joel. Ladies and gentlemen, that's Mr. Joel Wyse of Affordable Indicators. Sounds like you have a plan for 2024. Great presentation, my friend. But thank you for making such an incredible offer to our audience today. It's amazing how powerful your tools and indicators are. Ladies and gentlemen, if you want some of the most powerful indicators, trade copier management tools available on NinjaTrader, then Mr. Wyse of Affordable Indicators has them to you at a tremendous discount. And what I say is, now it's time to transform your Ninja into a Super Ninja. Joel, it's always a pleasure to have you. I love your full tool set. You know, I use it to trade sometimes. I love your system and recommend getting the entire system to anyone. If you read the reviews, everyone who has it loves it. Have a great weekend, Joel. I'll leave you hanging around in the background. Just don't end the webinar on us. And have a good weekend.
Thanks, Rob. And I see some of your questions. I'll be answering those here in a moment. Thanks.
Cool. Ladies and gentlemen, we're down to our last two presentations, and I mentioned at the top of the show that we had a great lineup. Next up, we actually have a 2-for-1 with you with the founder and chief architect of Shark Indicators and a seasoned product advisor at Shark Indicators. These two are incredibly talented software developers and have created innovating trading software that simplifies trade management without coding. With over 40 years of combined expertise in software development and trading, they have uniquely positioned Shark Indicators to empower retail traders. Here to present Build an Auto Trader in 15 minutes, it's my pleasure to introduce to you Mr. Jeremy Tang and Keith Wolf of Shark Indicators. Welcome to Traders Corner, gentlemen.
Hi, how are you guys doing? I'll try not
I can't
to,
complain.
yeah, this time around, I promise I won't exit the presentation. I think last time I basically shut everything down, and unfortunately, I'm really sorry about that. I'm a little new with using GoToWebinar. Well, used it a long time ago, like 10 years ago. And my
We would
first one,
appreciate that.
yeah, sorry about that. Can I share my screen? I'm not sure if I see a,
You can. There's a button in the control box.
let's see, button. I only see the webcam. I think maybe my permissions have been revoked a little bit from last.
No, you have full
or-
organizer and presenter.
Okay.
If you click the first drop down, the sharing window, the first button says show screen.
Yeah, I've only got the sharing window. Let's see. You know,
The control box for GoToWebinar. There's a bunch of little down arrows, sharing webcam audio.
Yeah, I only got the share webcam. Normally there's a button beside it to share the screen of.
No, webcam and sharing are two different.
There we go. Now I see it. Okay.
There you go.
Thank you.
You're welcome.
Somebody got
coming up. Could I do audio check on me? Can you hear me okay?
screen here.
I can hear your partner very faintly.
Faintly, okay.
All right. Okay, Keith, see if you can come in there. I want to see if you can hear. We can hear you because it's really faint.
Yeah, testing. Can you hear me okay?
Very, very faint. Maybe you can up the volume there a bit or something. How am I coming through? Am I coming through loud and clear?
We can hear you loud and clear.
Okay. Well, let Keith have an opportunity to maybe play with his sound settings, and while I go on. So as you heard, there's two of us here. Myself, I'm Jeremy Tang. I'm one of the co-founders of Shark Indicators. We've been at this for well, coming up on 13 some odd years now. So we've been in the business for a little while. It's always great to hear from other presenters like Joel Wyse, as I've heard he's a really great guy. You know, and I'm always excited here to see other vendors adding to the NinjaTrader ecosystem. And so today we're going to talk about a couple things. So if I'm just going to advance my slide here. Right, we're going to talk about auto trading in general, the ins and outs of it in terms of why it's exciting, maybe some of the caveats. That's definitely a buzzword, I think, in the industry. Then we're going to go ahead and show you us building an auto trader from scratch. And then finally, we're going to wrap it up with some Q&A, hopefully, if we got some extra time there. All right, so I'm just going to crack right into it. And so let me see if I can see people, maybe the responses or whatever. Okay, cool. I can see questions and answers. I've got a question for everybody here. Who here has thought about or who's wanted an auto trader? Like who here is kind of like interested or maybe even has gone as far as maybe even considering getting one or building one themselves? If you can go ahead and just, you know, answer in the questions, and I should be able to see a couple of your responses here. Okay, so we got a couple of responses. So any of those of you that actually have aspired to auto trade, you know, how many of you actually try to build one from scratch? Okay, so we've got some very interested people. I don't see anybody. Okay, so somebody's actually doing it in TradeStation. That's great. Okay, so actually, and I'm going to ask kind of a question that's a little bit seemingly off to the side here. How many of you guys have a system and you've back tested it, and or you've wanted to back test it? Let's even include people that want to, that maybe even haven't yet, but that's your intention. Okay, so we got, I only see one yes, actually. So that's, to be honest, I'm not surprised, because if you really think about it for a second, okay, so if you're going to back test a trade system, presumably your own, or maybe one that you've found and you want to vet how good it is, you really have two options, right? You can do it by hand, which is obviously very tedious and time consuming, or you can use the computer. And if you use the computer, which is the thing that probably makes the most sense, because typically you're going to have to do it many times over before you find a trading system that you actually can trade, you actually need a full-blown auto trader to do it, right? You need to tell the computer when you're going in, you need to tell the computer how those trades are going to be managed, and you tell the computer how you're going to get out, right? And that is, by definition, an auto trader, right? And so a lot of people don't really make that connection. In order to backtest, that's something relatively kind of baseline in terms of if you're testing your system, you actually need an auto trader to do that effectively. So what are your options if you want to acquire an auto trader for yourself, and presumably say you have your own system or whatever, or maybe you want to adopt somebody else's? Well, you can either learn to code, and that in itself, and take it for myself, I've been a developer pretty much for my entire adult life and then some, meaning that I started in my early teens, and I'll just say it's a discipline that requires respect and a lot of mastery and time devoted to it. And as a trader, you may have to, maybe that's not necessarily the best use of your time. Perhaps you're better off using your time to learn how to trade and find honing your trading skills instead. Or you can hire a coder. That's another possibility. But those of you that have never really been into, say, a development project where you're paying for it, I'll just kind of allude to the fact it definitely sometimes has its challenges and hurdles. And especially if your coder is someone that's not necessarily a trader, you can get yourself into a fair bit of let's say problem solving and a lot of cost when it comes to fixing and or trying to communicate what you want to do. Not to mention that, again, building out a trading system, not even an auto trading system, but just a trading system, sometimes requires a lot of iteration and a lot of development, and that takes time and money. Third option, maybe buy an existing auto trader, something that already trades out there for you in a specific way. I like to call those black boxes because you don't really know what went into the auto trader and its style of trading. And so let's talk about black boxes for a second. Okay, so the reason why I like to refer to a lot of, say you buy an off-the-shelf auto trading system, the reason why I like to refer to them as black boxes is because they often are sort of like pre-configured to trade a certain way. And that way may or may not be necessarily how you like to trade. However, it's just, it's built that way. It's more or less a static machine with a few knobs and whatnot that you can maybe adjust and fine tune a few things. But for by and large, it's going to trade the way it's going to trade, the way it's designed. And the way we kind of see things at our company is that, trade systems they're really kind of individual. You as a trader, presumably you would have a few markets that you like to look at. You maybe have some instruments that you like to trade, and perhaps you even got a style. Like maybe you like mean reversion, maybe you like trend following, maybe you like scalping. The list is pretty much endless. And what works for somebody may not work for you because you just got a different risk tolerance. Maybe you got a just different personality, different style. You like certain different kind of instruments. And so we like to sort of state, there really isn't kind of a one size fits all situation. And that's why I think a lot of auto traders get a bad rap, because you're kind of like forced to trade the way it was designed, right? So we, as Shark Indicators, take an entirely different approach. Okay, we built a platform that allows you to create and express yourself, express your trading rules, your trading style, creating your own automated trading system the way you like it, the way you like to trade it, using your own rules and using a visual graphic node interface that's totally configurable and doesn't require any knowledge of how to code. And believe me, we do have coders that actually use our product. And even if you are a coder, and a lot of our customers have told us, and even myself, I will say, you can build it a hell of a lot faster using our software than if you were to code it from scratch, even if you're a very seasoned software developer. And it's certainly, if you're just learning to code, you can build it way faster and skip the, I've been coding, like I said, I've been for 27 some odd years. I've been a developer, and I still would much rather build something quickly. If my end goal was to build a trade system, I'd rather build it in a no-code solution. It's just way faster, and you're gonna see a lot of really cool things that we're gonna show you that you have an advantage when you're using a system like ours versus trying to code it from scratch. Okay, so the one thing I mentioned before about auto traders is they tend to be they kind of have a bad name, and so I like to talk about our systems. It's more like an autopilot. Okay, if you think of like professional airline pilots, they have these incredible airplanes that can literally fly themselves. They can take off and land, but yet you still have highly trained pilots that are guiding them or configure them to go where they want it to go. Our software is kind of like that, right? You don't have to use it if you don't want to, but if you want to take over at any time and use your discretionary ability as a trader to just take over mid-trade, you sure can. Just like an autopilot, you can turn it off, and you still have a lot of fantastic tools to help supercharge your trading even as a discretionary trader, or you can turn it on and have the autopilot, essentially your pre-configured plan and trades, execute it just as you had planned them in the beginning. So really what we have, and I actually sort of have this little slide here, that shows kind of a spectrum between the full discretionary and full auto, right? We look at it as like on one side you got full discretionary traders, and the other side you got full automated traders, and you got a huge spectrum of anywhere in between. And our software doesn't in any way try to pigeonhole you into trading one specific style or the other, right? And in fact, a lot of our customers like to mix it up, and you can mix it up mid-trade. You can be, they say you want to take your entries manually using some guidance. You can do that, and then you have the computer execute the rest of the trade automatically, or vice versa. Maybe you like to have the computer do the entries for you because you've got a really complicated entry, and then you like to manage the trade throughout the trade, like the order management and whatnot, like placing the targets and stop losses, and then sort of tightening them and widening them as necessary. And so we don't, again, pigeonhole you in any sort of style of trading. You can switch back and forth even mid-trade. Okay, so we're going to get into kind of a software demo and show you how this is done. We're going to build out a system very quickly, and to do that, we kind of need an example. By no means, I can just disclaim this, right? By no means are we advocating you trade this particular system. We just needed some kind of arbitrary rules to show that you could plug these into our system, plug them into the platform, the system, have those show the signals appropriately, and then show you some pretty cool trade management stuff that you can pre-program in, if you will, and show how flexible it is. So to that end, I'm going to pass the buck over to Keith, who's going to take over, and he's going to show you the building of this system here. So let's see if I can. I'll stop sharing my screen here.
All right, great. So can you hear me now? Is that any better?
Yeah, much better, Keith.
Okay. Yeah. Every platform handles it differently. All right. Well, great. Yeah, you said they were arbitrary rules. A lot of this comes down to just coming up with your own ideas and seeing how they'll play out and then tweaking from there. So yeah, most people start with arbitrary rules and kind of build from there. So yeah, let me go ahead and share my screen here. I have no idea which screen it's sharing. Can you see my chart?
Yeah, it looks good. We see your chart there.
Okay, cool. So just like Jeremy was saying, he's talking about creating your own automated trade systems, but most people don't think about what that requires, how you need to break it down in order to properly build, test, and start trading with automation. So you need the entry signal to decide when am I getting into the trade, and then you have to take that signal in and actually enter your trades and manage them according to your own rules. So we actually had to build two tools to handle both sides of that equation. So let's talk about what Jeremy showed on that last slide, where he said, okay, we're going to use a combination of these different indicators. Okay, I've got the EMMA Super Trend from Lizard Trader. They're awesome. Make some really useful indicators that I think everyone should probably have in their toolkit. We're going to make use of the Bollinger Bands as well as the ADX. So let's go ahead and bring up Bloodhound. Now, some of you have seen this, some of you haven't, so we'll go over some of the basics, but what we're doing here is telling Bloodhound these are the conditions that I want in order to get an entry signal. When these things are happening, get into the trade for me. That's how we'll use them today. So in here, let's start with the super trend rule and just dive right in. So the super trend is kind of cool because it is telling us whether we're trending up or down, and eventually we'll use that also as our stop level. So we're going to say, I require that the super trend is looking like this. Basically, it is an uptrend. So there's a lot of different conditions you can detect in here for your signals. we're going to start with the comparison solver. And in here, I'm just going to go ahead and I'll connect that. We're going to get possibly some signals on there, but we'll go in and select our indicator. So we'll go in and say super trend and double click and say, actually what I love about Lizard Trader is their indicators give us these nice hidden plots here that indicate that yes, we are in an uptrend, so it has a value of 1, and a downtrend would be -1. So we can grab onto that fact and say, okay, when that's true, when it's above 0, basically is what I've told it to look for, give us long or green signals, and when it's the other way, give us short signals. Now, if you saw on Jeremy's slide, it said we're going to focus on long trades only for this example, so let's just exclude the shorts. Now we're getting long signals on every bar in which that condition is true. Cool, step 1 is done. Now, he also mentioned doing the ADX. So the ADX is pretty common, where it's meant to kind of imply the recent trend. We're trying to exclude overly flat areas. So for this system, we're going to require above 25 for the ADX. So let's go ahead and add that rule. And actually, there's a nice threshold solver that can do exactly that when it's above or below a certain threshold. So we'll go in and select the ADX, double click, okay. And for the output, we got to tell it that it's the 25 we're looking for. So what we're seeing here is for a long signal, when the ADX is greater than 25, give us a long output. That's 1 or a full 100% signal. And like I said, we're going to ignore shorts for today, so I'll set that to 0 and hit OK. So now, again, we're just looking at that condition in a vacuum, because it's always good to look at one thing at a time to confirm that it's behaving the way you are intending, and then combine them later. So we're seeing every time the ADX dips above 25, we're getting long signals, and when it's below, we're getting short. Okay? So let's combine those and say, okay, I'm only wanting a signal when both of those are true. Give me a signal when this guy is giving us a long signal, and also, when I let go of this, watch the chart, and also this guy is giving us a signal. When they're both true, only then do we get a signal. So here, super trend is trending up because we're seeing these plots, and the ADX is above 25. Now, one thing we noticed while messing around with this, we actually noticed some good opportunities to expand on this, where we could actually maybe get a slightly better fill by requiring a little bit more of a confirmation on the ADX, right? So yes, as soon as the ADX pops above 25, we're getting signals. But what if we wait a couple bars and say, I need the ADX to be above 25 for at least, let's say, 3 bars. And only then do we start getting signals. It's just a kind of a way to confirm that it's not just a temporary blip, that we are kind of getting a strong trend for a few bars in a row. So to do that, we can just add a condition to our threshold here that is literally called a signal counter. We're going to count those signals and say only get a signal once we've reached 3, not 13, 3 in a row. So let me run this through that. And now we've narrowed it down so that 1, 2, 3, now we're getting signals. 1, 2, 3, now we're getting signals. And there were a few places on this chart that we found that actually did provide a slightly better fill. Okay, so we're one step away to bringing this in and starting to have fun with the actual trade management part. But you'll notice, if we take a step back and remember what our goal is here, is we're creating distinct entry signals. So each one of these on a bar by bar basis is technically a signal, right? But if we're actually planning on trading this in a live system, oftentimes it can be much cleaner, depending on how you want to trade, to block out any of these duplicate signals. Let's just try to get this first signal and clean up the rest. So our last step here is to add the signal blocker. It does exactly that. It blocks signals in different ways. I'm going to set it to kind of a high number, run it through there, and now we're just getting the first signal of a trend and blocking the next for up to 50 bars. That was sort of arbitrary, but I found that it kind of works in this case. But of course, as you're building, you want to be running far more tests than I'm doing just in this simple demo. So, all right, cool. So that is the first step, building our trade signal. Now let's close this window. It'll save our work. Now let's bring it into Blackbird, step 2. So as you can see, we've actually got the trade panel on the right here. It's our own sort of chart trader. But you'll notice if I click go long or go short, nothing happens. Right? It's because we haven't told it what to do when we actually enter a trade. So all of those settings are down here in the order settings button. Okay. This is the Blackbird window. It kind of, I always like to call it the ATM on steroids because it has basically all the same features, but goes much, much deeper in terms of what you can sort of control. So to speed things up for the demo, I've already put in my Bloodhound file that I was just working on. So once we start activating the auto trading button on the top right, that will start listening for these signals and enter automatically as if I had clicked go long instead. So now everything past that point is what we're going to set up now. So Jeremy, for our first order set, or actually we're going to build 2 order sets, a little spoiler here. What should we do? Do you think a market entry or limit entry would be better?
I'll just say let's keep it simple today. The market entry is fine. I want to add, of course, you could have a variety of different kind of entries there, as you can see.
Of course, yeah. Okay, yeah, it keeps it nice and simple. So we've prepared our first order set with 1 contract on this CL chart. Now, if you recall from, again, Jeremy kind of went through the slide quickly so we could actually dive into the demo for you. But if you remember from that, we were going to have the profit target and the stop loss, at least at the beginning, attached to the Bollinger Band lines. So that's why we've got these Bollinger Bands on here. My plan is to have the profit target not only start where the Bollinger Band is, but follow it up and down along with the Bollinger Band. And then stop loss, same idea, attached to the bottom line, and then we'll add an extra rule that involves the super trend, which is pretty cool.
Okay. I just want to pipe in real quick, like the emphasis here is not very many systems that I've seen out there will actually kind of manipulate the profit target as well. And that's more than possible with our software. In fact, you can also manipulate the entry too. So if you had a limit entry, you can have it jump up and down, follow an indicator, do all sorts of arbitrary stuff, much like a discretionary trader would.
Exactly, and that's a really fun part of my job is I do demo sessions with brand new like trial users, the people who are trying to figure out if this is right for them, and it's exposed me to some really creative ideas that people do with like, hey, I just want to trail my limit entry down. Actually, like the last guy that was presenting, he had that was pretty cool where he was trailing the limit entry down based on the range of the bar. That is the sort of thing that you can pre-plan in Blackbird and say, this is how I'm going to do it when we enter the trade. Do it for me, right? So it's really cool what you can do. Okay, so let's set that up. Profit target first. These are presets just to speed things up for you, but I'll just do a custom here. And there's 2 parts to it. So we're going to set the initial placement, where it starts, and then later on we're going to get to my favorite part of Blackbird, which is the trailing action rules. So the initial placement. Now, normally, oftentimes you would just set, hey, set it to 10 ticks above price, and that's where the profit target would be. So if that's all you're doing, when you first look at this screen, you might be thinking, why is this so complicated? There's a lot going on in here if I just want to set it to 10 ticks, right? But that's because it does allow you to get a lot more creative with it. For example, setting it to an indicator. So let's go indicator. Now, it looks like I already did this earlier, so it remembered. But yeah, you'd select the Bollinger Band. I set it to 4, which is what matches what's on the chart. Got to make sure it matches what I have. And then we just choose
I just want to mention those you can actually see all the indicators. You just got to filter there so that
So these are all the and that's one thing, some people are concerned like, hey, does it work with third-party indicators? It does. And actually the super trend is a third-party indicator. As long as it's coded reasonably well, we can definitely grab onto its outputs and work with it. Yeah. So since we're working with a profit target, we got to set it to, for a long trade, the upper band. And if we were doing shorts, we would set it mirror reversed for the lower band. Okay, cool. And that's all there is to it for the initial placement. We'll get into trailing actions in a second here. Let's do the exact same thing for the stop loss. So we'll go in, get it on the lower band, and then we're going to test it out, make sure it actually is where I want it to be. All right, and we'll just swap that out. So stop loss lower band, and we are good to go. Now, before we get into the really fun stuff, let me save our work. I want to show you the way that I validate this because, user error, especially with me, is easy to do if you're not paying attention. So it's always good to validate as you go. Make sure that each piece of the pie that you've set up is set up right. So we have this nice dynamic planner feature down here. So if I click plan long or plan short, it's going to tell me where my orders will start or would start if I were to enter right now. So this is my quick and dirty way to say, yes, I set up the initial placements correctly at the appropriate indicator levels. And as a side note, this is also pretty cool. It's intended for discretionary traders. You know, even if you're doing automatic, let's say you see this opportunity and you say, you know what, I want to jump in now, you know, despite not getting a signal. No problem, you can plan it, and then you can say, you know what, I like this, but I'm going to tighten my stop loss. I don't like it quite that much, so let's bring that up. And then if I were to hit execute, it would enter the trade according to that adjustment. So it's sort of changing your plans on the fly without having to go in and like modify your whole plan. So it's a nice discretionary tool. Cool. So we've confirmed that's working. Now we get to go cooking with the trailing actions. Okay. So profit target, that's an easy one. Just follow the Bollinger. So let's do that. Go trailing actions, set up a custom rule. So the way this works is when something happens, do something to my order, and then do we repeat that action? Okay. We're going to get into triggers in a minute. It's a lot of really cool stuff you can listen for, but we don't need that to just basically attach our profit target to the indicator. So I'm going to go do that. We'll go, I did super trend earlier. Let's do Bollinger. Double click and make sure it matches what's on the chart. And again, it's the upper band. So for a long trade, I wanted to follow the upper band, and let's mirror it for the short. And then we just repeat that action. So repeat indefinitely every one bar. So every bar, as it goes forward, it's going to evaluate and say, okay, let's move it up or down to follow the Bollinger. And that's it. That profit target is ready to go. Let's sort of mimic that for the stop loss and then add our trigger rule as well, because I've got an idea to expand on this beyond just what we've talked about. So we'll do the Bollinger first. Bollinger, swap it so it's on the lower band since it's the stop loss, and repeat that every bar. Okay, so they'll follow those bands, but Jeremy and I were discussing ideas for expanding this to have more control over how the trade will play out. And one of those ideas that I've actually seen a lot of people do is base our action on the unrealized profit of the current trade. And so we were thinking, and found it actually works pretty well in this case, is after we've reached, and there's a lot of triggers you can listen for, but after we've reached a profit of 50 ticks, seems to work pretty well in this case, but of course testing is required to validate it, you know, more than just this one example I'm going to show you. But once we've reached at least 50 ticks in profit, move the stop loss, instead of being with the Bollinger, move it to that super trend, which that's its job, is to act as a stop loss trailer. So we will respect its intent there. So super trend, double click, and that plot is just called the stop dot. So we can follow that, well named, and then repeat that as well. And so if we take a look, I'm going to add another order set in a second, but if we take a look on how we plan this to act, and we'll see it in action in just a minute here. It's going to start, let's imagine it started here. It's going to start down here, the stop loss, and as price moves up, it's going to follow the Bollinger Band up. And then at some point, let's say price reaches a certain point where we've made 50 ticks in profit, it will then jump up and start following the super trend. Really cool. Okay, before we dive into that, one last thing that I love to do personally, and I've seen a lot of people during our demo sessions, they love this idea, is adding a runner. So a runner, if you're familiar with that term, it's basically just having an order that has no profit target or a really high profit target. The intention is so that if the price is going to go crazy, you want to try and capture that special event and take advantage of as much profit as you can out of the times the profit or the price goes way up. So we could create a new one, but let's just go ahead and copy from A. That's order set A. Now we have two contracts split up between two equal order sets. We'll delete the profit target to make it a true runner. But to make it a proper runner, like an actual, like, let's grab as much profit as we can, we need to to change, to tweak the trailing rules on our stop loss a little bit so that it's ready. It's up by the price when the price goes nuts in those special events. So let's go modify our plan in this stop loss. And instead, for our runner stop loss, instead of having it follow just the super trend, which may not take full advantage of a runner, let's modify that to do more of a fixed trail, right? So instead of that, let's go back to price. And you could just do, minus 10, so it's just following 10 ticks behind. But what I see a lot of people do is base it on the ATR. So even as you start getting more creative here, you can even set the offset based on an indicator. So you can go really deep here. So we're going to say, I already did it earlier, so it's already in here. Normally you would just see it like this and you just type in the ATR. So in case you're wondering why it's reading my mind, it's because I was practicing earlier. But there's the ATR. And we're going to set that to, let's say, a 2 times the ATR. I see a lot of people do that pretty effectively. So you're basically saying, as that runner stop loss goes up, it's following the price 2 ATRs behind it, hopefully for a nice healthy profit. Okay, so still repeating indefinitely. I think, correct me if I'm wrong, Jeremy, everything looks good. We can start playing with this.
Yeah, I think we're good.
Cool. And obviously, we're just touching on stuff. This is a short webinar, but there's lots of additional features to help maximize your profits, minimize your losses according to ideas that you have. But we don't have time to go into super deep there. So we'll save our work. Let's jump to the live, quote, live. This is a playback because it would be crazy to make you wait 3 minutes per bar to see if something happens. We'll enable auto trading. Again, we're going to ignore shorts, so we're just going to enable long trades for this. And let's just play it forward. And as you can imagine, I made sure that there was a signal coming up shortly. There we go. Okay, slow that down. Just make sure everything looks good. Yep. So we got profit target at the Bollinger, 2 stop losses at the bottom Bollinger. And as it moves up, it will follow. There you go. It moved with the Bollinger. One thing you will notice is that the stop losses are not moving down with the other Bollinger. It may seem like a bug, but if you think about it, most traders don't widen their stop losses dynamically. Now you can override that, but by default as a safety mechanism, if it's told to go down, we're not going to have the stop loss follow the Bollinger into the abyss, right? So it's just hanging out there ready to move up. Now remember, look over here, it says 43 ticks in profit we've made unrealized in this order, and there it is. So as soon as it hits 50, those 2 actions kicked into place. 1 stop loss is now following the super trend and following it up as it goes, and 1 is just hanging out 2 ATR behind the price. And hopefully that one will have lots of opportunity to follow up. Now let's go ahead and speed up. If I recall, that guy, unfortunately, did not get a great opportunity to follow up, but it's still profitable. So it's just not quite the runner, the dream runner scenario that we all hope for one day, right? So we'll go ahead and there we go. So it came down, hit our runner's stop loss, and the other stop loss has followed the super trend. Okay. Oh, that was close. Okay. Now, one thing that was kind of cool is when you're doing 2 trailing actions at the same time, by default, it's going to automatically follow the one that's closest to price. Because again, that's a common thing, right? So if you're moving your stop loss around, oftentimes you want it to be whichever action is closest to price, reducing your overall risk. Depends on how you want to trade them. So as this Bollinger creeps up above the super trend, you'll notice it's now following the Bollinger because it's closer to price. That's default behavior, but of course you can override that. Okay. And what's kind of cool about Bollinger Bands is as the fun part of the trade has ended and it's starting to consolidate and go flat, our profit and stop loss have naturally narrowed down. Hopefully we'll eke out a little bit more from our profit target, but at least our stop loss is protecting us right there. We did get a new signal from Bloodhound, so our rules lined up, but it was ignored because we're already in a long trade. And let's speed this up a little bit because we know there's probably not a whole lot left in this trade. There we go. So we hit our stop loss. And in this case, it did result in a $2,600 profit. That's 2 contracts on the CL. But it's important to emphasize, some people don't quite catch this right away, but it's really important to remember we are tool builders. We are not trade coaches. So if we're ever in like a demo or sales webinar or something and we show a profit, it can be just as valuable using these tools or any trade system tool to capture, to discover your bad ideas just as much as it is to find your good ideas, or sometimes stumble on a good idea in many cases, because a lot of this is repetition, trying things, see how they work, back test, forward test, and discover things you never realized about your system. Because in order to do it all manually, it's so slow and tedious in the way most people do it, or many people do it, that you won't have the broad view of how your system actually behaves over many, many, many iterations. So, like I mentioned, I'm the guy who does demos with trial users. So what I would recommend, we do offer a free 30-day trial because we stand behind our products. We want to make sure that if you're going to buy our stuff, that you've validated that it actually will work right for your trading behavior. So Jeremy's going to talk about support resources and the website that you go to learn more, sharkindicators.com. What you do is click on the big blue button, watch the video. It's 2 minutes. It goes into a little bit nicer detail on some of the stuff we've talked about today, so definitely watch that. And then download the trial. So you go in here, and when you check this box, that'll let you schedule time with me so we can actually dive into your specific scenario, talk about your goals, and see if these tools are actually right for you or maybe not. If they're not, I don't want you to be stuck with it, but the vast majority of people find some really creative uses for these tools. So I'm excited to work with you. So with that, I think we covered everything, right, Jeremy?
Yeah, that's great, Keith.
Cool.
Let's see if I can steal my screen back here, or steal the screen back, I should say.
That should work.
Okay, I'm not sure if I got the it looks like it's, oh, I have to change the presenter. Sorry guys, I'm a little bit, it's been a long time since I've used GoToMeeting. Yeah, and am I showing the right screen here? What
Looks
have
like
I got?
Yeah, the getting started.
Okay, good. I gotta check every time. All right, thanks. So yeah, I just want to again emphasize, like, Keith was able to build an auto trader from scratch within a couple minutes. I think 15 to 20 minutes ish. Of course, there was a lot of explanation and showing the demo, as well. It took some time, but if you were to sort of just go at it without any interruption, he could probably do it in 5 minutes. That's a hell of a lot faster than you can certainly do it when you're coding it. And really, that's the power of our software, is the ability to build stuff really quickly. That means you get to test stuff faster. That means you get to iterate quicker. It takes you less effort, less time. And if you're, if the alternative for you was actually hiring a coder, it costs you a lot less money. And really, it lets you focus on building your trade system instead of learning how to code. And really, that's where, I hope you agree with me that that's where the best use of your time is actually the trading part. So and also, if you've noticed too, everything was real time, right? He would change some of the criteria up, right, and you would see the chart instantly update. So that's incredibly fast. Like, that's faster than any coder could do it, because you'd have to compile it and then presumably debug it a little bit, and then you can finally see results. It's a fair bit of number of steps. Much quicker just doing it for the no code solution and seeing it like bounce in real time, seeing your results in real time. So if you're itching to get started, we have a couple resources to get you going. One of them is our online documentation and videos. We've got tons of that on our website. Like, we've got literally 10, 12 years of stuff. We have, how many videos do we have on YouTube?
We're creeping up on 800 videos on YouTube.
Yeah. I realize that's a lot, but we actually are in the process of doing an AI search kind of algorithm that will let people look up stuff a lot quicker. We also have unlimited email support, which is also, it's for trial users as much as it for paid customers as well. And this is also a fantastic resource. We have a live workshop. This is basically a live classroom where we have our instructor, Zach White, who's been doing it for many, many years now. And you can just basically ask a question live or submit it beforehand, and then he'll build out the system for you, build out your trade system, solve some of your problems, teach you how to use the software. And that's a free resource for both customers and trial users. It's just actually free. You can join in anytime. We also have a Discord community. Oh, by the way, yeah, again, and as I mentioned, there's actually 2 workshops that run every week, 2 workshops, Thursdays and Fridays. Discord community, that's also it's quite active. And we have private one-on-one training if that's what you'd like to do, if you want more of a customized approach. And that really is wraps up our presentation. So again, it's a 30-day free trial. It's at sharkindicators.com. I hope you'll check us out, get started. There's a lot of incredible material from there, and actually one of the most exciting things I find is customers that use it, and especially that are new, they have these incredible ideas, and it's always really exciting to see like what you guys come up with in terms of your trade systems. It's really fascinating. Sometimes you guys end up using the software in ways we never really thought was possible or even intended. So that looks like we actually finished pretty quickly here. Thinking, oh no, we have 1 more minute left. Do we? I was looking at 2 o'clock here.
Feel free to take a question.
Yeah, okay. One question there. Yeah.
I thought I'd mention though before you do, you mentioned about the 800 videos. I do like to emphasize, sometimes I'll be working with someone and I can tell they're kind of daunted. Like, I need to learn everything before I can do anything. That's the wrong approach. These tools, there's a lot here, and we have customers that have been with us for years, and they're always coming up and tinkering. So learn one thing at a time that fits what your goal is and expand on that. Just like learning anything big, it starts with 1 step. So, and we're here to help along the way.
Yeah, and I would say,
what is that Q&A question there?
Well, I would just want to mention you can do a lot with just even knowing just a small part of the software, right? So you can take your time with the more advanced features. You don't necessarily need to employ those for your trade system. Like a lot of the very common things that are done are very simple and don't require very many steps. So someone asked if you could work with the sunny bands. I'm not actually familiar with that indicator in particular, but I'll just say it does work with any indicator that's on your system with like installed in NinjaTrader, right? So you could have downloaded it off the internet. You could have got it from Futures. Sorry, it's NexusFi now, nexusfi.com, or maybe maybe you had it even custom coded. As long as it displays some plots on the chart and or communicates with data series, if you're a developer, you know what that means. Then you should be fine. You can plug that information right into our software and use it to enhance your signals or use it to base your signals off of it.
Yeah, it's like 98% or something like that of indicators work perfectly.
Yeah.
If you guys want to double check, Sunny Harris is one of our other presenters, and she made a day trading tool using Bollinger Bands and some of the other indicators to know when it's trending up, trending down, and if you search her and get back to Oscar via email or something, that could work. But I want to thank you guys for being here. Don't take this the wrong way, but you are welcome to come back in, but I am going to dismiss you after I say goodbye to you on the air,
works.
just so you can't hit the wrong button.
Put the handcuffs on me. I'm perfectly okay with that, to be honest, because I was planning on just leaving it on, and I would rather have the safest possible.
No, if you'd like to stay for the last presenter, you're welcome to rejoin, but I'm going to dismiss you and make you rejoin so you lose the privilege to end it for everybody.
That sounds good. Okay.
Jeremy,
there were a couple of remaining questions, but they're mostly like product questions. So go ahead and just shoot us an email at support, and we'll help you out.
Yeah, sales@sharkindicators.com.
Thank you for being here. Incredible presentation. Ladies and gentlemen, good news. No more expensive programmers. Now you can create your own trade signals, experiment with new ideas, and validate them with backtesting. You can literally create your own NinjaTrader system in as little as about 15 minutes with no coding required. Amazing. I have a few ideas. I talked to Joel. I'd like to talk to you guys too about automating my own system. But gentlemen, if you're looking to create and optimize your own trading system and trade management strategies without any coding necessary, Mr. Jeremy Tang and Keith Wolf of Shark Indicators have a solution for you. We've put their link in the box, and you can learn more by going to sharkindicators.com, which I'll also put in the box in a minute. Thank you guys for being here. I hope you have a great weekend. Please come back and see us again on Traders Corner.
Thank you so much.
Not a problem.
Thank you.
And I am going to go ahead and promote our last presenter. Ladies and gentlemen, our last presenter is a graduate of Syracuse University, and he's been trading the financial markets for the last 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader Self-Learning Technology is Mr. Rory Powers of Right Line Trading. Welcome to Traders Corner, Rory.
Hey, Rob, thank you so much for that great introduction. It's always a pleasure being here on Traders Corner.
You're very
I just
welcome.
want to take, oh, thanks again. I just want to take a quick second, make sure you can see my screen and hear my voice.
Loud and clear.
Okay, great, great. What a great show, man. I was listening to some of the previous presenters, and let me tell you, the Ninja Trader ecosystem is a strong one. A lot of talent. Joe Wyse, Jeremy Tang, some great products. Very exciting. And I know it's been a long presentation, and I am last. So please listen up. I've got something today that is really an exciting system, and we've been having a lot of success. We're putting a lot of resources into this new trading system, new features into the trading system that I want to go over today. My presentation today is on the AI Auto Trader, and now it has new self-learning technology. And I'm going to get into that in a little more detail in just a moment. First, let me get the CFTC out of the way. The good Lord knows we don't want the alphabets of the federal government looking or knocking on our doors. Excuse me. This presentation is for demonstration and educational purposes only. I am not a licensed financial advisor. If you're not familiar with the risk associated with trading, please consult with a licensed financial advisor. With that being said, I just want to take just a very brief moment and introduce my team. I'm part of a very educated and, in my opinion, a good-looking team. Our goal as software developers is to develop trading strategies that help predict the future direction of price. I think that's really the value of the information that we can provide, because imagine if we had a crystal ball and we knew exactly which way the market was headed, the different ways that we can leverage that information. We can really extract a lot of profit out of the markets. And our number two goal is really to build a community of traders. We've learned over the years, and we've been around going on about 14 years now, that there's power in numbers. And some of our best ideas have come from our members. And being part of a community of traders that all help and support one another along this trading journey is a really great asset to have. And most importantly, we want to do it with transparency and integrity. That's most important. And I just want to take a brief moment to introduce some of the members of my team, and then we're going to keep the ball rolling. One of the main things that distinguish us from our competitors is that we trade the right edge of the chart every morning when that opening bell rings. And we have 3 professional traders, make that 4 professional traders, who leverage our software and signals on the right edge of the chart every morning in front of a live audience, in front of our members. Our first trader that I want to introduce is Mr. Craig Emery. Craig Emery, who lives out in Sin City, Las Vegas, had bought dozens of other trading systems, had very little consistency and success, came to Right Line Trading, found a home, and Craig kind of found his groove. And now he successfully trades in our live trading room on our trading system. And that's in the futures market. We have our prop trader, Mr. David Kushner. Listen, prop trading, this is a lot of, big excitement. For $20 now, you could have $50,000 in trading funds. Trading used to be only for the rich. Well, these prop firms now have opened the doors and really let everybody jump in the game and take a shot at making some money trading. So David Kushner trades 6 funded prop accounts. He treats it as a business, and he's extremely good at it. And then we have our options traders, Mark Sachs, who is the founder of Right Line Trading. This guy is, let me tell you, super intelligent. Probably one of the most intelligent people I've ever met in my life. He has a PhD, went to the University of Pennsylvania, and he continues to contribute on the software development side, and he continues to run his options alert services. We also have professional options trader David Wyse. David Wyse is, I like to refer to him as the Pete Rose of options trading. This guy is always on base, and he's always in front of the charts. From 9 a.m. to 4:30 p.m., you'll find him right in front of those charts, and he relies 100% on technical analysis and the signals that our software provides. I call him the Pete Rose because he's always on base. He's always hitting singles, doubles, mixed in with a triple or a home run. And that's the key, to keep that equity on the rising up and keep accumulating those winners. So he does a really great job at that, trading options. Behind the scenes, we have Brock Miller. He's a college student getting his degree in computer science. We have Mr. Charles Sider. God loves Charles. He's the engineer on the team. He's a graduate of UCLA. We won't hold that against him. But he makes sure that all the I's are dotted and the T's are crossed. I assure you of that. We have Mr. Sergio Luque Rodriguez, who also has a master's in computer science. When it comes to developing software, he's as good as it gets. The team is led by Mr. Mark Miller, who has his MBA from Cal State. He's a U.S. Army veteran, and he has distilled those core military values that have found their way into every department here at Right Line Trading. That's transparency, integrity, just good old hard work. And Rob did a great job of introducing me, and I always like to put a personal slide in my presentations. I reside down in South Florida. My wife and I have 2 beautiful little girls that are both getting a year older this March. We have our 4-year-old who's soon to be 5, and our new addition is going to turn 1 on March 1st. So they'll be 5 and 1 this year. And my 5-year-old's just getting used to the 1-year-old now. She's, wondering who's this new person that's trying to play with all her toys and take the attention away from her. So it's been a little bit of a transition, but my wife and I reside in South Florida. I'm an avid saltwater fisherman, a huge Miami Dolphins fan, and my passion, of course, is trading the financial markets. So with that being said, the genesis of the AI auto trader. Listen, we've all experienced problems with consistency. I know in my trading journey, I must have quit trading 5 or 6 different times. I'd get just so, emotionally upset and frustrated that the market just didn't go the way I thought it would. And, it leads to, making bad emotional decisions trading. These impulsive decisions that we make, revenge trading. You take a loser or a couple of losers in a row, and then you want to swing for the fences. You want to make it all back before that bell rings. Those, revenge trading, or I'm guilty of squeezing my stop or exiting a trade too early. The minute I see that P&L start turning green, I get excited and I want to pull my stop up and squeeze it. I don't want to lose those profits. And listen, we've all bought indicators in the past. We listened to the presentations, and Mark Sachs used to say, I got seduced. I was seduced into buying this trading system. And we've all bought indicators or systems that just didn't work out the way we envisioned it. Maybe because they lacked price or lacked a proven trading methodology, who knows? But it all leads to the same place, that same cold, lonely place, to a blown out trading account. And it has been my team's commitment. I know my slide says my commitment, but I can't take the credit by myself. It has been our team's commitment to bring this to an end. And that was the genesis of the AI auto trading system. Because when that opening bell ring and we're staring at the right edge of that chart, we may have our own opinions or biases of which way we think it's going to go. We've listened to the talking heads. Our emails are pulled with marketing emails of which way the market's going to go. But the truth be told, we have no idea. The market really has a mind of its own. Like today, for example, with the Fed decided at 2 o'clock that they were going to leave rates alone. You know, we were all had our fingers crossed that we're going to cut those rates and the market was going to fly. But that just didn't happen. So we wait till that opening bell rings, and then based on the signals that our software provides, that's what's going to get us into a trade. So ideally, we've narrowed it down to 2 things that create trading success. Number one, you have to have the proper tool set. If you're a carpenter, you're going to a job to install a door. You're not going to show up to the job with a plunger. You're going to go with the proper tool set to get that door installed level and properly. The same holds true with trading. Listen, it's all about getting an edge over the other retail trader. That's the key. You want to arm yourself with the proper tools that are going to give you an edge against the other retail traders. You need software ideally, because this is a very news-driven, fast-moving market that can automatically get you in and out at the most opportune time. Okay, and that's really what our AI auto trader does. Let me just build a little bit of a foundation. The AI auto trader that we're offering today, that we offer, it runs on NinjaTrader 8. NinjaTrader 8, hallelujah, is a free platform. They didn't make it free until after I paid $1,500 for it. But what can I tell you? It's a free platform now. So if you're just getting into the game, if you sign up with one of the prop firms, they're going to give you the license key to Ninja. They're going to give you your live data feed, and you're going to rock and roll and trade with really no upfront out of pocket expense. If you're trading your own live money, you can download NinjaTrader's platform for free, open an account, and get at it. So NinjaTrader is a free platform. And what I'm talking about is here today are strategies that you would build right underneath your strategies tab of the NinjaTrader platform. They come in pre-formatted templates. All of the inputs are already pre-formatted, and the only thing left for you to do is to enable the strategy. You just check off the little box, and that strategy now will execute and manage the trade on your behalf. Okay? Let me go back for just a moment. So I just wanted to briefly discuss the benefits of using automated strategy. Number one, it's going to eliminate human emotion. Trying to trade a fast-moving market and making a number of different calculations can be very difficult. It removes those emotional trading errors that I've mentioned earlier. Plus, I've talking over the years, including myself, sometimes we fumble and bumble on the NinjaTrader platform. We may be familiar with it, or who knows, maybe we're brand new to it. But in a fast moving market, trying to set your trade and your stop and your profit target and get in and get out, and sometimes we just make mistakes. We click the wrong buttons. Listen, it happens. All of that goes by the wayside with this automation. In fact, the system is going to place the profit targets and your stop at optimized locations. And how we optimize it, I'm going to go into briefly in just a few moments. So at the end of the day, there's no more cutting winners short, and there's no more mismanaging your trades or even over trading. Okay. So those are some of the benefits that go with the AI auto trader. Now, I just want to take just a brief moment just to go over some of the strategies that are part of we have a very diversified portfolio of strategies. And I wanted to go over just a couple of them with you. The first one is our retirement plan, which trades the NASDAQ on a 2-minute data series. It trades the NASDAQ on a 2-minute data series. And what it looks at in order to enter a trade is it looks at the VWAP, it looks at momentum, market internals. And when all of the conditions are met, the system is going to execute the trade on your behalf. Now, this particular strategy, the retirement plan, is risking 46 ticks. We start with a 1-contract strategy. I always get the question, can I trade it on the micros? Yes. You could trade it on the micros, you could trade it on the E-minis, but you got to trade it on a Ninja Trader. Okay, Ninja Trader. Now, this strategy risks 46 ticks, and it goes for a 180 tick profit target, 180. So we're looking at about a 4-to-1 risk to reward ratio. Our stop is going to go to break even at about, I believe it's 60 or 80 ticks, and it's going to take all the risk out of the trade and all the risk off the board, and you'll be in the trade looking for a gain of 180 ticks. And on the NASDAQ, 180 ticks is going to be $900. So we're risking about 230 to make 900. We do have a proprietary trailing stop, which is a momentum-based stop. So if it doesn't quite get to 180 ticks, you're not going to give back all of those profits that were on the table. And just to give you an idea of some of the performance, from December 18th to January 23rd, trading this one strategy alone, it made $1,563. Then we have the Haymaker. The Haymaker is our strategy that runs on a 30 range, and it also runs on the NASDAQ. And it also has a 1-contract strategy that we start with. And people always ask me, hey, I see you're risking 1 contract. What if I want to trade 2 or 3 or 4? And remember, I'm not a licensed trade advisor, but what I always recommend, or what I always suggest, is once you build up some equity and you have some of their money in your account and you're no longer risking your own capital, then you may want to consider scaling up. Instead of trading just 1 contract or 1 micro, maybe you go to 2 and eventually 3. So you have the ability to always scale up and increase your lot size. So the Haymaker also trades a 4-to-1 risk to reward ratio. We're risking 40 ticks to win 200. And man, is that an exciting system. We're running a closed loop system, and I'm going to talk a little bit more about this in just a few minutes, that finds the optimal trade management strategy. So, and it's an integral component of our self-learning component of this software that I want to talk more about in just a few moments. But the Haymaker is a really exciting strategy. In fact, I did a replay of one of the trades that it took. Let me see if I could show it. This was from last Friday. You could see it entered the trade. up here, and it took a short position. It entered the trade because the RSI line broke through the 80 line. And that's a very good assessment of momentum. Momentum shift, it kind of called the top, and it jumped into this trade to the short side. So the profit target was at 200 ticks. And we risked, I think, about 20 or 25 on the trade. So this strategy last week had a winning percentage of 50%. So even with a winning percentage of 50%, the strategy made about 25, almost $3,000 last week, trading this ATM with a 4-to-1 risk to reward ATM strategy. So I don't want to take a lot of time watching this trade, but you can also see on the right, we've set up a strategy on ultra bonds that I'll show you in just a few minutes. And that the ultra bonds is $31.25 a tick. So, going for a very a very reasonable first target, I think it's 6 ticks. That's going to lock in $180 on just 6 ticks on that ultra bonds. So this trade that I'm showing now is going to come down and hit this profit target for a full winner. So it's a very exciting trade, and it really illustrates that haymaker strategy very well. It really gets in at the very beginning of the move, and with the NASDAQ, it's so volatile. The range, we have a lot of room to really make a lot of money on those trades. And listen, as futures traders, we all know that one of the biggest, setbacks is our risk to reward. We'll take 2 or 3 winners, we're feeling great, and then all of a sudden we'll take a loser and it wipes out all of the profits that we made on those 2 or 3 winning trades. And a lot of that is due to those emotional errors. We cut our winners short, and the risk to reward gets so lopsided that we just can't get ahead. So I wanted to say congratulations. We have a member of our trading community, Leon. I call him the old truck driver out in Massachusetts. He was trading the haymaker on his Apex account, made $3,000 on, I think it was 2 or 3 trades, and passed his evaluation in one day. And that was trading that haymaker strategy. And he's really a great guy, and I wish him much success. So from January 9th to January 23rd, that strategy was up about $3,764. And then the next strategy I wanted to highlight is really the hottest one that we have. It trades on oil, crude oil. We refer to it as our black gold strategy. The crude oil strategy, right now they're having some political unrest out in the Red Sea. They have, the tankers, the oil tankers, the cargo ship, they're being attacked. And a lot of them are having to reroute, and it's, kind of messing up the supply chain a little bit. But what another effect of that unrest is it's causing some volatility in the crude oil market. So crude oil, this system really thrives on that volatility. And you could see my chart, these little triangles that you see on my chart. What that is that's our market internals. That's telling you there's a disparity between uptick and downtick. And institutional players are driving the price of crude higher in this example. And that's one of the conditions that our system looks at in order to take a trade. It's also looking at a multi-time frame assessment of trend. It's creating a 15 range chart, but it's excuse me, it's also looking at 2 higher time frame, and that's the background color that you see in my chart. Statistically, we found that when the higher time frame trends are in alignment with the time frame that we're trading on our chart, our success rate goes way up. It's like when you're taking an entry on a 5-minute chart, you might look at a 60-minute chart to see the overall trends. And usually when they're in alignment, we feel comfortable about taking that entry on a 5-minute chart because our 60-minute chart lines up. Well, this kind of does it all on one screen, where we get a multi-time frame alignment of trend. And that's one of the conditions of our system taking a trade. So we've really been doing, phenomenal. It came out in January doing like gangbusters on crude oil. I can bring up a current trade performance on crude oil for the month. It made just under $4,000. The max drawdown was $900. So if you are a prop trader, even if you trade your own live account, I know from experience, nobody likes drawdowns, including me. We go to sleep a little upset at night when we go to sleep and we know we had that red day. So this one only 900 in total drawdown, and we went on to make almost $4,000 from January 1st to January 30th. Okay, if we look at the equity curve, look at that beautiful equity curve for the month for crude oil. It's a beautiful equity curve, and we're hoping that continues just the way it's been. So crude oil right now, I would say, is our hottest strategy. Jay had said that we only see the YouTube screen. Are you seeing the wrong screen now? Oh, I'm sorry. Okay. Let me show my screen. Okay. Are you able to see my screen now? Okay. Thank you. So January 2nd to January 23rd, it made over 4,300, about exactly $4,379. And that was on crude oil. So what I wanted to talk about was our advanced machine learning algorithm. Why are these strategies having so much success? Well, what we did was we collaborated with an AI lab, a very prestigious AI development lab. And what they've done is they've developed with our team. Let me make sure I'm projecting the right screen here. Yeah. Okay. And we've collaborated with this AI development lab, and we've developed a closed loop system that gathers data from previous trades, and it provides us with the ability to constantly optimize our input. And based on market conditions, dynamically, it's going to change the settings of our strategy parameters, which is really a huge breakthrough. Really, the biggest knock on automated systems, and I've bought others, over the years. And what happens is, at first they might work really well, and maybe for the first week or the month they do well. But what happens is they very quickly become stale, and market conditions change, and they just don't work anymore. They're very inconsistent, which is very frustrating. Well, this advanced machine learning algorithm that continuously optimizes the stops and targets based on market conditions has really put an end to that inconsistency. Let me show you how it works. Each one of our strategies is going to run with what we call a drone strategy. We have the active strategy, and we pair it with a drone strategy that has a huge stop and a huge profit target. And when it executes a trade, it's going to save that data in the database. It's going to look what was the maximum forward excursion and how much heated did it take on the trade. And it's going to feed all of that data into the database that both the active strategy and the drone strategy are sharing that same database. and it continues to go around in a circle. And what it does is it provides that active strategy with data that will optimize the settings of our stop and profit target. So if we're in a ranging or a choppy market, like historically when Jerome Powell is, they're doing the FOMC release, the market's very choppy prior to that. Prior to 2 o'clock today, it was very choppy. And then once the news comes out, then it becomes very volatile. Today it took off to the upside, and then at last I looked, it was retracing back down. So what this closed loop system does is it continuously optimizes the inputs based on the current market conditions. So what are the benefits of having that? Obviously, the ability to adapt to a changing market. As we accumulate more data, the model actually learns, they call it pattern recognition. It starts learning a bias and set different patterns. And what this leads to is a more accurate output. It improves accuracy tremendously. And ultimately, it lowers the risk so you don't lose as much money. So that's the benefits of having this self-learning technology integrated into our trading system. So the offer that I'm going to make, and we're starting something new that I wanted to also show you guys. We're very excited about it, but please don't be overwhelmed by the technical side of this. We have, 2 guys with master's degrees that are IT tech. I help them out if they get busy, only because I've been with Right Line Trading for so long. I've learned it, so I know how to use our system and load it onto NinjaTrader. So there's 3 of us that are going to do a remote support session. We're going to get on your computer and we're going to install everything for you, the entire workspace, all of the strategies, all of the chart templates, and we're going to save your workspace. So really the only thing left to do is going to be to enable or check off that box that I showed in the very beginning of my presentation. So unlimited VIP support. We're also including a 2-module masterclass on how to build your own automated strategy, your own ATM machine, where we have a very comprehensive video that breaks down each one of the parameters of the strategy and lets you know exactly what it's looking at. There's so much of it that I haven't covered here that we have a lot of members that like to get under the hood. They like to learn how each thing works. They like to tinker around. And then we have the other half of our traders who just want to load it and trade it. They don't really care for that. But if you're one of those people that likes to get under the hood and learn how it works and build your own, we've put together a masterclass modules 1 and 2 that are extremely comprehensive. So the special offer, before I get to the special offer, well, I guess it's too late now. The pricing that we're offering, we've extended our 50% discount. And let me just explain what it includes. The special offer is going to include both the discretionary and the automated trading systems. What I mean by that is we're including the chart that provides you with the signals for entry. I was going to show you Ultra Bonds. So this chart that you see on Ultra Bonds that provides you with the signals for entries, this would be part of the system. You would get all of the chart templates for all of our strategies. So if some of our traders like to trade it on a discretionary basis, if you're one of them and you see this cross come out, if your strategy is enabled, this cross means all of the conditions have been met and it's going to trigger a trade if your strategy is enabled. If your strategy is not enabled, it'll shoot out one of these crosses. And that means that, hey, everything's lined up perfectly. Our software has defined this as being consisting of the lowest amount of risk to enter a trade and that's when you would pull the trigger. We also share with you our ATM strategies that you can load in, and it has the predefined stops and profit targets. That's what I mean by the discretionary component. So the discretionary component is included along with all of the automated strategies. We're including all markets, all updates. Listen, we're coming out this collaboration with the AI lab. This is ongoing. The company is pouring a lot of resources into continuously strengthening this trading system. The self-learning model, as we accumulate more data, it as I mentioned earlier, creates the pattern recognition. And over time, the model becomes more and more powerful at predicting the right output. So this is something that the company is pouring a lot of resources in because it's the future. So right now, you can get everything: the Discord chat group, all additional markets, installation and support, and all of the future updates. On a monthly basis, it's $4.99 a month. If you use coupon code SAVE $200. Normally, it's $6.99 a month. With that coupon code, it brings it down to $4.99 a month. I've heard traders on the phone, they'll say, "Hey, that sounds like a lot of money." But listen, that old truck driver out in Massachusetts who made $3,000 in one day, that $4.99 a month was well worth it. Now, our quarterly deal is kind of buy two, get one free. If you buy two monthlies, you get the third month free. So normally the quarterly is $14.99. With this special offer, use discount code SAVE $500, and it's $9.99 for the quarter. Our best value is going to be the annual membership. The annual membership is normally $33.99. Right now, with coupon code SAVE 50%, you're going to save half off of that annual membership. And just to give you an idea of what that breaks down to per month, is if I take that, let me bring up my my little cheater here, my calculator. If we divide the $16.99 by 12 months, for $141 a month, it breaks down to $141 a month, about $140 a month. You'll have the AI auto and everything for the entire year. So listen, I'm not just saying it because I think it's the most expensive one. It's the best value. It's going to give you the most for your money, the most bang for your buck. So I think the slide that I wanted to show you is coming. What I wanted to show you is two things: our Discord chat group, and we're starting a brand new YouTube Live. And more about the YouTube Live in just a moment. I said in the very beginning of my presentation that it's always great to be part of a community of traders, that there's power in numbers. Well, we have a phenomenal Discord chat group for our community of traders where they can all collaborate. They could share what's working. Sometimes, more importantly, they'll share what's not working, so you don't step on a landmine. So in this AI Auto Trader Discord group, we have our general chat channel. We have our resources channel, where we have a ton of different training tutorials and videos, information about our system, problems and solutions. God forbid you're having a tech issue. You've got Charlie there that's, this guy's on point. He'll be on your screen in 5 minutes flat if you post a message there. Improvement ideas, technical trade talk, and then we have our Hall of Fame and our strategy optimization channel, where we have our bullpen strategies. As a community, we have contributors that build their own strategies. If they find one that's working well, they share it with the community, and it's always great. We found our golden goose there from one of our members. So you will be part of a great community of traders in our Discord chat group. where we post a weekly performance of each of the strategies as well. Now, this is what I was looking for. We're going to be starting very exciting. We always have members that like to be part of the live trading atmosphere. They want to be in a room and see the charts and see the trades and ask questions and have that support while they're running their strategies and have insights of the market, which strategies are in real time performing the best. In real time, which ones are performing the best. And we're going to be streaming on YouTube. If you're a member with us, you're going to have first access to this before anybody else does. And then we may go ahead and live stream it to the public. But at first, it's going to be for members only. And it's going to be our AI Auto channel on YouTube. And it's going to be running a number of different strategies in real time and showing the result. So let me just see if real quickly. Yes, you can trade it on micros and prop accounts. So with that being said, if you wanted to place your order, you could very simply go to our website. It's at rightlinetrading.com. Brock has also put the link in the chat box. And if I scroll to trading systems, right here at the AI Auto Trader, I would come to our page where we have a number of different videos, and you would be able to check out using this button right here. You can click on that, and you can apply the coupon code. It's let me see if it's already applied. It's already been applied. If it hasn't already been applied, you can put it in here. It's save 50% and apply the coupon, and it's going to take half off of your order. Once you proceed with the checkout process, it's going to roll over and instantly deliver you the trading system. Okay. The coupon codes end on Friday. We want to get this up and running on your computer before the weekend. We want you in. We want to get you rolling today if possible. If not today, tomorrow. And we want to get everything up and running so you're going to be in the game starting on Monday. So that will instantly deliver the system. You'll be able to log into our members area where you'll be able to manage your subscription. You'll have access to the tutorials and the trading system. So that's really just about everything that I wanted to go over today. If you're one of those people that just doesn't like subscriptions, we are offering a lifetime membership to the AI Auto, where you'll always get the newest strategies for a lifetime. It's a one-time price, and you own it forever. We're also running a discount on the lifetime option. Save 50%. It's going from $79.98 to $39.99, and you'll own it on a lifetime. Okay, so I wanted to thank everybody for their time. I know it's been a long presentation. My time is right at about 4:32. So I just wanted to say thank you to everybody. It's really I really want to encourage you. I think this auto trader is going to be a game changer on your trading journey, and I hope that you'll take advantage of this special offer. Thank you so much for your time, and I wish you all the most success in your trading journey.
Thank you so much, Rory. Those strategies look amazing. I've been hearing that your automated strategy's been crushing it lately. Congratulations to you and the team over at Rightline for the new self-learning technology. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, or blowing up your live or prop trading accounts, Mr. Powers over at Rightline Trading has a solution for you. You can learn more by clicking one of the links in the chat box. Thank you again, Rory, for making such a generous offer to our audience today. I hope you and your family have a great weekend.
Thank you, Rob.
You're welcome. Ladies and gentlemen, that'll conclude our online trading summit for this month. The staff over at Traders Corner wants to thank all of you for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of your week and weekend. The replay will be available on the YouTube channel. I'll put a link in the chat box shortly. Everyone have a nice evening, a nice weekend, a nice everything. Thank you for being here. God bless.